going to pick up from those changes and have to decide what he's going to do about it.
He's been particularly critical of the fact that this Treasury Secretary, Janet Yellen, has focused on issuing short-term paper. The expectation that long-term rates were going to come down pretty dramatically, that this was a very short-term, dare I say, transitory inflation and bump in rates, that has proven to be less so the case. And so now the question is, do you term it out, especially with a steeper yield curve? And that is what a lot of people are really questioning.
This morning, bond yields are lower across the curve. Coming up this hour, over the next 60 minutes, we'll catch up with David Bianco of DWS, with stocks on a 5-day winning streak, about to become day 6. We'll speak to Henrietta Trays of Veda Partners on Trump's Treasury Secretary pick, Scott Besson, and Clint Henderson from the Points Guy, as millions of Americans prepare for Thanksgiving travel. We begin this hour with stocks higher and bond yields lower as markets applaud President-elect Donald Trump's Treasury pick, Scott Besson, widely hailed as a stabilizing force for both markets and the economy. David Bianco of DWS looking ahead to next year and writing this line: while a recession is not the base case, risks of overheating and macroeconomic uncertainty remain. David joins us now for more. David, good morning.
Good morning.
Let's talk about that risk of overheating. How very real is that risk for next year?
Well, the economy likely stays strong. I don't think it accelerates because things have been good, and it probably stays at about 2.5% GDP growth. It's inflation being sticky, particularly because of services. That's a risk. So that's perhaps an overheating risk. The other thing is excessive fiscal spending. Now, that's why with Besson, markets, not just markets, the equity side has been very excited about Trump ever since the win, but this is good news for the bond market. The Secretary of Treasury to come is concerned about the deficit, so that's welcome news. And the message of 333, that's good messaging so far.
So let's get to the 333. 3% growth, right. 3% deficit, and I think also it's 3 million barrels a day right. of oil equivalents, not just oil equivalents, and I think that's a really important point. Do you think that can be met? Do you think that can be achieved?
Right, so 3% real GDP growth is within reach for the U.S. economy with the right balance of things like tariffs versus deregulation and lower taxes. 3 million barrels over a few years' time, additional to the about 14 million. I would argue that's well within reach, but that would hurt profits, but it's within reach. Now, the 3% deficit, that's out of reach. But I'm glad he's reaching for it and pointing to it, and I think the bond market's excited to hear Secretary of Treasury being concerned about these deficits.
How do you translate ideas and a muddied set of signals from some of the cabinet members who have gotten selected? Scott Besson catering to the market-friendly crowd, others catering to the vaccine skeptic crowd, others possibly talking about ripping up the Justice Department. How do you put this together to understand whether you need to change your forecast for next year, whether Washington is just going to basically tamp down any extremes and keep things the way they are?
Well, it's still early on. We're still learning so much about these policies, but I'm a markets guy. Besson's a markets person, so we're feeling good today. But this is an environment where who's to say where these policies are going to go and the right mix and balance of them and how other countries in the world respond to our policies, particularly things like tariffs. It's still a risky geopolitical world, so on one hand, oil prices might go down because of domestic supply, but that's still under geopolitical threat. So our forecasts need to be flexible, and markets are likely going to be volatile over the coming year, but probably still upward.
Was this Treasury Secretary pick, though, really crucial when it comes to pinning the Treasury market in particular, sort of pinning bond yields with somebody at the helm who is going to be very trained on what exactly the markets say?
Well, the candidates were all good candidates. So, I don't think there was alarm in this area, but I do think that this is a selection that people like myself say, this makes sense. This is a thoughtful person and experience with markets. And one of the things that Secretary of Treasury does is help deal with problems, particularly problems in markets, problems with funding. Keeping confidence in the U.S. bond market is an important thing. So right person for the job.
He's been very critical of Secretary Yellen in terms of when it comes to the front end and these bond auctions. Do you think he will push that out to longer dated debt?
If you go back a couple of years ago, a few years ago, when 10-year Treasury yields were where they were, 1%, everybody has to wonder, why didn't you take more advantage of that? Why didn't you do what mortgage borrowers did? But that's hindsight, and from here, I think the key is making sure that efforts are made to bring the deficit down. It'll probably be 7 to 8% next year, but bring it down. I think of the deficit as almost like a very high PE multiple on a stock. And the only way to keep markets calm about that is deliver growth. So that's why I think delivering growth in that 3% on real GDP growth is also an important part of that three-point strategy.
That three-point strategy, though, and you said that the one thing you don't think he's going to be able to accomplish is cutting the deficit by 3%. But he says by
Down to 3%.
Yeah, by 2028, though, if you were to get a deficit reduction by 2 to 3%, how long do you think it would take?
To get the deficit all the way down to 3% under the entitlements that we have, it's very unlikely. But let's...
Ever.
It's unlikely, in my view. If it's achieved over a handful of years or within the next 4 years,
David, what's
Destin and Hamilton will go down in history as great Secretary of Treasury.
This administration's running 7% deficits at a time when unemployment's close to 4 and GDP is really robust. The idea that we can get down to 3 anytime soon is a worthy goal. But is it achievable?
Yeah, well, and this is a reason why people are skeptical of it. Whether someone's going to actually try to achieve it is also another question. What is your most contrarian call going into next year, given that a lot of the goals to reduce the deficit and also to keep growth at 3% seem unattainable?
Yeah, being contrarian or even being skeptical has not been very useful the past few years. So what I look for are where are good fundamentals still at a price that I won't bicker with. And I would say for the coming year that's still financials. I wouldn't bicker with those valuations, particularly for big banks. Healthcare is an area that I think has still been overlooked for a long time because of so much excitement in technology and digital, but very good earnings growth there. Great long-term prospects, intangible assets, innovation, very undemanding valuation. So healthcare, financials, and capital goods companies, that's what I like. So one of the things is that more oil, perhaps lower oil prices, but it's good for everything combustion, whether it's oil services or oil refiners, but also diesel engines, natural gas turbines, and jet engines, things like that.
Healthcare stocks have actually been down since the election because of some of the picks and some of the questions around how these departments are going to be overhauled. Do you lean into that at all, or do you basically see it as an opportunity?
We see it as an opportunity. I mean, the healthcare sector has generated really good earnings growth through bigger challenges than this, including already the negotiated drug prices. Now, we know that with a Republican sweep, they'll probably make some changes to some of these policies, but healthcare spending's going up, and the innovation that we see at most medicine makers and even medical device makers, we're encouraged with that, and the valuations are undemanding.
Hey, David, it's good to see you, and see you in person as well. Thank you. David Bianco there of DWS. Slightly distracted around the table in the last few moments from Macy's numbers. The numbers themselves, absolute snooze relative to the headline elsewhere. Allow me to share this quote with you that comes from the company this morning. The company identified that a single employee with responsibility for small package delivery expense accounting intentionally made erroneous accounting entries to hide approximately $132 to $154 million of cumulative delivery expenses from the fourth quarter of 2021 through fiscal quarter ending November 2nd, 2024. Needless to say, there is another line here. The individual who engaged in this conduct is no longer employed by the company. Shocking.
It is shocking. It's the reason why they're delaying their third quarter earnings call until they finish the independent investigation, the internal investigation of what happened. To put this into perspective, Macy's recognized about $4.36 billion of delivery expenses. So this isn't necessarily accounting for a significant portion necessarily, but it isn't necessarily small. And it raises a lot of questions about why someone would intentionally hide more than $100 million of delivery. I mean, it raises, what are delivery expenses? Is it basically when you ship and get a return? Are they taking it? A lot of questions here.
I think we've got a ton of questions and not many answers at the moment. I can tell you what the stock is doing. Macy's is lower by a little more than 2%. Any more headlines on that, we'll share them with you. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg brief. A DHL cargo plane flying from Germany to Lithuania crashing close to Vilnius Airport. Police reporting one crew member was killed and 3 others were injured. The Boeing 737-400 was attempting an emergency landing when it crashed. An investigation is underway to determine the cause. Goldman Sachs is eyeing a year-end rally in the S&P 500. Managing trader Scott Rubner saying the index could hit 6,200 by the end of the year, with euphoria accelerating across equities and crypto. Rubner also pointing to increasing demand for buybacks and other typical year-end trends. And finally, according to AAA, a record-breaking 80 million people will be traveling for Thanksgiving this year. Lower gas prices may influence Americans to hit the road. The national average hitting 3.06 a gallon as of yesterday, and it could fall below $3 by Thanksgiving. That would be good news.
Yeah, although I have to say, I'm Googling right now, worst Thanksgiving travel days. I'm trying to figure out when to drive. It's sort of this art, you know, when
Isn't
to
it
figure
Thursday
out.
morning? I thought Thursday morning is the best time to go.
I don't know. Is that really what you, okay, is that your prescription? You're going to tell
I've
everybody?
done a Thursday morning flight before.
You think flights are good then?
That was a good flight.
Okay.
Super
Fantastic.
quiet.
So Wednesday,
airport.
terrible. Don't do it.
I don't think I've ever done a Wednesday.
I have.
Done a
That's
Wednesday
awful.
before?
Okay, all right. I just am trying to game it out. But what about from driving? Do some research.
I can do some research for you.
Thank
In a
you, I
commercial break.
appreciate it.
I would imagine Thursday mornings are pretty decent.
All right, okay, good.
For what
All
it's
right,
worth.
I'll check it out.
Up next on a program, a safe pair of hands.
It's not a bad news scenario, definitely, because with Trump's appointments, it could have been somebody who was very pro-tariffs, very much cutting taxes, but no offsetting fiscal discipline. Those were the worries that Wall Street had.
That conversation up next. Live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Live from New York City, welcome to the program. Equity futures on the S&P 500 firmer here by 0.5%. A rally in the bond market, yields lower by 3 or 4 basis points. Let's see if this sticks. 436.49. Under surveillance this morning, a safe pair of hands.
It's not a bad news scenario, definitely, because with Trump's appointments, it could have been somebody who was very pro-tariffs, very much cutting taxes, but no offsetting fiscal discipline. Those were the worries that Wall Street had. Based on what we know so far, I think that does alleviate some of those concerns.
So here's the latest this morning. Traders embracing money manager Scott Bessent as Donald Trump's next Treasury Secretary, widely considered to be a safe pair of hands who will prioritize economic and market stability. Henrietta Trey's Aveda Partners looking for Republicans to hit the ground running. As early as January 3rd, investors could learn the deficit appetite of the Republican Party as it prepares to write a massive tax bill to stave off tax hikes on January 1, 2026. In our view, this is the single most important variable in the 2025 tax debate. Henrietta joins us now for more. Henrietta, welcome to the program. Let's talk about that date, January 3rd. Why January 3rd?
Well, January 3rd is when the next Congress is sworn in. So we'll have all the new members seated. We'll elect a speaker formally in the House. And you can get ready to get down to work with the Budget Committee members and the Senate Finance and House Ways and Means Committee members and start the process of legislating. The first step is the budget, and they can start that as early as January 3rd, and that budget will include the deficit authorization that they're willing to swallow going into next year in the tax bill.
How much do you think that this debt ceiling fight is really going to be a nothing burger this year around, because we have Congress and the executive branch all withheld by GOP hands?
Right. Historically, it's a big problem for Republicans to provide the votes on the debt ceiling, specifically in the House, but there are also a number of Senate Republicans who do not vote to increase the debt ceiling. So this is actually a tricky issue. I think the path of difficulty, but least amount of Democratic incurred pain from the Democratic Party is going to be if they include this in a reconciliation bill to pass the tax cut extension along with the debt ceiling at the same time. You all know that you can do a debt ceiling increase with only 51 votes in the Senate if you attach it to that reconciliation package. So this also has the other political benefit of needing to be done by roughly July. That's the current estimate. If they can get through tax day in April, they'll be able to have functionality under extraordinary measures at the Treasury Department through July. And that is, 6 or 7 months before I expect the tax bill to pass, which would otherwise be December. So the debt ceiling actually serves to potentially pull the tax bill forward to July instead of December.
This is really interesting, because as you're talking, you're saying that they're going to actually loop all of this in together. I'm thinking to myself, well, Treasury only has a certain amount of months where they're going to be able to pay America's bills. That means we could potentially see a tax cut, the extension of TCJA, much sooner than people were expecting. What do you think gets in? Because Donald Trump proposed a ton of tax cuts, and obviously not all of them are going to become policy.
Yeah, this is where I really want to see what Scott Bessent does at Treasury. It's easy to think of the Republicans controlling everything, but next year it's really very much going to be the White House versus the House versus the Senate. And Scott Bessent is going to be responsible for trying to drive some of the president's tax agenda, which includes things like eliminating taxes on tips or Social Security. That Social Security component costs $1.8 trillion. So adding that onto the bill at Trump's request is going to make the deficit appetite have to expand in Congress, or it's going to increase the scale of the bill from $4.6 trillion to over $6 trillion. So I really am interested to see what the Treasury Secretary does in terms of prioritizing some of the things that Trump wants in this reconciliation bill that House members have no interest in and Senate members have no interest in.
We always say that personnel is policy, and we finally got the key personnel decision of who's going to run Treasury. With that in mind, how do you see the sequencing of tax cuts versus, say, tariffs?
The tariffs have to come first, not only because the tax bill is going to take all year to write. It's going to be incredibly difficult to get this over the finish line, whether or not they include the debt ceiling. And those fights will start on January 3rd. But I think there's this false impression that somehow this is going to be easy. The tariffs are going to be run by either a trade czar at the White House, USTR, or the Department of Commerce, or a combination of all of those pieces. And the tariffs can start immediately. My expectation is right out of the gate, they labeled China in violation of the Phase 1 trade agreement. And that kicks off a process that roughly by April 6th versus, according to my calculation of the enforcement mechanism in the Phase 1 trade deal, you start to see tariffs increase April, May, June, that time present.
Henrietta, we're talking about how the Republican Congress is going to potentially push back against some of Trump's policies. We've seen some of the picks really vetted pretty significantly. Matt Gaetz dropped out in part due to opposition from a key number of senators who are Republicans. How much does this indicate that this Republican Senate in particular is not going to just give a blank check to Donald Trump?
I think that's a great point. And the whip list is growing expansively. So members who are opposed to the tariffs, there's at least 5 to 10 who are willing to come out publicly and say, in my home states of the Dakotas or Iowa, Kevin Cramer, Rand Paul is permanently sort of against tariffs, who are coming out and saying that not on my watch. Then there are others that are incoming senators. I think John Curtis is really interesting to watch, a new senator from Utah, to see how he responds to some of these picks. Members who are up in 2026, Tom Tillis in North Carolina is going to have the most expensive Senate race in the country in 2026 and already is preparing for both a general and a primary campaign. And then you have Susan Collins in Maine, who I think is a distinct possibility could retire, and that would put her, or announce her retirement, and that could put her into a much more Kyrsten Sinema, Joe Manchin-esque place in next cycle.
Henrietta, given all of this, how much are they going to push back against some of these cabinet picks, especially some of the more controversial ones?
Well, I think they're trying to do that preemptively now. Matt Gaetz lasted, less than one Scaramucci is the way that we're saying it in DC. So that kind of thing is happening preemptively. Whether that exists for RFK Jr. or Tulsi Gabbard or Hegseth. I think there are a lot of members that they're already raising issues with. And all this information is going to come out in the Senate confirmation hearing process. And the more controversial there are, the more it eats into Trump's agenda and day one initiatives and drags out things like the tax bill.
How long will confirmations take? Who do you think will be in place day one?
You usually do the big ones first. So defense, state, treasury, those ones will be done by the end of January. I suspect the president will be inaugurated on the 20th. Some of these names have been inaugurated sworn in by the 26th, for example. So a couple of those will move quickly and the rest will take the remainder of first quarter.
I'd love to just briefly get your thoughts about the one position that is key to Donald Trump's economic promises, but we don't have a name yet, and that's USTR. What's going on with Ambassador Lighthizer?
Yeah, I think if Ambassador Lighthizer were to come back at USTR, that's obviously a lateral move. That's where he was last time. I wouldn't be surprised if either his chief of staff or general counsel took over that role. I'm still anticipating something in the range of a trade czar-like component, which oversees commerce, which has authority over Section 232, sanctions, the Bureau of Industry and Security and export control restrictions, and then also the USTR, which is where the Section 301 U.S.-China tariffs are. I think given the import and the scale of tariffs on Trump's economic agenda, on offsetting the cost of the tax bill, on reorganizing the way America faces the world, balance of payments issues with other nations, it makes sense to have a czar. And he's shown a willingness to do that with things like DOGE, for example, these sort of ephemeral, not normal, and not necessarily sworn in or cabinet position levels. And I think Ambassador Lighthizer makes sense for a role like that, as he is extraordinarily competent, and it would be a mistake to leave him on the sidelines going into next year.
Henrietta, appreciate your time, as always. Henrietta Trace there of Vader Partners on the latest. When I think of Tariff Man, I don't think Donald Trump. I think Lighthizer. That's the guy I think of, and still waiting to see what position he has, if any at all, in this administration.
Well, it's interesting because Howard Lutnick got commerce where 232 tariffs lives. 301 lives in USTR. When you talk to people in Washington, D.C., whether they like tariffs or not, whether they like Bob Lighthizer or not, they say no one knows trade and the legality of trade like Ambassador Lighthizer. It'll be very interesting to see whether or not he comes back in Trump 2.0, because he was monumental when it came to the first iteration of the Trump administration.
We've got an incomplete picture at the moment. I think we all agree on that. We've got part of the picture in Scott Besson this morning, but we still need to wait to see who's going to be the NEC director as well, to really complete the picture of what economic policy is and where the emphasis will be.
The picture that we have gotten is a team of rivals, and some of the early reports about what goes on in those rooms consists of a lot of yelling and name-calling. And I have to imagine, on one hand, it's sort of bringing it back to the old parliamentary days of screaming at each other to try to hash out policy. And when is that actually a positive thing, to try to hash out policies that can work and actually achieve some goals?
It works so well in the United Kingdom. What are you talking about? Everyone's shouting at each other. They want to see more of this.
Bring back PMQs.
Right?
Totally.
I'd love to see that. Coming up on the program, Clint Henderson of The Points Guy, as the holiday travel season begins.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lyons deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
2 hours away from the opening bell, equity futures with a little bit of a lift. That lift fades, though. That's worth pointing out. On the S&P, we're still up by 0.4%, off session highs on the Russell. Still robust gain this morning of 0.8% on the small caps. With your morning movers, let's cross over to Manus Cranny for more. Good morning, Manus.
Jonathan, good morning. When it comes to squeezing the return on your insurance capital, Blackstone does a deal with EQT. Now, what is the deal? Blackstone gets their hands on cash flow from a pipeline deal. They're going to spend $3.5 billion on natural gas pipelines. It's a joint venture with EQT. What does EQT get? They have a $9 billion debt pile. They need to pay down debt. They need to retain their investment grade rating at the moment. So for them, it's all about pay down the debt. For Blackstone, it is about generating $750 million per annum between now and 2029 on your insurance capital. So that's the alpha here. Just think back to Intel and Apollo. You're possibly going to see more of these deals. Macy's, an erroneous accounting issue. An employee hid $132 million to $154 million in delivery expenses. Why is the question that goes through my mind. Now, we're down 3.5% at the moment. It has been a little bit worse. They're having an independent investigation, forensic analysis into this. They've actually delayed the official release of their results. But for the third quarter, they've told us sales are down 2.4%. Same store sales, a little bit lighter than the market had expected, lighter on that, but an accounting irregularity. Quick snapshot again of what's going on with Tesla, up 2% this morning. UBS have a no doubt. They've raised the price target to $226 from $197, but they still have a sell rating on this. They say you have an exuberance, you have an animal spirits in this price of this stock at the moment. We put on $350 billion since the election. And over the weekend, Elon's still promising full self-driving, but offering more discounts, Jonathan, in China, over $1,300. And at the same time, you've still got your 0% financing on some of those models. Good morning.
Manus Cranny, good morning. We'll see you again in about 60 minutes' time with some more movers going into the opening bell. Under surveillance this morning, President-elect Donald Trump making his pick for Treasury Secretary. Hedge fund manager Scott Besson. Besson will have a busy agenda, already telling the Wall Street Journal that Trump's proposed tax cuts are one of his first priorities. BMO's Ian Lingen just publishing moments ago, calling this bond market rally this morning the Besson effect and celebrating another adult in the room.
It's not as good. Besson bump is better, I gotta be honest. Like, that actually works, and kudos to you for coming up with it over the weekend. Honestly, to me, this highlights the key question. How long will this stick? Will the Besson effect or the Besson bump, let's make this happen, really last in the bond market at a time when he has proven to be a real, I don't want to say fiscal hawk, but at least disciplined in his rhetoric, and that I think is giving people comfort.
And he cares about the deficit, unlike others who just throw ideas at the wall and want to increase fiscal spending. Stanley Druckenmiller obviously worked so closely with Scott Bessent when they were both at George Soros, put on some of the most famous trades in the world. And for Scott, a lot of that was looking at the micro. He says the micro leads the macro. Say it was in England, looking at the housing market and why they made this massive bet on the pound. Stanley Druckenmiller says this: he's the only guy I know who's not only a market participant, but very fluent fluent and comfortable in academic circles. The one criticism about Bessent, or potentially hurdle, is going to be dealing with Washington speak, how slow things work, and potentially being comfortable in those academic circles is going to help him.
Literally the most well-known macro trade of all time, was breaking the Bank of England. And it always frustrates me that Soros gets all the celebration and the hand clapping, and he becomes famous for that, when really it's Druckenmiller and beneath him Bessent that really come up with this trade at the firm.
You can't underemphasize just how long he has studied these macro trends and just how good he is at it. Here's the question, and really to me, I have to go back to this quote from his event in June. We are going to have to have some kind of a grand global economic reordering. He has studied it. He wants to be part of it. What is that grand economic reordering that a lot of people are talking about? And exactly what is his vision for it? And that, I think, is a key question right now.
I can tell you this, the tariffs are part of it. Here's the latest on that front. Look at where the Apple CEO, Tim Cook, is. Visiting China for the third time this year as officials in Beijing prepare to meet with top global CEOs. Companies strategizing around Trump's threat of 60% tariffs on Chinese goods. Trade disruption top of the agenda for Apple, which makes the majority of its iPhones in China.
So what's so interesting is Tim Cook is a stealth diplomat, and not just in China. I think this is his third visit at least this year. But this morning, front page of the Wall Street Journal is how he dealt with the personality of Donald Trump. And Trump says it himself in 2019. That's why he's a great executive, because he calls and others don't. Tim Cook got a lot of what he needed in terms of carve-outs during Trump 1.0. And it was because he went in with an ask and focused on that specific ask, tried to avoid the president from weaving all over the place, and just got to the ask he needed, and he was successful. Can he be successful this time around when we've had the likes of Howard Lutnick come on the show and say there's going to be no carve-outs for anyone?
I think it's fair to say they're all calling now, aren't they?
Yeah, they're calling now and they're saying, find me someone who can make an iPhone. Honestly, find me someone who can actually do it the way that they can do it at Foxconn, whether it's in India or anywhere else, because I'm still looking.
Apple right now, up by 0.4% in the pre-market. Let's just finish on this story. US officials saying Israel is potentially just days away from a ceasefire deal with Hezbollah. The Israeli ambassador to the United States, Michael Herzog, saying a deal could happen, quote, within days. Israel continuing strikes on Beirut overnight after Hezbollah fired 250 rockets in northern Israeli territory.
So this is interesting because this would mean that a deal would be a 60-day suspension of hostilities. One of the issues that still remains in terms of the Israelis is they want to be able to have this right, reserve this right. If Hezbollah continues hostilities, then that deal just evaporates. The 60 days is interesting because we are dealing with a lame duck president. And basically what he wants to do is at least get a ceasefire in Hezbollah, open the door, potentially, that ceasefire to maybe something in Gaza and a hostage release before he exits the White House.
That's the latest on the Middle East. Let's turn to travel, holiday travel. Nearly 80 million Americans expected to travel at least 50 miles this Thanksgiving. Clint Henderson of The Points Guy writing that this year, quote, travelers have lots to say on price versus convenience. Clint joins us now for more. Clint, good morning.
Good morning.
Can we just clean this up very quickly? Best day to travel. Which day is it?
Okay, so not Tuesday, Wednesday, or Sunday after Thanksgiving.
Thursday morning.
Thursday morning is perfect. Actually, if you travel on the holiday, you're going to have the least crowds. It'll also be the cheapest flights.
Is that both air travel and driving?
Yeah, actually driving too.
Have we settled that for you?
Okay, a round of applause. Good job. Thank you. I'm screwed, if I can say that. Anyway, I will just say this. There is this question, price versus convenience. So what's the verdict?
So it's interesting. We polled with the Harris poll some of our readers and travelers, and they said 50% said price. So price wins overall. But a lot of people are traveling. A lot of people are worried about things. So the poll results were very interesting for us. People are willing to use their points to get a deal and their miles and that kind of thing.
All I can say is that the deals that I'm getting are worse and worse with points. So can you please work on that? Because it's really annoying. It's sort of, they're becoming meaningless. They're becoming like the Argentinian peso. Sorry.
We were talking a little bit about Aeroplan, this Air Canada program. You got to start finding these outside the U.S. programs. Air France, KLM, Flying Blue. That's where you find value these days.
I imagine if you didn't book for Thanksgiving, you're, to Lisa's point, screwed this week. When was the best time to have booked for Thanksgiving? And then potentially, are we too late if you haven't booked for Christmas?
So here's the deal with Christmas. Right now, every day from now until Christmas, it's going to get more expensive. So while we're past the sweet spots for both Thanksgiving and Christmas, you really wanted to have booked about a month ago. We say book Christmas by Halloween and try to book Thanksgiving a little bit earlier than that. But I will say every day you wait from now on is going to be more expensive. But here's where points and miles come in, because if you've got a stash of points and miles, the best value you're going to get for those points and miles is when cash fares are really expensive. Now, the other thing we found with a company called PointsPath is that you're going to get less value per point generally for holiday travel. But if you're looking at a $2,000 flight and you can use points to do that, then you're coming out ahead.
So who's giving the best deals?
So right now, we're seeing cash deals are really the best. So we do deals every single day at the Points Guy. It's one of my coverage areas. And I find regularly flights to Europe under $500 round trip, which is pretty good. The one area of the world that's expensive right now is Asia. A lot of people want to go to Japan especially, but the US dollar is super strong, so that helps ease the burden of higher airfare. But if you wanted to go Hawaii during the pandemic, out of the pandemic, or Florida, or even Las Vegas, those places are much cheaper now than they were 2 years ago when that surge of travel demand happened.
I love that we all had this revenge travel that went in waves and in tandem, and sort of it's rolling from one part of the world to the next.
Absolutely.
I'm just wondering how much of your time you spend and feel like kind of a credit card analyst more than even a travel specialist at a time where airplanes are increasingly just apparatuses of the credit card companies.
So it's really interesting. I got into this hobby. I was a TV news person. I got into miles and points because of credit cards. So my credit cards were my entry point. But to your point, points inflation is a real thing, and we've seen it happen, but there are sweet spots everywhere. You just have to do a little bit more research, and that's why my company where I work, it's such a fun job for me because I get to find those 50,000 point business class seats to Paris.
Do you find them at one firm more than the others?
As far as which credit card?
Finding the best seats.
So
finding the best deals. Do they appear at one company more than maybe they do at others?
Right now, Air Canada Aeroplan, Air France Flying Blue, you can find some insane deals. But I still find deals, American Airlines, Advantage Miles, I still find a lot of deals. You just have to be so flexible these days. You can't say, like I was just looking for flights from Australia.
Sure.
$350,000, 350,000 points one way in business class. I'm not going to pay that. There's no way.
No,
so what I'm going to
ridiculous.
do is I'm going to time my trip around when I can find the cheapest deal. So you just have to be a little bit more proactive these days. Knowledge is power.
Let's talk about experience.
Yeah.
There's a big business audience watching and listening right now.
Yeah.
Who's got the best experience in your mind out of the three big carriers in the United States?
So Delta is certainly charging a premium because they are sort of building themselves as a premium airline.
These people are expensing it. Don't worry about price.
So I would say Delta and United are fighting it out. American has had some struggles, and I think the value, though, in the program is still with American.
There's also credit card inflation in terms of the number of credit cards that are trying to get in on this. How do you decide when it's worthwhile versus if you've got to pay $40,000 in bills before you get any benefit?
Right.
Is it really worth it?
So there are a lot of credit card sign-up bonuses out there that you don't have to pay anything for. Barclays has an Aviator card, which is American miles. You get 60,000 miles for signing up and just paying the annual fee. So it's pretty remarkable. There's still plenty of sign-up bonuses out there that don't have huge amounts of spend requirements. But yeah, if you want to be the top tier and you want to have all the privileges, you've got to spend a lot of money these days.
Lisa asked you before about price or convenience, and you said everyone's going for convenience. Is that just because it's Thanksgiving and it's holidays and it's stressful? Do most times you see people actually really lean into wanting to get the best price?
Yes. So actually the consumer is very sensitive to price. And I think one of the reasons prices have come down slightly for airfare is because the airlines got a little ahead of themselves on some of the pricing, especially out of the pandemic when they could. Everyone wanted to travel, so they would pay anything. I think people have rationalized their spending a little bit more on travel. So you've seen a return to normal along with capacity increases from the airlines. So we're seeing price normalization, I would say, and the consumer is always the most sensitive to price.
Can you reveal the concierge key secret on air? The actual threshold. So you have to hit at American Airlines to get treated really well?
It depends on what hub city you're flying from. So if you're in one of the hub captive cities like Dallas, they're probably not going to invite you to be a concierge key, even if you spend the magical $60,000 to $80,000 a year on airline tickets.
Just on tickets?
Just on tickets.
So if I pretend that I live somewhere other than Dallas, I've got a better chance?
Much better chance. If you live at a slightly off hub city, focus city, somewhere where they're trying to build up their business, they're more likely to invite you. But the people that are spending $60,000, $80,000 on airline tickets, they don't need upgrades. So why are they rewarded the most? It's not fair to me.
I agree. It's not fair at all. Thank you, sir. They get to board first. I think that's what it's all about, right? Concierge key gets to board first.
Yes, they do. Ahead of people in wheelchairs.
Pulled on ahead of time. They do. Yes, they do. Yes, they do.
Yeah, what is that called? Gate lice? The people who try to
the people who pretend.
The people who
American is
pretend.
actually combating
I
that
know.
right now, this beeping noise.
I love this. Yeah, basically, if you go to board with Group 1 and you don't have a Group 1,
I see those people at the gate all the time.
Yes,
I see them at the gate.
I'm one of those people.
And those people that fly business class for the first time and assume they're boarding first. I know those people too, yeah. Clint, good to see you. Clint Henderson, the points guy. Thank you, sir. Let's get you an update on stories elsewhere. Let's get you some news. Here's your Bloomberg brief. Macy's is delaying its third quarter earnings due to an investigation. The company saying a single employee responsible for small package delivery expense accounting intentionally made erroneous entries to hide about $132 to $154 million of expenses. Macy's saying the employee no longer works for the company. The stock is down 2.5%. The founding family behind 7-Eleven operator 7 & I has hired SMBC to advise its nearly $60 billion proposal to take its business private. Nearly all of Japan's top banks have jockeyed for a place in what's poised to be the country's biggest ever buyout deal. And finally, Andy Murray is returning to the tennis court, this time to coach his longtime rival, Novak Djokovic. Murray, who retired from professional tennis in August, told the Associated Press he will help Djokovic prepare for the 2025 Australian Open. Very cool.
Wow, that's so interesting because he dropped out from injuries and a whole host of things. He's a new father, but he can't stay away. And how could he? To go back to coach his rival, it's a good movie. I think so much
comeback for early 2025 and looking forward to it. Up next on the program, the bond market finding stability.
I think this nomination is really good news in that it takes away some of those tail risks and really sets path back for the US economy onto something which is really, really strong growth, but also good news for the rest of the world too.
Gene Tenuta of Columbia Threadneedle up next.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, you can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I didn't
Go.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the program. Here's a snapshot of the price action for you. I'll get my words out. Equities right now in the S&P up by 0.5%. Remember to speak. Yields are lower by 5 basis points on a 10-year 435. And as of Venice this morning, the bond market finding stability.
Over the last week or two, what we've seen is an unwinding a little bit of the Trump trade, but more because of concerns around some of the extremes of the policies. I think this nomination is really good news in that it takes away some of those tail risks and really sets path back for the US economy onto something which is really, really strong growth, but also good news for the rest of the world too.
It's the latest this morning. The bond market showing signs of steadying following Scott Bessent's appointment to run Treasury. June to notes of Columbia Threadneedle writing, with inflation cooling and the Federal Reserve transitioning from rate hikes to a cycle of rate cuts, bonds are poised to perform well in 2025. Gene joins us now for more. Gene, welcome to the program, sir. Let's talk about your call for next year on the Federal Reserve, because it's very, very different to what I'm going to hear from Matt Lazzetti of Deutsche Bank tomorrow morning. Matt Lazzetti has got the Fed on hold through the whole of 2025, and one cut may be in December, next month, this year. Then he thinks they might be done. Why do you think they're going down to 3 and maybe even lower through next year?
Well, good morning, John. Thank you. I think the difference here is the Fed has to disprove 1996. 1996 is that example when the Fed, after a period of having raised rates aggressively, started reducing rates in 1995, did so by 0.75 percentage point, which is what we've seen so far, but then they stopped to the market's surprise. But why did they stop? Was it inflation reemerging? Actually, no, it wasn't. It was really a re-acceleration in the labor market. And I think to believe that the Fed is going to stabilize rates near current levels or maybe with one more cut, you have to believe that that labor market is going to re-accelerate again. It's possible, but the truth is we just haven't seen it yet.
Gene, do you believe then that the market has gotten ahead of itself in pricing in that, frankly, the election is going to materially change the economic outlook for next year?
Look, policies do have real outcomes, but I do think, Lisa, that the market's gotten ahead of itself a little bit. We have seen this administration before, but we also have to remember that the starting point is different and the starting point matters. We had negative real interest rates in Trump 1.0 in 2016, and now we're starting at a much higher place in terms of interest rates, and we're in the unique position that we haven't seen many times in the last decade, where interest rates are actually above the path that the Fed itself is forecasting. Even if that forecast path moves up a little bit, I don't think it'll structurally change in this environment, given how much inflation has declined.
Gene, this is almost contrarian, given some of what we've heard and what we're going to be hearing from Matt Lazzetti tomorrow in terms of the Fed's path and what that does for benchmark rates across the curve. I'm just wondering how much conviction there is, how much you're actually seeing and going into longer-term treasuries with both fists at a time when other people are saying, maybe Europe.
I wouldn't say going in with both fists, Lisa, but I do believe that there's value in high-quality bonds, and I think it's a very easy thing to sit back and sort of lazily say that interest rates have to be heading higher because inflation is going to be heading higher due to tariffs, for instance. But I think if we look at the Treasury Secretary pick this morning, I think it relates very well to what I would classify as the two scoreboards that the administration is going to be looking at, and those are the equity market and the inflation rate, because frankly, inflation is part of the thesis that helped this administration get elected. So I don't think they're going to let inflation run away, and I think in that environment, I think it's very likely that we're likely to continue towards lower neutral interest rates towards that 3% area.
When you look at how the market is reacting to Scott Bessent, is it because he's a known quantity, or it's because they think this is a steady pair of hands and it's not someone that is on a different list that no one was expecting?
I think it might be the latter. I think, it's viewed that he's a market practitioner, and in the eyes of the markets, that's a comforting signal. I think there were other potentially alarmist characters that were considered. So I think in this sense, the markets are comforted for now. The truth is we don't really know. We imagine that someone to take this seat is signing up to a pretty aggressive tariff policy, but hopefully one that's a little bit more targeted than broad-based.
Do you think with a name like that, when you say broad-based, that tariffs then will be a negotiating tool and not a blanket response?
I suspect so. I mean, you're certainly going to hear the headlines every single day. But again, we had material tariff conversation in the Trump 1.0 administration. We did see a material decline in China's share of U.S. imports. And we've seen offsetting growth across not just one, but a variety of countries, including Mexico, Canada, and others. So I think that will gradually continue to be the case. But it remains to be seen exactly how broad-based they are in terms of that initial rifle shot.
One company after another has come out, investment company, and said they prefer credit to duration at a time where it seems like the economy is going to be pretty good in the United States, and there are questions around the duration component. Would you reverse that? Are you more confident about duration, both in the U.S. as well as in Europe, than, say, credit, which already has been bid up pretty considerably?
Yeah, I'd probably take the other side, Lisa, to be honest with you. I think it's easy to say, oh, I feel good about credit from a fundamental standpoint. We would agree there. Leverage is in a very healthy place, particularly if we look at the investment grade universe, both from a margin and a leverage perspective. Those are each about the healthiest that they've been in the last decade. But the question is, what are you going to generate from an excess return perspective when credit is at the most expensive it's been in more than 2 decades? And really from a duration or a real interest rate standpoint, it's the other way. All of the indicators are leaning on the cheap side rather than the expensive side. So I'd be a little bit careful getting too excited on credit. We like the fundamentals, but we rather stay a lot shorter and more defensive in the credit markets.
Hey, Gene, good to hear from you. As always, buddy, have a wonderful Thanksgiving. Gene Tenuta there of Columbia Threadneedle. Reminds me of a quote from Goldman Sachs and Lofty Karui. Shared it with you last week. It's worth repeating. Barring a sell-off between now and year-end, investors will likely enter 2025 with the most severe valuation constraints in more than 2 decades in credit.
Yeah, I mean, basically, you're looking at spreads that in high-yield land is basically the tightest going back to 2007. So you're talking about a price-to-perfection type of moment at a time where there's some real questions around what higher rates for longer would actually do to profiles that haven't yet been tested because the debt has really been termed out.
Gene was talking about the differences between now and 2016 when he was talking about why rates go lower. And I was thinking, isn't that an argument for rates to be going higher? Because the big difference between now and 2016 is this is no longer a market crying out for fiscal stimulus. In fact, quite the opposite, given the fact that we're looking at an economy with unemployment around 4%, GDP is still pretty robust, and the budget deficit's 7%.
The one fly in the ointment is if they have to reduce the deficit, then that's going to become something that constrains growth as well. And that won't necessarily turbocharge things in the same kind of way.
Yield to lower this morning by 5 basis points. Up next on the program, we'll catch up with Mike Wilson of Morgan Stanley, Adrian Yee of Barclays, Francis Donald of RBC, and Noel Dixon of State Street from New York. This is Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of no. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
The U.S. is the only engine of global growth right now.
There's a lot of opportunity here, assuming the economy continues to grow and profits continue to grow.
The Fed always is a key story here.
I think it will take a few more Fed cuts to push the 10-year above 4.5%.
We're actually getting back to normal. And you can see that if you look at overall inflation trends.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell in New York City as we kick off a brand new trading week. A 5-day winning streak on the S&P 500, shaping up for day 6. Equity futures right now on the S&P positive by 0.5%. Outperformance on the small caps. The Russell up by 1 full percentage point, supported by this right here in the bond market. Yields lower across the curve. 2s out to 30s. On 10s, we're down 6 basis points at 434. That move right there, unlocking some dollar weakness against all of G10. The euro against the US dollar this morning, around 105, Lisa, at 104.92.
My favorite is that stocks go up and small caps do well, even when the bond yields were heading higher, simply because it was going to be a pro-growth type of scenario from Donald Trump. Now you have Scott Bessent, who is aware of the deficit and concerned about the deficit. He cares about the deficit, and so people are saying, well, he's going to put some sort of ceiling on how high yields could go, and that too is good for some of these caps. So it's basically heads, I win, tails, you lose.
The markets is really welcoming someone that understands and has a deep knowledge of global financial markets, like Scott Bessent, an individual who, alongside some of the top names in investing, put on famous trades of our time. Someone who cares about the deficit. This is going to be the face of Trump's policies. But what is interesting is what Terry Haynes talked about, this cabinet of rivals. How much is it going to be the push-pull when it comes to tariffs and when it comes to tax cuts and the sequencing of both those policies?
So missing pieces. National Economic Council Director, 1. U.S. Trade Representative, 2. Where does Bob Lighthizer fit in here? over the next few months, if at all?
It's a great question, especially given the fact that Scott Bessent wants to use tariffs as more of a negotiating tool. That's at least what he said, versus Robert Lighthizer, that is, as you said, truly the tariff man. He actually wants to create a greater division between the East and the West.
And does he go to USTR when he would welcome the use of 301 tariffs, or does he become this trade czar, which people have been talking about? But I think it's really interesting that so far, this is an individual, Donald Trump, who ran on the idea that tariffs is a beautiful word and we should be using them. We do not know yet if even Ambassador Lighthizer is going to be entering Trump 2.0.
We've got a lot to discuss this hour. Coming up, Mike Wilson of Morgan Stanley as global markets embrace Trump's Treasury pick. Adrian Yee of Barclays as a shortened holiday shopping season begins. And Francis Donald of RBC looking ahead to this week's economic data. We begin this hour with stocks higher as the post-election rally picks up steam. Investors welcoming President-elect Donald Trump's Treasury pick, Scott Bessent. Mike Wilson of Morgan Stanley weighing in on the equity outlook, writing, with hard landing risks reduced this fall, the Fed cutting interest rates, business cycle indicators showing signs of life, and the potential for an animal spirits rebound post the election, the path of earnings growth should be upward as we head through 2025. Mike joins us now for more. Mike, good morning.
Good morning.
It's good to see you. How unusually wide are the range of outcomes for 2025 for you and the team?
Well, it's about the same as it was in the mid-year. I mean, we've moved to this sort of view because the outcomes of the election, the economic outcome, rates, policy, et cetera, is also wider. So, we have to take that into account. And we did a pretty good job, I would say, this year of moving that around, meaning as the economic outlook changed through the summer into the fall, I mean, that's really the game now, is just trying to get ahead of these sort of pivots, because it's going to remain uncertain. You all were just discussing the new cabinet positions. Yeah, I mean, they don't even know yet. They're going to try to figure this out. That's the challenge. And I think the markets are going to, as usual, trade that. So we're trying to do that as well for clients.
So your message to clients going into 25, be nimble. You've got some sector picks in there.
Yeah.
The overweight you like is financials. The underweight, the sector you don't like, the consumer. Both staples and discretionary. Can we start with the consumer? What's not to like?
Yeah, well, I mean, it's been weak. I mean, the consumer has been softer, and this fits into our sort of, our call we've had for a while, which is that the government has just sort of crowded out a lot of the economy, right? I mean, the low-end, mid-end consumer, low-end, mid-end businesses, quite frankly. So that's something we are now thinking about, right? This changeover, I mean, this is why Trump won. This is why the Republicans won. They want change. Consumers want change. So let's see if they can execute. But that's something that we have a short leash on now on the consumer side. I'd say we're looking to maybe upgrade certain consumer stocks if they can pull off some of these policy challenges that they're going to try to navigate. And look, I think on the financials, we've been overweight financials. It's been a terrific group. And the question there is how much further can it go? But look, once again, policy, deregulation, Basel III coming off. I mean, these things are all positive drivers that should continue to help that sector, at least on a relative basis.
Policy challenges and changes for the consumer. What changes would you need to see to upgrade a bigger cohort of those names?
I think that, once again, it's this crowding out thing. So this is a big picture view. But if they can shrink the government side, and by the way, this is going to take years. Okay, this is not going to happen in 6 months. And that's why we're not upgrading consumers yet. But if you're able to shrink the size of the government, kind of get them off the back of small businesses to some degree, this animal spirits thing is real. And then, of course, if you can get, the rate situation under control, where term premium is balanced with the budget, those are the kinds of things that can actually spur consumer spending, consumer confidence, which has really been in the doldrums.
How much is it also tax policy? Essentially, if people pay fewer taxes, they can go out and spend more on Gucci.
Or anything else. I mean, quite frankly, the consumer has been having a hard time spending money on food. So let's start with that. Let's start with just getting inflation sort of under control. Getting people's confidence about the economy going forward and willingness to sort of look forward and spend on things, invest in things. I think one of the biggest areas that has really underperformed is consumer durables, because rates are still too high. The level of rates are still too high. Now, I don't think we're going to be able to see rates come down any faster because of this administration, but over time, I think that's the key. If we can get rates down to a plausible level, wages increase to offset the inflation that's already in the economy, the consumer will fare better.
There are a lot of other questions like tariffs and how that could potentially affect some of these companies, but there's a broader point here, which is that specific sectors are going to respond very differently to policy changes going forward and don't necessarily have the same kind of macroeconomic overlay that they've had in recent years. And I wonder how much you're sort of seeing that play out. And I point to healthcare in particular because it's been one outlier over the past 2 weeks. You've seen it go down some 6% because of the overhaul that clearly is lining up with some of the picks for CMS and HHS. Do you lean into that? Or do you see these as opportunities?
Well, there's both. I mean, there's going to be risk here, too. I mean, by the way, once again, the markets are very smart about this. They've punished big food companies because of perhaps Bobby Kennedy's appointment. Same thing for pharmaceuticals. So the bad news is sort of already getting priced in that regard. But the positive story in healthcare, quite frankly, is just an efficiency story. It's no different than the government. This is going to take years. If we can make the deployment of healthcare, the delivery of healthcare more efficient, that's going to create great opportunity for certain types of businesses. But this is to come, right? This is why we need to be nimble and think about, okay, it's not all going to happen at once. There's going to be moments of fear, doubt, and uncertainty, and that's going to create the opportunity, we think, through 2025.
You keep going back to efficiency. Do you think Elon Musk and Vivek Ramaswamy could Dogify the economy?
I think there's a good chance that we can not necessarily cut all the spending they're talking about, but if we can just freeze spending. Remember, the key here is fiscal sustainability, which is just let's grow the government slower than we're growing nominal GDP. If you can get into that position, so Scott Bessent has said, this part of his plan, let's just get the fiscal deficit down to 3%. We're not talking about going to zero, but if we can just get it to 3%, that's in a much more sustainable place, which is one of the reasons why I think the bond market is reacting, at least initially, somewhat positively to this. One of the key negatives or risks that we see in the short term had been term premium. If term premium continued to widen out, that's a real risk for multiples. So I'm encouraged by the reaction initially, but I'm also not confident to say that this is going to be, it's a straight path from here to there.
What do you think the North Star is when all is said and done of this administration? Because you have things like tax cuts, but things like as well as tariffs, which in a blanket response, many economists say could be inflationary, but they ran on getting inflation down. Is that the number one key thing that Trump wants to make sure inflation comes down for Americans to afford groceries?
Well, I think that look, his mandate was prices are too high. There were probably three main issues: prices are too high, unacceptable. Immigration, we've got to fix that, and then this idea of these never-ending wars and like spending money over unnecessarily in many Americans' eyes. So he's going to try and take all three of those. It's kind of an America first policy with the sort of added twist that we're also going to try and redistribute the income in a way that's more taxing people and then distributing it that way is inefficient. If you can somehow reduce taxes and get the income redistributed at the wage level, that's really, really good. I think that would be the goal. Once again, it all comes down to execution.
When you say nimble and being nimble as an investor, are you saying trade frequently? Is this going to be the most active trading year that you can imagine for the team in 2025?
Yeah, I think that's a really good way to put it. I would say we've been more active in that regard, trading the underlying as opposed to focusing so much on the index. We are probably going to be offering more trades for clients. And when I say trades, not a day trade, it's 3 to 6 months, rotating around the portfolio in a way that is actually you can do that in size. Right? We're not going to say, hey, do these things that larger clients can't do. But 3 to 6 month trades is a lot faster than sort of a 12-month view.
Do you see the breakdown of correlations that have traditionally held true, whether it's with yields and the effect on stocks and some of the macroeconomic overlays? Are they going to become less relevant as there are these sort of rotating trades, 3 to 6 months, that kind of go through sectors and specific names?
No, I think they become more important. I think the macro will always play a role. I do hope and expect perhaps next year that we can see more micro opportunity. And what I mean by that is that because of the economy and the setup, that policy that we've had, by the way, this is not just the last 4 years, this is the last 20 years, this crowding out, right? It's the big get bigger, the have and have not, the K economy that everybody's sort of familiar with. That, to me, is going to be the key. Can we move from sort of a very narrow participation in the economy, both from a consumer and corporate standpoint, to something that's broader? If that happens, that's going to create more micro opportunity, but it doesn't mean you can ignore interest rates, other policy changes, because that's what's going to affect the micro opportunity.
Where does that leave the Mag 7? Some of these dominant companies?
I mean, I think you're already seeing it. It's like there's going to be more winners. There's going to be separation of winners and losers there too. One thing we know about cycles over time is that the big winners of the last 10 or 20 years are not the big winners of the next 10 or 20 years. And so we've talked about this a lot. We've written about it. Like AI, to me, the big exciting part of AI is not the guys who are building AI today and the picks and shovels who have already won. It's the application layer. Who's going to develop and deliver the solutions that take advantage of this new compute platform to deliver the efficiency for corporate America, for consumers, much like email did, or web browsers, or software as a service. I mean, you think about the big winners of the internet, it wasn't the carriers who spent all this money and put it in the ground. It was the companies that built the application layers to build better mousetraps going forward.
You wrote about some of this earlier this year. You said the focus at the moment of the equity market was on the AI enablers, which was the chips companies, the NVIDIAs of this world. Where are we in that process? Are we moving away from that yet?
Well, we're still in it. I mean, there's still companies are still benefiting, but that's all very narrow too, by the way. There aren't that many beneficiaries of the spend, which has been unusual. It's very different than the 90s where you had hundreds of beneficiaries. So I think we're still in that phase, and we're going to transition to now the adopter phase, like who can actually use this stuff, which so far is only the hyperscalers. Once again, the really exciting part is the ones who can actually take this platform, build applications, and then deliver it to dummies like me and make me more productive, right? Like just the average person to say, I don't need to be a technologist, but I understand how this application works and how it can make me more efficient in doing my job, which is, looking at stocks, in these mass quants of data in a way that I can actually understand and deliver it to clients.
We've known each other a while. I have to say, you sound pretty excited about next year in a way that I've not heard you for a long time.
Yeah, I mean, we're not always, one way. So I would say we've been excited about this for 6 months. It's just now we can kind of see it in a way where we can see a broadening out. We see it in the numbers, right? We've been waiting for this. So in the last 2 quarters, we've actually seen a broadening out of the earnings story for the first time, even before the election outcome, okay? So this is a 2-step process. It's gonna be, noisy. Stocks are expensive, okay? That's something we have to understand. The markets are ahead of this already. Let's not think that we're discovering the light bulb here, okay? The markets have already done this. So, but yes, I think there's a wider path now, a wider set of opportunities, which to me is more exciting.
You've spent a lot of time speaking to clients over the last few months, I'm sure, about the outlook for 2025. What are they most skeptical about? What's the biggest pushback you get?
Well, valuation has been, I've been skeptical on that, quite frankly. So it's still, people are uncomfortable with the valuation in the equity markets. But then when you think about, what else is there out there? And then you look at the U.S. versus other markets too. So that's probably the biggest one. The second one is just, it still feels unstable. I mean, like geopolitics, the political, angst in this country is like not resolved. I mean, there's still this very bifurcated political environment. People's economic situations are very bifurcated. That makes people uncomfortable. So I think that's the part that people it's hard to get uber bullish when you have all these things that are kind of holding you back.
Do you sense that some clients, and of course you're not going to name any, but do you sense that some are finding it difficult to divorce their political bias away from their economic views? Have they learned the lesson of 2016-17?
I mean, most clients are more objective. Investment clients are more objective about that because they have to be, right? Because there's this thing called the price that makes them be objective about the outcome. That doesn't mean they don't hold personal biases. We all do. That's natural. I do think 2016 maybe changed that a bit, but look, we're all forced to perform, and whether it's a political bias or it's a style bias, you have to navigate that and be flexible.
Just to put a bow on this conversation, the essence of this conversation when you talked about the administration was the real potential for real change. When I asked you about whether some of these clients are skeptical about 2025, are they skeptical about anything in the administration's agenda that you think maybe they should be paying more attention to?
Well, we wrote about this weekend. I mean, there's a tremendous amount of skepticism on whether they can actually streamline the government because it's just, I mean, people have tried this before. This is not like a new idea, right? So it's difficult. And we all know about these roadblocks that are kind of built into the system that, the appropriations, the way you get the money that have to be spent, the civil liberties laws, which are good laws to protect people's rights on jobs. But it's almost like you're fighting against this giant blob and people are very skeptical that you could beat the blob. And I think that's an area where we need to be a little bit more open-minded. I'm more open-minded about that because this is what the American people want. When I forget about talking to investment clients, when I talk to people on the ground, people look at the government and they say, hey, government does a lot of great things for me, okay? But I have to worry about my job all the time. I have to operate in a different world. Why should they be operating in a different environment? I just think there's opportunity. And this is also potentially liberating for people in the government. There are really good employees in the government, okay? They just play for a bad team. It's like, let's take a good player on a bad team and let's put them on a better team, and then probably you get more productivity out of that person. I think that's exciting. It's a lot of risk. Okay, it's going to be a really messy road.
Yep.
But that to me is interesting.
Looking forward to covering it with you. It's good to see you. Mike Wilson there of Morgan Stanley on the latest. Equity futures right now in the S&P higher by 0.5%. With an update on stories elsewhere this morning, here is your Bloomberg brief. The UAE arresting 3 suspects in the murder of Israeli-Moldovan Rabbi Zvi Gogan, whose body was found Sunday after he was reported missing in Dubai. Israel is reinforcing travel warnings to the UAE. Apple CEO Tim Cook returning to China for at least the third time this year. Cook attending a supplier conference in Beijing. The Apple boss is also expected to join a meeting of foreign CEOs with the Chinese premier. The meeting is expected to address supply and trade issues ahead of the incoming Trump administration. And finally, in sports, the Chiefs survived a scare against the Carolina Panthers, holding on for their 10th win in 11 games. Elsewhere, the Eagles dominated the LA Rams on Sunday Night Football behind a franchise record-setting rushing performance from Saquon Barkley. From New York, that is your Bloomberg Brief. Up next on the program, the Morning Calls. Plus, Adrienne Yee of Barclays on her top retail pick for 2025. That conversation just around the corner. From New York, this is Bloomberg.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
The opening bound 1 hour and 10 minutes away. Equity futures right now on the S&P 500 higher by 0.5%. Let's get you some morning calls. First up, UBS raising its price target on Tesla to 226, warning the EV maker's post-election rally has been driven by animal spirits over fundamentals. Stock is up again by 1.8%. Your second call, D.A. Davidson upgrading Procter & Gamble to buy, highlighting greater confidence in China sales. That stock up by about 0.25% this morning. And finally, Oppenheimer adding Target back to its top pick list, pointing to very attractive risk-reward. We rebound on that name by 1.5%. Retailers more broadly preparing for a shorter holiday shopping season after a major earnings week, including Gap, which is seeing wealthier consumers searching for value. Adrienne Yee of Barclays writing this: Gap is our top retail idea for a cyclical recovery into 2025 as it shifts from solidifying operations to growth mode. Adrienne joins us now for more. Welcome to the program. Let's start with Gap. Can you tell us what you think they're getting right at the moment? What's leading to this big share gain?
So what they're getting right is the value equation for the consumer. So if you look at the retailers that are sort of winning in this environment, it's those who are like Walmart, TJX, the off-pricers, Old Navy in this particular case. And they truly are kind of giving back real value to the consumer. With regard to the Gap brand within, the Gap organization, they're also finally starting to hit their stride on connecting with the consumer. So it's been at least a couple of decades, probably, last time that we saw them do positive comps at the Gap brand was 2011 and 12, when it was kind of the skinny leg craze. And I think part of it is that they're really focused on the fundamentals. They've got solidified their store base, the cost basis, And we also, for lack of, other things, they also have a silhouette shift that is a denim-based one, and it's in their favor.
So you talk about creating value, and I think about the sort of pairing that idea, the lowest prices, with style and getting influencers to get wide-legged jeans that look like they're in vogue and get them out to the masses. What does value mean? Who isn't creating value?
Yeah, that's a great question. And we like to separate value versus cheap. So value is price paid for quality received. So when you go to an off-pricer, or even if you go to Old Navy, you think that you're getting, you're paying something, and you don't mind paying $50 for something that you think is probably worth more than that, $75 or $100 even in off-price. But what you do care about is paying, cheap prices for something that you think is worth exactly that or less, right? And that's the huge differentiator here, especially in this environment where CPI, inflation across all these different products is eating away at that wallet. The consumer's really looking for somebody who's going to provide them the ability to stretch their dollar and stretch their wallet.
Adrienne, something that we woke up to this morning was suddenly a renewed focus on shipping costs and how that can come back to bite. And for an e-commerce type of organization, which a lot of these retailers seem to be coming, how important is minimizing shipping costs? How much is that becoming an increasing drag on some of the companies you cover?
So the e-commerce piece of it, exactly that last mile delivery, what you're talking about, we should think about those like wages. They just perpetually go up. Remember, the essence of kind of that shipping is going to be an employee base where their wages are going up, whether it's UPS or FedEx, et cetera, any of these delivery companies. So you should kind of think about that as a permanent inflator. And the way to combat that, frankly, because it's very much a variable expense, is to get ever smarter and ever better about your inventory management, trying to buy and see what demand is and sell at full price. So it's a really, really tough, equation there. But just as on their store side, the store payroll will permanently go up. It's just about operating your entire omni-channel business much more efficiently.
Adrienne, just wanted to finish on this. I know it's not a company under your coverage, so I won't name it by name. We'll just talk about the story in general terms. There's a company this morning where a single employee was responsible for small package delivery expense accounting, intentionally made these massive erroneous entries to hide about $150 million worth of expenses. How unusual is it for something like that to happen at a company like this?
It is, it's a breakdown of the disciplines. It is pretty unusual, frankly. Typically, let's put it into perspective that $150 million is on about $4.3 billion worth of total delivery expenses. So it's a number. It's a real number since 2021, but it's about 3% of their delivery expenses. Not a great look for, said company. But what I will say that there's a lot that goes on. I've been in the retail industry. That P&L has thousands of lines in it and thousands of employees that you have to assume are doing the right thing. And I think that there was a breakdown in this particular instance of the oversight in that department, for sure.
Adrienne, appreciate your views on that story as well. Thanks for being with us. Adrienne Yee there of Barclays. Now, thanked Adrienne, I can, of course, name that company. If you're just joining us, that company is Macy's, and it's not a pretty story this morning.
That number that she just said, that's $3 billion of packages to account for about $150 million of shipping costs. That's massive.
132 to 154. I think we've all got a lot of questions and very few answers so far this morning. From New York, good morning.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Equity futures near session highs on the S&P 500, higher by 0.5%. The outperformance, as we've discussed all morning, is on the Russell. The small caps higher by 1.1%. With 60 minutes until the cash open with your morning movers, it's Manus Cranny. Morning, Manus.
Jonathan, good morning. Those small caps are on a heck of a run. EQT has the lowest investment grade rating available, BBB. What do you do to protect that and pay down the debt? You've got a whole host of pipelines. You do a joint venture with Blackstone. You charge them $3.5 billion. They get to actually deliver a return on the capital within the insurance business, which is about cash flow, cash flow, cash flow. $750 million between now and 2029 comes into the insurance business. EQT gets the money to pay down debt, and that's what you call a perfectly symbiotic deal. Roll it over, have a look at MicroStrategy when it comes to, I suppose, the collation between Bitcoin and this company. We've talked about it many times, but this morning we have a note from Bernstein where they say this company could be on track to hold 4% of the Bitcoin market in a decade. They upped their price target by 42%. Now, they've already been slightly behind here on the curve, but they talk about the capital plans by this company so that they can buy more Bitcoin well ahead of the schedule. And it's not really going to impact the long-term unsecured convertible debt that they're issuing. Doesn't really hit the balance sheet. So a nice bid from Bernstein on that. You've just talked about Macy's. I'll round it off here. As your last guest said, this is 3% of the overall expenses that we are dealing with. So that's some context for you. An employee hiding between $132 and $154 million of delivery expenses. Why? Why was this person hiding those expenses? We don't have the answers to that. We've got an independent investigation. And the sales come in just a smidge lighter. They've delayed the formal sales results. But sales, same-store sales, Jonathan, down 2.4%. That's just a little bit lighter than the original estimates.
What a crazy story. And a name to watch going into the opening bell. Manus, thanks for that. A busy week of economic data ahead of us, including consumer confidence, Fed minutes, and a core PCE reading. Francis Donald of RBC writing, we have relatively high conviction that the Federal Reserve will cut 2 more times before pausing, though less conviction on the exact meetings. And yet, we don't think the month-to-month meeting outcome matters as much as what happens after the Fed pauses. Francis joins us now for more. Francis, good morning.
Good morning.
What does that little tease mean? What happens after?
Well, it means we're spending a lot more time thinking about what happens by the end of 2025 and into 2026, rather than the typical economist game of, is it a December pause or not? And I have to tell you, we're really starting to actively think about, is there a scenario that leads to hikes by the end of 2025? We've gone from how many cuts is it going to be to two-sided risk on the Fed forecast. That's a big change in the way we have to think about things. I'm going to spend a lot more time talking to my clients about preparing for that possibility, stress testing that scenario, which very few are really actively considering right now, than I will telling them it'll be a December pause and a January hike.
Let's spend some time doing that right now.
Sure.
Thresholds, bars. How high is the bar to resume hiking?
I don't know that it's as high as many might think it is. Remember, inflation is still relatively sticky, and we have some inflationary shocks coming down. We have tariffs that might be coming through. That matters. And more important than tariffs, immigration policy could be really important to the growth outlook and to the inflation one. I actually think immigration will matter more than tariffs over the next 3 years, and yet we don't spend as much time talking about that. I think really critically, we have to recognize we can't have our cake and eat it too. We're not going to get a strong, resilient, roaring 20s economy and rate cuts. The idea that we get back to 3% and yet we still have very strong growth and unemployment rate remains low, that's not a reality that's going to exist in 2025. So pick your lane. There is still a possibility that the U.S. economy doesn't make it to this soft landing. We still need small businesses and low-income consumers to feel a little bit better, to feel the benefits of those rate cuts. That still exists. But the tails are fat in the forecast. There is significant uncertainty. Now is the time to prepare for multiple eventualities, more so than even 6 months ago.
I want to dig into that whole immigration as more important than potentially trade policy at a time where a lot of people have thought wage inflation is kind of on the wane. That's not going to be the main pressure. Implicit in your statement is that wage inflation could be the driver that gets the Fed to raise rates once again at the end of 2025. Could you walk through how that looks, what the thresholds are that gets us there?
Sure. So tariffs, yes, we have to do a lot of work. Tariffs are sort of a nuisance for economists to have to calculate. But what really keeps us up at night is labor supply shortages. So tariffs, price level shock occurs one time, falls out of the inflation statistics. But the more nefarious inflation comes from not having enough workers. That's a type of inflation that scared policymakers after COVID. So if we see a drop in the labor supply, and remember, this is happening in the context of record retirements. We don't talk about that. Why not? We have 3 retirees for every 1 new entrant looking for work in this labor market. It isn't a long-term issue. It's a 2025 issue that's changing and mechanically impacting things like the unemployment rate and wages. So if we add on that we're going to see mass deportations that either in literal terms or that we don't see beneath the data make wages rise, that's a more difficult type of wage pressure. It's the most difficult type of inflation that the Fed is going to have to respond to, whereas tariffs, it's more of a one-off.
So can you put some numbers around this even? Because I've been looking back at deportations, and they're not unheard of. I think there were some 1.5 million people deported under the first Trump regime, and there's also been some 1.5 million people, or even 3 million, that were deported under Biden. I mean, I'm just wondering how many would have to be deported in order to really create a dent?
Well, every single one will matter in an environment where labor supply is going to be a critical issue for 2025. But Lisa, it's like all other policies. We don't know the scale, scope, or timing on a vast array of policies coming through, and their sequencing is going to matter a lot. What we do know is the direction of these policies. We know the direction is towards protectionism. The direction is towards deportation. And so we have to calculate into our outlook the risk that we actually see greater emphasis on labor shortages, greater prices via the tariffs that are coming through. That's what we're contending with at this point, is sequencing, because that matters a lot for 2025, and size.
So how much tension do you see potentially from a Trump White House and a Federal Reserve if they are even thinking about hiking rates?
Well, this is the big challenge that has existed over the past several months, is we have pro-cyclical fiscal policy, and then we have monetary policy that's been trying to ease, and they have been at heads with each other. But if the economy is very strong, we should see some pullback in fiscal activity. We should see some fiscal constraint, and we should see higher interest rates. So I don't see so much of a tension if the economy is doing well. What will be more problematic is if the economy starts to weaken at this point, and the Fed is nervous about that and wants to cut, but can't because of excess fiscal spending, or we haven't seen that pullback. For me, 2025 is a really critical year. We're walking that tightrope across to the soft landing other side, and we're almost there. We're like 6 months away. If we get hit with a tariff shock or a fiscal shock right at that very end, it could knock us over. If we get to the other side, small businesses come back to life, there's been enough rate cuts, lower income consumers feel better, then we can take some winds of change. But the next 6 to 12 months is going to be really critical. This economy is still wobbly.
So you see a real chance of potentially a no landing after what everyone is viewing as this soft landing scenario we're in right now?
Oh, certainly not our base case, but let's do a thought experiment where by the end of this year, we have tariffs that need to get priced in, we have inflation that's still running hot, we have super core inflation, Powell's most favorite, running above 4%. Small businesses are still struggling. Remember, they hire 80% of folks in the United States. They're still very depressed and dealing with uncertainty. If we get some sort of negative shock before we get some of the advantages of Trump policies like deregulation, then yes, there is still an area, I'd say about 20%, where we get knocked off. That doesn't merit a base case, but if you're planning out your business or you're making long-term investment decisions, it can't be eradicated as a possibility we have to evaluate.
Any thoughts on who's running the Fed when we're having these conversations in 2026?
No, but all I know is back in 2018, Chair Powell said, when you're in a dark room or you're in a room and someone turns off the lights, you have to move more slowly. That is the Powell that we have right now. That is the Powell that we evaluate. He'll probably be moving a little bit more slowly as we walk through this darkened room.
This was great. Francis, it's good to see you.
Thanks for having me.
Thank you. Thank you so much. Francis Donald there of RBC here in New York with us. Let's turn to the price action in financial markets and start with the equity market. The S&P 500 on a 5-day run. This morning is day 6. Outperformance on the Russell. You can see the S&P 500 there up by 0.5%. On the NASDAQ 100, higher by 0.6. On the small caps, up by 1.2. If you switch on the board and turn the page and get to the bond market, 2-year, 10-year and 30-year, yields this morning lower by almost 7 basis points now at the front end of the curve. On a 2-year, just about holding on to 430. Right there with you is the 10-year at 432. Yields are lower this morning now by 8 basis points on the session.
Yeah, how much is this a relief rally and how much is this something sustainable at a time where the person chosen for Treasury Secretary is someone who cares about the deficit and also is well respected on Wall Street? It's not someone looking to shake things up.
Cares about the deficit, so that's good for the bond market. And then for stocks, Jonathan, you said it. It's the Besant bump this morning. I just want to know how long it lasts. How long does this all last? The Trump trade, the Besant bump.
We'll see how long it sticks. I think you've got to get a more complete picture of who the people are that are going to be running policy. Then you've got to understand where the emphasis will be, taxes, tariffs. Immigration's a big piece of this as well, which is the argument that Francis Donald was making just moments ago.
Yeah, especially if we are dealing with an aging population, retirements. At the same time, you have to wonder Mike Wilson's view on efficiency, on the idea of AI application, how much that could actually reduce the need for some of these workers. These are some of the sort of push-pull that you can argue on either side, which is the reason why he's actively trading and maybe doing that more than the long-term calls.
For now, we're buying equity. Stocks at session highs this morning. The S&P 500 looking for its 6th consecutive day of gains. Noel Dixon of State Street writing this. For now, equities are looking to the bright side of a normalizing Federal Reserve, stronger U.S. economic growth, deregulation, tax cuts from the new administration. This narrative can easily change if we are faced with the Fed pausing for inflation and fiscal concerns early next year. Noel joins us now for more. Noel, it's good to see you.
Good to see you.
Do you think that's a scenario we will be facing in 25?
I think so. I think there's, some euphoria. Obviously, we got the red wave. Everyone's looking to the positive parts of the policy. But we're going to get into a situation where, like I said, the Fed is easing into strength. You have these fiscal issues. Tariffs, I think, will be a big risk event. So I think those concerns come up in the first half of next year.
So what are you advocating for into next year?
Yeah, so I think I would probably take some risk off the table coming into next year. I also think the dollar will continue to grind higher. I think that it's sort of the U.S. will continue to be the cleanest dirty shirt. And I think we'll have probably lower global growth if we do get that tariff policy implemented.
This might be a dumb question. What is risk? What counts as that? Because some people are talking about risk in stocks. Other people are saying risk is in duration and the chance that maybe there isn't necessarily any kind of controlling force in the deficit and that you do end up, like Francis Donald said, with even rate hikes by the end of next year.
Yeah, so I think the biggest risk is in the long end of the curve. I think duration is that's what you want to focus on taking off. I think equities, they had a big rally. Right now, like I mentioned before, it's sort of what's not to like. But when we get into next year, it's gonna say what is there to like, because you're gonna have overvalued equities. You're gonna have this fiscal concern moving into next year, and then you're gonna have a Fed that's gonna be forced to pause its policy.
So you're not buying the Besant bump?
I'm not. I think, again, I don't want to go against it in the short run. I think you kind of ride the wave. Maybe you get a Santa Claus rally. But once we get a little dose of reality into 2025, I think that's when you want to start to take some risk off.
You say tariffs are the biggest risk. Do you view tariffs, or do you think this administration will view tariffs as a negotiating tool to reset the playing field when it comes to free trade, or do you actually think they're going to use them as pay-fors for their tax cuts, which would then mean that the sequencing has to be in parallel?
I think it's the latter. I think the administration perceives tariffs as a way to pay for some of the tax cuts that are going to come through. But I think what they forget is that tariffs are going to go one way. It's either going to impact the consumer, so companies will pass the cost on, or it will put some pressure on corporate margins. So I think that probably is a misguided sort of focus. But I do think their perception is that it'll pay for some of the tax cuts.
So if this is your base case, what does someone like Scott Bessent at the Treasury mean for that impulse that some other members of the administration might have when it comes to tariffs?
Yeah, so I think the initial reaction is that he's more of a pragmatist. But we have to realize that Trump won the popular vote. So I believe from his perspective, he thinks he has a mandate. And he, as he said before, his favorite word is tariff. So I think, Bessent, his perspective is he would like to ease things in, but I feel like Trump is going to want to implement that policy.
Are these tariffs a bigger problem for the rest of the world than they are the United States?
I don't think so. I think it's a problem for everyone because I think naturally you're going to get retaliatory reaction from other countries. I think when we look at the first administration, the retaliatory tariffs actually impacted the U.S. exporters disproportionately to the importers.
These were some of the farming producing states, agricultural commodities. They were the big focus then. Should we be focused on anything else?
I think because tariffs are across the board, I think everything should be a focus. I think it's going to be, a real different sort of scenario. We're at a very different starting point.
You're really expecting those blanket tariffs that have been promised on campaign trail. You think they could become reality?
I think so. He promised it. He won the popular vote. I believe, that's what he campaigned on. That's what kind of drove him into the White House. And I think he's going to continue to focus on that path.
So just to sort of put a bow on it or underscore what you're saying, is that the dose of reality that you think will really curtail what could be a Santa Claus rally in this melt-up?
I think so. I think, markets are sort of waiting for the clarity on that. I would augment that, obviously, with just the fiscal spending. We already have structural deficits. So all of that combined, that's something the Fed's going to have to focus on. And when they have to pause for that reason, it could cause some risk off.
Who's the biggest loser in a trade war?
I think the biggest loser probably, I would say, China initially, because their economy is already pretty weak. They've planned for it, I'm assuming, but they still are in a very vulnerable position. I would say outside of that, I think Europe is very vulnerable as well.
No, appreciate your time. Thank you, sir. No, Dixon there, State Street.
Pleasure.
Europe's vulnerable. We heard that from Jane Foley of Rabobank earlier on this morning. It's why she thinks euro-dollar can drop towards parity as we work our way through next year. This just dropped from Barclays. Bridled enthusiasm. They say unbridled enthusiasm, question mark, hold your horses. They go on to say the macro is slowing to still healthy levels, should support more US equity upside next year, albeit a deceleration from 23-24's breakneck pace. The outlook for 2025, price target on the S&P, Lisa, raised to 6,600.
Which seems to be kind of the median. We got that kind of range from Lori Calvasina over at RBC overnight. She basically set that target at 6,600 as the median, 6,200 to 6,700 as the range. Scott Rubner of Goldman Sachs saying 6,200 for year-end this year, saying, I don't think that many will be eating turkey on Thursday and then shorting the S&P.
This other line from Barclays, go bigly or go home, which is a line I like. Okay, they win the morning with that line right there. Let's give you an update on stories elsewhere this morning. Here is your Bloomberg brief. Macy's is delaying its third quarter earnings due to an investigation. The company saying a single employee responsible for small package delivery expense accounting intentionally made erroneous entries to hide about $132 to $154 million of expenses. Macy's saying the employee no longer works for the company. Let's stop recovering. It's down by 0.7%. And wait for this. I didn't make this one up. Apparently this is real. Glickard.
Oh, God.
Get it? Glickard.
No.
Leading a massive weekend at the box office, Wicked and Gladiator 2 brought in a combined $170 million in US and Canadian theatres. Wicked took the top spot with $114 million in ticket sales. Gladiator 2 brought in $56 million to finish second. And finally, President Biden participating in the annual turkey pardon at 11 a.m. this morning. Turkey's Peach and Blossom will get a mealtime reprieve from Biden and then return to live out their days in Minnesota. It is believed that Abraham Lincoln was the first president to pardon a turkey back in 1863.
So I love NPR this morning. A lame duck president will pardon a turkey. It's a tradition. I always wonder what people outside of the United States think of this. Like, what is going on in America?
Have you been to this before?
I've seen it from afar.
Okay. Just didn't attend?
Didn't attend.
You're like one of those that stood by the fence and watched it happen?
Yeah, or from a video, forced to talk about it. But there's no policy involved in this. So to be honest, I'm just not that interested.
Just a bit of fun before the holidays, AMH. Lighten up. Up next on the programme, setting you up for the day ahead from New York. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
6 at the front end of the curve, and that unlocks some real dollar weakness. Euro dollar session highs up by 1 full percentage point and taking out 105.18 on the euro. As we count you down to the opening bell, here's the trading diary, the calendar for the next few days. Tomorrow, we'll get Nordstrom earnings after the closing bell, plus the eco data parade kicking off with consumer confidence, new home sales, and Fed minutes on Wednesday. We'll get durable goods, core PCE, and another round of jobless claims on Thursday, of course. U.S. markets will be closed for Thanksgiving. They're open this morning, and one stock to watch is Macy's. The shares falling in the pre-market earlier, still down by 1.2%. The company delaying its third quarter earnings after an investigation revealed a single employee hid tens of millions of dollars of expenses. Bloomberg's Emily Cohn joins us now for more. Emily, good morning.
Good morning.
What on earth happened here?
We don't know too much yet. We know one employee is responsible for allegedly hiding more than $100 million in expenses. The company was due to announce its earnings tomorrow. They delayed that. They gave us a preliminary look. The stock fell dramatically when this came out, and the losses have pared a bit now that people have realized the limited financial impact of the probe. But we don't know a whole lot yet.
Is it going to actually be to everyone's advantage, analyzing the company, that they're going to be releasing after the Thanksgiving holiday, after the parade, when we get a sense of what Black Friday was like?
That's what I'm hoping for. So the fact that they're delaying their earnings can actually tell us a little bit more about the American shopper, the American consumer, anything about the economy. Macy's is often seen as this barometer of how the mass market American consumer is faring. And how those consumers are spending during the holiday shopping season is going to tell us a lot about the American consumer. It's kind of nice that now their earnings are delayed until after Thanksgiving, most likely. We actually don't know when it's coming. I think they said sometime before December 11th. But if it's after Thanksgiving weekend, we might actually get a little bit more color, a little bit more of a preview on how holiday shopping is looking. In the preliminary earnings today, Tony Springs said that November comp sales are trading ahead of 3Q across all their brands. But that should be expected given where we are in the holiday season.
In general, how is the holiday season looking?
It's starting off okay, nothing stellar, but this is the week. This is the big week. I think a lot of stores, you know, the holiday shopping season this year is interesting. It's going to be shorter than ever because Thanksgiving's falling so late in the calendar. So we saw a lot of those sales start in October this year, even into the summer months. So starting off okay, but we'll see a lot more later this week.
Is the parade still happening? It's all Anne-Marie wants to know.
I believe so. I haven't heard anything otherwise.
This one rogue employee is not ruining the parade.
Can you imagine? That would be quite the statement. He killed Snoopy.
Emily, it's good to see you. Thanks for
you so
dropping by.
much.
Still trying to work out what's happened here over at Macy's. Emily Cohn there, that stock is down by about 0.9%. Coming up tomorrow, a big lineup for you. We'll catch up with Stuart Kaiser of Citi. Matt Lazzetti of Deutsche Bank is the one to watch. Matt Lazzetti of Deutsche Bank thinks that maybe you get another rate cut in December, and then this Federal Reserve is done for the whole of 2025. So looking forward to catching up with him. Then we'll catch up with Liz Ann Saunders of Charles Schwab and Sarah House of Wells Fargo. As we count you down to the opening bell, this equity market is starting to rip. Equity futures right now on the S&P 500 higher by 0.75%. A big rally in the bond market, yields are lower by 8 basis points, 432. And in foreign exchange, some dollar weakness. The euro reclaims 105. A thank you for a Thanksgiving over at Scott Besson's house, maybe. From New York, this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
You are also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Markets are ripping. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Katie Greifeld. Sonali Basak is off today, and Bloomberg Open Interest starts right now.
Coming up, the Besant trade. Markets are betting the Wall Street veteran will be able to force stability inside Trump's administration. And we have shocking news from Macy's, the retailer delaying its earnings report after an employee hid over $100 million in expenses. Plus, Amazon is working on one of the tech industry's most ambitious moonshots, loosening NVIDIA's grip on the market for AI chips. So a lot to talk about on this Monday morning, a shortened week of trading, but it could be a big one, folks. Let's take a look at where the markets are trading. S&P futures up 0.2%, NASDAQ futures up just about the same. And I say that markets are ripping because we're excited about the Goldman Sachs note, Katie, that we could see a 4% gain this week on the S&P 500.
Well, we'll start this week, theoretically, and then rally through year-end. We'll see if that materializes. Right now, though, if we take a look at the individual stock level, we have to start with Macy's. Of course, it's delaying its third quarter results after an employee hid tens of millions of dollars of expenses. You can see shares currently down a little bit more than 1%. They had been down mightily right now. We'll talk about the fallout of all of that. But let's also talk about Bath and Body Works. It's surging after boosting its earnings per share forecast for the full year. You can see shares surging as well, up more than 20% pre-market. And then finally, we have Rocket Labs, also higher. This is after the satellite company said it successfully launched its 56th Electron missile, Matt. That is good for almost 11% rally pre-market.
All right. That's a big deal, adding 11%, well, pre-market, right? But we'll see if it happens in the cash trade. The big deal this morning, the story that caught our collective eye was an earnings report from Macy's delayed because one employee hid over $100 million in shipping expenses. Why? And where were they hidden? We have so many questions, and we're joined by Bloomberg's Emily Cohen here on set to talk about it. So let's just get the basic facts that we know for sure. Macy's said no earnings report today, no call today, telling us with very short notice because what happened?
Well, we know one employee, and they say it was limited to one employee, hid more than $100 million in expenses. The employee made erroneous accounting errors to hide delivery expenses over multiple years. We know Macy's shares fell dramatically when the news first came out, about 8.2%, but losses have paired since then when it became clear that the financial impact of this is pretty minimal. But the company did announce preliminary earnings today showing a 1.3% drop in comp sales, which is slightly better than analysts had predicted. And hopefully we will learn more when they release their full earnings by early December, they said.
Yeah, so the results that they did release slightly better than expected, but then you compare it to Bloomingdale's, for example, they saw comp sales rise by 3.2%. But let's go back, of course, to this scandal. I think it's safe to call it a scandal.
I think so. $154 million in expenses.
That is a lot of dollars.
Yeah.
And we have a little bit of information, but what don't we know? What is the priority over at the desk right now?
So we are wondering a lot of things. First of all, how did Macy's miss this? I think it's going back to 2021. So that's many years, many quarterly reports where this money presumably wasn't accounted for. How was it missed? Also, where did all the money go? We don't know where that money went at this point. And then more generally about the company, what will its earnings tell us? An interesting thing about this investigation is it'll delay its earnings report until probably after the Thanksgiving holiday, after Black Friday. So that report might tell us a little bit more about the American consumer, the American shopper. Macy's is a place mass market American consumers shop. So anything it can tell us about how the holiday shopping season is going so far will be interesting to watch.
I can't believe Bath and Body Works has a bigger market cap than Macy's.
That's pretty amazing.
I would think Macy's is like the main American shopping center. Maybe I only think that because Bloomingdale's is right across the street, you know, and Macy's at Herald Square is like an American icon, but the business isn't as big as maybe one would think.
Yeah, and it has a lot of work to do.
Yeah, it certainly does. Emily, great reporting as always. That is Bloomberg's Emily Cohn. And just to go over the timeline again, Matt, I find this really interesting. So this went on from the fourth quarter of 2021 through the fiscal quarter ended November 2nd, 2024. Of course, we're learning about this now. I can't imagine what it felt like, of course, in the C-suite when they uncovered this, what the fallout must have been.
Yeah, I think it had to be pretty shocking. It sounds like they may have uncovered it over time, right? Because the employee's already been fired. So it's not like they found out last night and fired the employee this morning. By the way, they had net sales of $4.74 billion. That was just off what was expected, $4.75 billion.
Yeah.
But it is less than their market cap. So net sales for one quarter is bigger than the market cap, $4.5 billion.
Yeah, it's pretty amazing, of course, and it's interesting that we got at least some numbers today. To Emily's point, maybe now we'll get a little bit more detail about what Black Friday actually resulted in when they do report earnings. But you were talking about how big they are. It's the largest U.S. department store chain by revenue. So your gut instinct was right. Macy's is super big, but smaller than Bath & Body Works.
All right, let's broaden out the conversation with Liz Young-Thomas, SoFi's head of investment strategy. And Liz, while we're talking about the consumer, let's just get your thoughts on how the American consumer is doing. I mean, Black Friday, is it as big of a deal? Isn't it pretty much a whole month now? What do you think?
Well, it does seem like Black Friday lasts at least a week. I started getting emails about Black Friday sales last weekend. So there are certainly promotions that go on. A lot of times during this point in the year, we start to speculate about the deals that are happening. Are there more deals happening? Are there deeper discounts going on? So far, and this is just anecdotal, but so far just as a consumer, it seems pretty normal to me. But I'm guessing that we'll start to hear that commentary pick up, that retailers either are or aren't discounting things more so than in normal years in order to try to move inventory. I think the big question about the consumer has not been whether or not the consumer is spending. We know the consumer is spending. The consumer has held up reasonably well considering everything that had gone on with inflation over the last few years, and the spending has continued, but perhaps some of the tastes have changed or the patterns have changed. So the big question for retailers, and that we have to listen to in results from these companies, is whether or not they've managed their inventories properly to adjust for those changes in consumer behavior.
Yeah, you're absolutely right. And we've seen inventories be a big issue in some of the other reports from the retail segment that we've already gotten. But let's broaden out to the broader index. Of course, one of the most read stories on the terminal right now is this call from Goldman that we're setting up for a year-end rally that could begin this week, that could culminate in 4% gains through now and the end of the year. When you think about where we are in markets, what we know and what we don't know at this point, do you think that a 4% gain through year-end seems reasonable?
Well, Katie, we're on our second year of over 20% in the S&P, so honestly, anything seems reasonable at this point. And we've got a lot of wind at our backs since the election, and obviously there was this big run-up in the market since the election, and then there was a little bit of a letting off of steam. Maybe we got a little ahead of ourselves, and I do think that there needed to be some rationalization of that immediate aftermath rally, because we still don't know exactly what the policies will be in 2025. We don't know about all of these announced nominees actually getting through. So there are still a lot of questions to be answered. But then obviously the announcement with the Treasury Secretary over the weekend is another boost of wind at Wall Street's backs because of his background. So I do think that it's possible that this rally continues through the end of the year. And I do think that there is still a lot of enthusiasm, not just continuing in the tech space, but obviously broadening out into other sectors, looking at cyclicality, expecting stronger growth in 2025 than we were before. I think the big thing that we have to pay attention to is that at the beginning of this year, you have to ask yourself, what's changed since the beginning of this year? What will be different in 2025? Obviously, a new administration. So the expectation of lower regulations and everything that we've been talking about for the last few weeks. But the other big thing that's changed is we have to remember in the beginning of this year, we were expecting 6 Fed cuts this year. It looks like we're about to get only 4. And then now the market is only pricing in another 2 for the entirety of 2025. So we have to do this in an environment where we're not going to have quite as much monetary loosening at our backs as another tailwind.
Does that matter, Liz? I mean, especially if the market's going to be powered by mega cap chip makers and hyperscalers. I mean, if that's the case, we don't really need rate cuts. On the other hand, if you're rotating into small caps, you probably do want rate cuts, right?
Well, so your question about if the market's going to be powered by chips and all of these hyperscalers, I don't know that that's the case in 2025. We've already seen a lot of the wind sort of come out of those sales, and those companies have done okay, but they haven't really been the big leaders of late. So that trend could continue into 2025, where you need a lot of other sectors and even other parts of technology, like the software space, to take over in 2025 and drive the markets higher. Now, it would take a lot for them to take over for the amount that those big tech names have already driven markets up. So I don't think we're going to get commensurate returns in 2025 like we've seen in 2024 and even in 2023, but we can find strength in other places. And yes, I do think the Fed cuts matter, but the last part of your question about small caps is really a matter of what do yields do in response? And we've seen this big rise in yields, the 10-year and the 2-year, but now we've got this yield curve that's pretty flat again. But we've seen this big rise in yields, which we know pressures small caps. So far, the market at large, including large caps, has been fine with this rise in yields. But there seems to be a mental threshold right around 4.5% on the 10-year, where the market doesn't like it anymore. And it starts to get nervous that yields are going up for the wrong reasons. Right. Things like inflation reigniting, deficits, so on and so forth. So I think we need to stay in a reasonable range for yields.
You make a great point, Liz, that you think about what the Fed has delivered, 75 basis points worth of cuts. It doesn't matter for the long end. The long end is doing what the long end does. And you do have that yield curve inverted once more, at least briefly this morning. But that brings me to my next question, which is when you're thinking about the small caps, the relationship with the bond market, what part of the yield curve should we be paying attention to? Is it the short end or is it longer out the curve?
Well, it depends on what the financing period is for a lot of those companies. So if you look at just corporate financing, a lot of times corporate bonds are somewhere between 5 and 7 years in maturity. So that's what we would consider the belly of the curve, or that sort of medium term between 5 and 10 years. The 10-year portion of the curve usually reflects what we think about the economy in the future. So is growth going to be strong? Is inflation going to stay anchored? So that 10-year portion, as you mentioned, is sort of operating on its own accord. The 2-year portion of the curve, which is believed to follow what we expect the Fed to do most closely, is likely what's going to affect small caps on a daily and weekly and monthly basis when you see fluctuations in the 2-year portion of the curve and shorter.
All right, Liz, always great to speak with you. Great to kick off the week with you as well. That is Liz Young-Thomas of SoFi. Meanwhile, let's get a check on these markets right now. Less than 20 minutes until the bells ring. You can see we have a rally and then some on our hands. The S&P 500 up about 0.8% pre-market. It just gets better from there. Your NASDAQ 100 up about 0.9%. And it's the small caps claiming victory so far this morning, up 1.3%, loving the bid that we're seeing in the bond market this morning. Now coming up, President-elect Trump's hunt for his cabinet members comes to an end. More on that next. This is Bloomberg. This is Bloomberg.
Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Who is the Vivian Tom clientele?
Yeah, power women, like the dragon. Dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, they feel that the power, the energy. So now they come back to the store and they buy more.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. Blackstone is agreeing to invest $3.5 billion to create a joint venture with EQT. The transaction will enable the U.S. natural gas giant to reduce its debt. The deal sets up a rivalry between Blackstone and Apollo as both firms push further into the corners of the market that have been long dominated by traditional banks and bond markets. And Scott Bessent, the hedge fund boss who's been picked to lead the Treasury Department in President-elect Donald Trump's next administration, has two words for you: economic lollapalooza. The Key Square CEO sees a coming global economic reordering, and he has wanted to be a part of it, obviously. A Connecticut couple is taking part in an organized retail theft ring that is alleged to have stolen about $1 million in Lululemon merchandise across several states. After their arrest, police found a dozen suitcases with $50,000 worth of attire in their hotel room, tags still attached. But let's turn back now to the politics story. Trump finally picks his Treasury Secretary. It was on Friday evening. Scott Bessent. Joining us now is Anne-Marie Horder, Bloomberg's chief political correspondent and co-host of Surveillance. So, Anne-Marie, the markets seem to be breathing a sigh of relief. This is somehow letting some steam out of the dollar, although Bessent had just written an op-ed about how Trump policies were going to boost the dollar, or did.
Yeah, I think you do see what the market is welcoming as someone who cares about fiscal spending and cares about the deficit in the United States, which you don't always hear when you hear about a ton of policies which are calling for tax cuts and higher tariffs. This is someone who actually cares about getting the deficit down. He's talked about this idea of 3 arrows: cut the deficit by 3% of GDP by 2028. Likely that might not be possible if you look at how much spending we have for things like Social Security and Medicare. He wants to unleash the equivalent of 3 million barrels of oil when it comes to energy, to have this pro-growth environment, which he says then with deregulation would boost GDP. So this is where his head is. I think the markets are also welcoming the idea. This is someone who has a deep understanding of how global financial markets work and actually made money looking at micro data and how that potentially would play out 6, 12 months down the line. Alongside Stanley Druckenmiller and George Soros, this is an individual, even though George Soros gets all of the love for this trade, breaking the Bank of England, it was Scott Bessent that did all the work about the housing crisis going on in England that led to that trade.
What an amazing career path, by the way.
Incredible.
You work for George Soros, and then you work for Donald Trump.
Well, Neil Dutta put it best when he said it takes a certain type of personality to both manage the individuals of George Soros and Donald Trump. And this is why I think the market is breathing a sigh of relief. It is someone who understands financial markets, going to be at the helm of Treasury. Potentially his one hurdle, of course, is going to be Washington speak and just how slow Washington moves compared to financial markets.
Yeah, Neil Dutta, of course, had some passionate notes last week. Have to imagine that he's happy with this Bessent pick. But let's talk about some of the policies, because some of them seem contradictory. You talk about this focus on the deficit. He said, though, that his first priority will be to deliver on Trump's tax cut pledges. So how do those two sort of cancel out there? How do you offset the two?
Well, they're going to have pay-fors. And a lot of Republicans in Congress, we know that Republicans have a sweep across the board when it comes to the House, the Senate, and the executive branch. So we are going to see Trump's plans likely get enacted. But there's going to be serious fiscal hawks who want to see the pay-fors and not all of these promises on the campaign trail when it comes to taxes. There's a slew of tax promises they promised. No tax on tips, the idea of no taxing on Social Security, expanding the child tax credit. There were
auto loan interest deductions.
There were so many of these promises. Not all of them are going to be policy, and part of that is going to be where the pay-fors are going to be. So I think when someone that says we're going to reduce the deficit, maybe not spend as much of the trajectory we're on, but also there's going to be a lot of Republicans in Congress that say if we're going to enact or even extend the TCJA, the 2017 Donald tax cuts, they want to see the pay-fors for that. And that's when tariffs come into place, because they've talked about tariffs being the fiscal driver to bring money in to make those offsets.
It's the growth part of the 3-3-3 plan, right? He wants to, have fiscal deficits be 3% of GDP. He wants to ensure 3% growth, and we're running now about 1% below that. And then, what's the third three?
Oil. Energy.
Yeah,
oil, 3 million barrels a day extra.
Equivalent.
Right?
Equivalent. So maybe it's not oil, but it's energy
so many
equivalent.
things that are outside of his remit as Treasury Secretary. It just isn't clear to me how he's going to make all these things happen.
Well, a lot is also unclear because it also depends on who President-elect Trump puts in at USTR, the individual who is going to really enact the 301 tariffs when it comes to, say, tariffs on China. We know Howard Lutnick will be at Commerce. They're in charge of the 232. His press release when he was announced made it seem that USTR would also basically report into him. But Terry Haynes talks about this cast of rivals, a cabinet of rivals. And if you have someone like Scott Bessent who's come out and said tariffs are going to be a negotiating tool, maybe it's you get to 60% 2 years and you do 2.5 every month. Xi Jinping tell us when it bites to try to get back into what they would call free and fair trade, or is it going to be blanket tariffs? And I think until we have the full picture of who's in the cabinet, it's going to be difficult at this moment for the market to really digest and understand what policies are going to be the ones that they emphasize first out of the gate.
Well, at least for right now, markets seem to be embracing the picks that we've gotten so far. The 10-year Treasury yield falling below 4.30. Anne-Marie Horduran, great to see you. That is our chief political correspondent and the co-host of Surveillance. Now, coming up, RBC strategist Lori Calvasino weighs in on Trump's Treasury pick. She sees the S&P 500 at 6,600 by the end of 2025. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg.
All right, welcome back to Bloomberg Open Interest. Let's get you a check on futures right now, and it looks pretty good. The S&P 500 currently up about 0.7%. Big tech, even better. The NASDAQ 100 up about 0.9%. But the star of the show right now is your small cap index. The Russell 2000 up about 1.2%, helped by what we're seeing in the long end of the Treasury curve. 10-year yields down 10 basis points below 430 at one point, of course, giving a bid to those smaller companies. Then you take a look at Intel. This is interesting. We have some breaking news from CNBC that Intel and the Commerce Department are close to finalizing roughly $8 billion grant for the chip maker that should help support their chip manufacturing expansion. You think about what companies really need money right now. Intel is pretty close to the top of the list, Matt.
Yeah, I mean, anybody trying to challenge NVIDIA, and we have a great big take on Amazon trying to do just that, really needs a lot of money, or anyone building a large language model. I think it's interesting that you have a re-inversion of the Treasury curve. You mentioned the 10-year at 430 or under 430, and it still is. The 2-year is over 430.
There you go. A lot of Fed expectations in the front end. What's going on in the long end? Bond investors are thrilled about Scott Bessent. Coming up, we'll talk about all of that and more with Lori Calvasina. She joins us at the Market Open.
The leader in technology for as long as you have been. Do you think AI is just as landscape changing as everyone else seems to think it is?
Sometimes things are overhyped. I don't think that AI is overhyped.
I think Etsy is uniquely positioned to benefit from AI. Finding that needle in the haystack is tricky. That's part of what makes Etsy both delightful and frustrating to people. And being able to serve the good stuff to the top fastest is where AI can really benefit us.
Our mission is keeping commerce human, and actually we talk about AI as helping us to be superhuman. It's really the partnership between AI and humans that makes Etsy work.
AI can help Etsy's customers personalize their searches and steer shoppers more directly to items they may want to buy. It's also helped the company improve reliability by predicting delivery times more precisely. But that doesn't solve a larger challenge, getting more consumers to think of Etsy more often and ultimately become repeat buyers. To this end, Etsy invented gift mode.
Getting in the top of mind consideration when you're thinking, I have a gift, I'm going to go to Etsy. Just getting that to be more habitual. Gift mode provides a perfect opportunity for that. We get to know the gifter, but we also get to know the recipient. So it's a way to, sort of a more viral way to bring in more, introduce more people to Etsy.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We are moments away from the start of trading, kicking off this week with futures in the green. I'm Matt Miller. Welcome to Bloomberg Open Interest. We're looking at a 0.7% gain on S&P futures this morning, 0.8% gain on NASDAQ futures, Russell futures even higher on optimism that Scott Bessent as Trump's Treasury pick will bring some stability to policy and thus the economy and the market. You hear the opening bell ringing on the New York Stock Exchange, Global Ship Lease ringing it there. Over the past 5 years, that company's stock has tripled. But it's all about the window. If you've invested over 10 years, you've earned zero money, even with reinvested dividends. Here, you've got a SPAC, YHN Acquisition Limited, ringing the bell at the NASDAQ. They just started trading, and they haven't really changed in terms of the share price. In terms of the major averages, they will be changing. They will be going up this morning. And Goldman Sachs' Scott Robner says we could see a rally into the end of the year, 4% gain, 6,200 is their target.
At least for right now, the market is agreeing with them because you can see the lines, the arrows are pointed higher. The S&P 500 up about 0.6%. We were higher pre-market, but we'll see what happens. Same thing, too, if you take a look at the NASDAQ 100, big tech up about 0.6%. Double that if you take a look at the small caps. The Russell 2000 is your leader at the moment, up about 1.2%. This comes back to what we're seeing in the bond market, that bid coming into the long end of the Treasury curve, helping to support small caps right now. We'll see how long that is sustainable. But let's take a look under the surface because we do have some individual movers, and we start with Bath & Body Works. It's jumping higher after beating earnings expectations. It also raised its sales outlook for the year. That is good for an 18% pop at the open, but we're also keeping an eye on Intel here, jumping on a report that it's close to finalizing a roughly $8 billion grant from the Commerce Department, a grant, of course, that Intel pretty sorely needs, of about 1.5% so far, Matt.
All right. Well, finally, Macy's delaying third quarter results after an investigation revealed an employee hid up to $154 million in expenses. For a closer look at Macy's stock, let's go to Bloomberg's Abigail Doolittle. Abby?
Well, it is really pretty extraordinary that the stock on these headlines only down 3%. This probably has to do with the fact that it did not hit their cash management issues or their cash management period or vendors. In terms of what happened, an ex-employee basically made intentional accounting errors around starting back in 2021 that equal up to $154 million. This employee did work in the small package delivery expense accounting, but again, Macy's is saying when they were putting together the earnings, that was supposed to happen, but is now delayed until December 11th. They found this error, but did not hit cash management practices or vendor payments to what they can tell. As for Macy's, let's take a look at what the real heart of the story here is, because this company's been struggling. Same-store sales, well, they are really in a slump. If we go into the Bloomberg terminal, we're going to see quite a bit of red here. Now, back in 2021, actually, when those accounting errors, those intentional accounting errors were made, you can see lots of green, but basically since the third quarter of 2022, for the most part here, lots of red. So this is the real thing that Macy's has got to do, get these same-store sales boosted in the right direction, Katie.
Yeah, an incredible scandal later on top of some pretty weak fundamentals. Macy's shares down about 22% year to date, including today's loss. We'll have to continue to follow that story. But let's broaden out the conversation right now, because sitting to my left is Lori Calvasina. She is RBC's head of U.S. equity strategy, and she sees the S&P 500 rising to 6,600 by the end of 2025, just introducing that target. And Lori, it's interesting because you take a look at where Wall Street is right now, the sell-side community, it seems like that number is pretty much the level that everyone's decided on. Talk us through the math that gets there, because I think that's about a 12% gain.
Yeah, I think it's maybe about 11% versus Friday's close. I had to keep repricing this as I was writing it and editing. Look, I think there is a reason why we're all sort of clumping around the same number, and I'll be honest with you, I don't like being where everybody else is. So we actually gave this quite a bit of thought, and that's just where the math leads us. And at this point in time, I think that there is a little bit of fog in the outlook regarding the economy specifically. And just to give you a sense of my math, I have 5 different models that contribute to that 6,600. That's basically the median, and I have 2 models that are right in line with that. But one of my tests is the economic test, and it's just how do stocks do in different GDP environments. And guess what? 1% to 2% GDP tends to see a decline of more than 3%. It's a very mixed environment. You're only up about 40% of the time, and that's where the consensus is right now, but is actually acting like it's trying to move out of that. So literally the consensus is at 2% right now. And if you look at 2.1 to 3%, that's quite a strong environment for stocks, where we're up about 11% on average, and you're up most of the time. And so
we're on the cusp.
We're on the cusp, and right, it could turn lower, right? And I think economists, I'm not an economist, thank goodness, but like I think economists are sort of struggling with how strong the economy is going to be next year. And I keep, if I think back the last couple months, they keep talking about slowing growth, all these headwinds. And as a strategist, I keep saying, well, we keep being too pessimistic, and we keep having to dial up the expectation. So I'm leaning in that direction, but admittedly, it's a very tough call.
Well, I mean, if you believe that we're going back to the business of business, as Ken Griffin said about the next Trump administration, if you believe that the tax cuts will get a continuation and maybe even more will be added in, it's got to be animal spirits driving the economy higher than 2% GDP growth.
Right, and so we're giving the market the benefit of the doubt on that we're going to be able to get over that hump. We don't know exactly how strong, but we bet we're going to be able to add, a little bit more.
Not to mention, Lori, by the way, the spending on AI is looking very real. And the expectations are for CapEx of, what, $2 trillion, I'm sorry, in the next 5 years. That's from Moody's. Even if that's aggressive.
Right. I think that the issue with the AI trade, right, is not that it isn't real. I do think, as my team and I sort of say amongst ourselves, and we've written this in our weeklies as well, it does seem like some of the examples from the end customers are kind of small potatoes or underwhelming so far. So I think there's a little bit of maybe dampening of enthusiasm in the short term. How additive is this going to be to broader corporate profitability in terms of those end results? But I do think it's real. I do think you also, though, have those mega cap growth names, a lot of them AI centric, right, have seen these phenomenal growth rates, and those are just decelerating. So that causes some indigestion. But to go back to your comment, Matt, on the animal spirits, I think that's something else that's a little bit of a struggle right now. If you look at the CFTC data on U.S. equity futures positioning, we are hitting new all-time highs. And if you look at Russell 2000 specifically, which is a proxy for the animal spirits on the Trump trade, we came into the election at the levels we had seen back in 2016, 2017, and 2018. Right. And so there is a lot of good news already baked in. And if we go back to my fog comment, I think even on the policy side, we know there are some tailwinds. Those tailwinds are well understood in terms of regulation, animal spirits, status quo, maybe a little bit more on taxes down the road. It's going to take some time to figure that out. But how expansive are those tax cuts going to be? Is it going to be for every corporation or just domestic producers? And then what about the tariffs? And I know we got the Treasury pick today, and I think that's a great market tailwind. I think that's a really good pick for the market. Right. But we still don't have clarity on exactly what this tariff policy is going to look like.
There's a lot to dig into there. I do want to talk a little bit more about the AI trade itself, though, because Matt and I were actually talking this morning that you take a look at the Philadelphia Semiconductor Index, it's only up 19-20% year to date, which I found kind of shocking because we talk about NVIDIA all the time. But are we seeing that broader participation in the AI trade, or is it NVIDIA basically carrying everyone on their back?
So I think a lot of it is just, kind of the biggest movers dragging everyone else along. And I'll say I have been keeping a close eye on the semis, and they've actually, if you look at the median PE multiple relative to the broader market, that median PE has been a little bit elevated, and you've had negative earnings revisions. And so it actually has been, sort of one of the more problematic areas of the tech space. And I've been neutral on tech, and so we've been watching it, really trying to get a sense of when is going to be a time to move back to an overweight. And that semi industry is just not cooperating on my model right now.
I also do want to get into tariffs because we've had a lot of retail CEOs on the show in the past couple of weeks, including the CEO of Brooks, including the CEO of Shark Ninja just last week, who were saying that the impact of these tariffs, launching all of those products. I'm waiting for the Shark Ninja car, but they're telling us that these tariffs are a real issue, that basically you think about how it's just too expensive to produce in the U.S., so someone is going to have to eat the cost. How are you modeling that in?
So, we're not baking it in right now, is the honest answer. We did spend a lot of time in our outlook that we put out this morning talking about the bear case, and one of the things we put in for our political test was the stock market performance in 2018, which was the only down year of the Trump presidency. We lost like 20% peak to trough. The whole year was only down about 6%. There was other stuff going on as well as the Fed. But, in our sector discussions, we've really been reminding people, things like industrials, materials, some of the areas people have wanted to play on Trump optimism recently, they got hit very, very hard. I'll tell you, Katie, the other thing, though, that I'm really concerned about in this tariff discussion, and I'll admit to you, I haven't really done a lot of reading over the last week, but that first week and a half after the election, I read everything I could get my hands on from company conference transcripts, earnings call transcripts, and I looked really close at the tariff commentary. Most of the companies are trying to reassure investors and say, hey, look back at the China trade war. We managed through that. We've diversified our supply chain. I can't tell you how many quotes I read where companies said we only have X% in China now. But I don't think that's what we're talking about this time. If you're tariffing everything and it's too expensive to produce here, at least in the short term, and by the way, it takes time to readjust supply chains, that is going to be a problem if these are really broad-based. And that's not what we went through before.
I will tell you that, have you used the ECAN function on the Bloomberg terminal, ECAN Go?
Matt is paid by
No, but I'm gonna. I can give you like my 5 favorites, but not that. I haven't tried that.
I
one
will
yet.
just tell you that we now have ECAN functionality that allows you to graph how many mentions of subjects, for example, tariffs is one of them, are brought up on an earnings call, and then you can break it down into industry. So you could see, for example, so Katie could see like running shoes, how many running shoes CEOs are talking tariffs. By the way, the S&P 500 has just hit a new intraday record. So we're climbing to heights that we've never seen before, and Scott Rubner at Goldman Sachs said he's put in an order for his SPX 7000 hat. Think we see that next year?
I don't know. I'd be curious to know what David Kostin says about that. But that, I thought his target was something like 6,500 or for next year or something like that. But look, I think, there are those of us who sort of live in the derivatives world, which I think he's from. I'm not familiar with him. But I will tell you, I always tease my own derivative strategist, Amy Wu Silverman, who's fantastic. And I always say, and I always say, Amy, like she lives in the tails. I can't live in the tails. I have to live in the base case. I have to live in what I can model. And, we certainly do know that, we woke up this morning and it felt like the animal spirits were back on. I think a week ago it didn't feel like that, so that's definitely a decent change. But I will also tell you that I remember early 2018, and we had just come off that euphoria of tax reform in 2017, and the valuations were looking stretched, and the positioning was looking stretched, and then we ran into the low vol unwind, and then we ran into the China trade war, and we had an entire year where people were talking about how worried they were about the QT unwind and the Fed cuts having gone too far. So when you're at elevated positioning, when you run out of room on valuations, sometimes things break and it's not pleasant. So I would keep that in mind. That's the world I live in.
Good reminder.
It's a good place to leave it. I would love to be a fly on the wall for those robust discussions that you have with Amy, but we have to leave it there. That is Lori Calvasina of RBC Capital Markets. Now, coming up, Amazon is taking on NVIDIA in one of the tech industry's most ambitious moonshots. We'll have the details next. This is Bloomberg.
the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're gonna get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Well, Amazon is going toe-to-toe with NVIDIA. It's building its own chip-making operation to turn data centers into giant AI machines in an attempt to reduce its reliance on NVIDIA. Joining us now for more is Caroline Hyde, the co-host of Bloomberg Technology. You think about what that would mean for NVIDIA. It's super bad because NVIDIA really relies on, it feels like just a handful of mega cap tech companies funneling billions of dollars at it.
And all of them are trying to make their own chips.
Yeah.
Microsoft's the latest to the party. They've only really started in the last year or so. Both Google and Amazon over the last decade have been trying to make internally their own chips for particularly artificial intelligence and machine learning. But many would say the point is supply so underruns demand that they love NVIDIA. This is a frenemy game. This isn't we will try to never be dependent on you. It's just they want to free up some of their NVIDIA bandwidth for some of the most integral AI work that they do for their clients so that they can depend on, for example, Inferentia and their own Trainium chips for their internal work more broadly.
It's fun to know that Amazon invented the cloud.
Yes, exactly.
So they kind of started this whole thing, and they don't have their own LLM. They don't have a Claude or what do you call Facebook's Iguana or
Llama.
Llama, exactly.
Pick an animal, any animal.
Or a Chat GPT. They don't have those things.
Yeah, they've been agnostic. It's kind of been a business model proposal of theirs. Is come to Bedrock and choose whichever one is more fit for your purpose. We're not going to busy ourselves building the underlying large language model. We're just going to offer everyone else's. But they've got closer and closer into bed with, for example, Anthropic, which makes Claude. They just put in another $4 billion. That was announced on Friday. Why are they doing that? Well, they want Anthropic to use their own hardware and indeed therefore helped improve the software with the chips. So they want Anthropic to stress test, and Databricks, another customer, to stress test the building of their chips, which are getting ever more sophisticated. So, for example, the likes of a Trainium 2 or indeed an Inferentia, use these, make them better, we can then scale them internally.
So strings attached, basically.
Take our money, but use our compute and use our chips.
It's a fair ask, but we tease this as basically a very ambitious moonshot by Amazon. You think about Amazon dominating almost every industry.
They're quite good at moonshots.
Exactly. Where do we know about how far they are when it actually comes to this effort?
Well, I think at the moment as we say, about a decade in the making, and they have made purchases of chip startups that they have then made internalized and built their chips on their own. This has been a moonshot in the making, but I think more broadly, this is now the third iteration, for example, of Trainium. This is where the rubber hits the road. Is this a sophisticated, powerful enough chip that not only offers you the hardware, energy efficient, cheaper to use, but also easily integrates in terms of software? Because that's where NVIDIA is so good. They are a one-stop shop. You don't need to particularly focus in and have to make sophisticated changes with your own engineering team to use an NVIDIA chip. Whereas Amazon at the moment isn't as easy to just plug and play. They need to get better and better at that so that people can adopt their chips more broadly.
But this is it. I mean, there was a great quote in the story about the 3-generation rule. Yeah. And the executive quoted said, "I've never seen anything go past." You know, it's the 3rd generation and it's a win, or it's the 3rd generation and it's
and you're
done.
out. Yeah. And does this investment ultimately pay off? For now, they're hoping it does, and boy, have they just been throwing everything at it. For example, the Anthropic deal. And this is ultimately why they want to offer. They win cloud customers by having the chips that are more energy efficient and more cost efficient for them. And they don't want to be reliant on NVIDIA in case there is a Blackwell supply chain issue, in case they are having to beg, borrow, and steal for their own compute power. There is a race on at the moment, and how much better would it be if you were in control of your own supply side? And so that's certainly why Google's been doing it too.
Well, it's fascinating to watch it unfold. I know you'll be all over it on Bloomberg Technology. That is Bloomberg Technology's co-host Caroline Hyde. You can find more of Caroline at 11 a.m. Eastern. But coming up on this program, Citi has a new strategy to prevent its bankers in its wealth business from leaving. Talking about higher bonuses. We'll give you more details next in our Wall Street Beat. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling.
Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Open Interest. Let's take a check of the stock market. 22 minutes into the session, you can see green on the screen and then some. The S&P 500, the NASDAQ 100 up by about 0.6%. But what an interesting and thrilling Monday this is, because you take a look at the Russell 2000 up by about 1.4%. You've seen some of the gains paired in the bigger indexes from where they were pre-market, but the Russell 2000 just gaining momentum here, Matt, up 1.4% on the small caps.
Yeah, these gains are fascinating, and the fact that we hit an all-time high.
That's cool, too.
In intraday terms, you know, I read the Rubner note, or Scott Rubner note.
Rubner, we should check on that.
I'll double check on the name, but I read it first, I thought, this week.
Yeah, that'd be huge.
6,200, but I guess the idea is this year.
Yeah, the year-end rally, according to Scott Rubner, is that this year-end rally will start this week, continue on to about 4% gains by the end of this year, and he put it out at a good time because markets agree with him so far.
And then he said, by the way, that continues into January, usually up until the inauguration, and then good years follow good years, so he bought he ordered an S&P 7,000 hat. All right, time now for Wall Street Beat. We are looking at how Citigroup is using bonuses to buy time as it undergoes a revamp of its wealth business. Bloomberg's Todd Gillespie joins us now with the scoop. So we love to hear about bonuses, and it's better if they're bigger. What's the story?
Totally. Bankers do as well. Yeah, I mean, basically, Citigroup now, you know, as you know, going under a major revamp under CEO Jane Fraser, she's really made the wealth division a key pillar of this turnaround for the bank, which, as we know, has lagged Wall Street peers for years, since the financial crisis in particular, and has never really been able to find its footing. Particularly in the wealth business now, she's hired Andy Sieg, you know, a very respected manager from Bank of America who ran Merrill Lynch there. He's now been forced to compete with varying interests, varying people leaving the bank, and also a lot of competition from a really ferocious industry where we know Morgan Stanley, Goldman Sachs, JP Morgan are heavily investing in their franchises as well.
So what is he going to do differently, though? Because this has been an ongoing story about the wealth business lagging. What's his plan to actually turn things around?
Yeah, it's a good question. I mean, Citi is really trying to lean into its Asia strategy in particular. You know, it caters to a lot of these emerging billionaires, millionaires in countries like India and China, and is now really trying to gain more and more wallet share from those kinds of clients, bring in those investment assets, and grow from there, grow that franchise that way. In its wealth at work business, it also caters to professional services firms like law firms, accountancy firms. It's also trying to expand that across, you know, into Europe, into the Middle East potentially as well, and into Asia.
How do bonuses look? How does bonus season look in general? Is this a good year?
Bonus season in general, I think, is definitely a good year compared to the past couple of years for most people across Wall Street. Here we're talking largely about retention bonuses right now, which aren't quite the kind of bonuses the banks are going to want to be handing out right now. So yeah, we'll see. A lot of these people are going to be, you know, well in their place into the new year. We always see a lot of, you know, volatility on the market, movement around folks around that time. So we'll see how long this, you know, how strongly this pans out for Citi.
All right, great to have you on the show. Thanks so much for joining us today. Todd Gillespie from Bloomberg News, covering Citi, covering the bonus story for us. Coming up in the next hour, Paul Quincy joins us, JP Morgan Asset Management, and we have the CEO of H&R Block, Jeff Jones. I suspect we'll talk a little AI with Jeff, and maybe with Paul as well. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. It's the Monday before Thanksgiving, and we're in the thick of holiday travel. This man's flying from Newark Airport to Cameroon.
It's going pretty well. I really have not faced any issues, and it's been pretty smooth.
CBS's Chris Van Cleve.
The FAA says the number of scheduled flights will peak Tuesday with more than 50,000, but the airlines expect Wednesday and Sunday to actually see the most people, with next Sunday potentially setting an all-time record.
A job action could slow things down at a busy airport in the South.
Private contract workers at Charlotte Douglas International Airport in North Carolina are on a one-day strike. They want better pay. The workers clean planes, restrooms, and gate areas, along with helping passengers with wheelchairs.
The wages got to be more so everybody can have what they need to survive or to live. We're surviving, but we're not living.
Most of us are homeless, are living from paycheck to paycheck, and for the jobs we do, that's not right.
The striking workers make between $12 and $19 an hour. Jim Crisula, CBS News.
A Supreme Court defeat for big tobacco. Justices have refused to decide whether federally mandated warnings on cigarette packs that include graphic illustrations of the risks of smoking violate the free speech rights of companies like R.J. Reynolds. The FDA issued the rule in 2020. More than a dozen people are missing after an Egyptian tourist boat sank in the Red Sea. CBS's Vicki Barker is at the foreign desk.
Egyptian officials say 28 people have now been pulled alive from the water. They're undergoing medical treatment. But 17 others are still missing after the 144-foot yacht, the Sea Story, went down 2 days into what was to have been a 5-day diving trip to the Red Sea's fabled coral reefs.
The National Association for Business Economics is out with its new forecast. NABE economist Ken Simonson.
They're expecting a further slowdown in inflation at the consumer level. The Consumer Price Index has already slowed a good deal.
You might want to avoid using your store credit card. Eye-popping interest rates could have you paying well above 30%, thanks to hikes ahead of Fed moves to lower bank rates. CBS's Kelly O'Grady.
Some of these retailers like Athleta, Big Lots, they raised them 5 percentage points. So that might have been going from 29 to 34. And so the argument is, well, they knew these decreases were coming and they wanted to ensure they kept that profit margin.
The Dow up 492 in early trading as investors cheer President-elect elect Trump's pick for Treasury Secretary. Hedge fund founder Scott Bessent says his priority will be delivering on Mr. Trump's tax cut pledges. S&P up 37. This is CBS News. Orlando will celebrate its women's soccer champs with a victory parade today.
It took just one goal for this to happen.
It is Orlando Pride!
Longtime Brazilian and Orlando Pride star Marta.
Magic moment for me.
And for the fans who went to Kansas City for the championship game, ecstasy.
They've never been able to do it. This is the first time. It means everything. We've lost our voices.
I'm so excited. As a matter of fact, I didn't get any sleep last night. Yes, I'm running on adrenaline right now.
This afternoon's parade will run through downtown and end with a ceremony at Orlando City Hall as people are getting out of work. Peter King, CBS News, Orlando.
A recall of what were supposed to be tortilla strips. The FDA says Sugar Foods swapped them out with fried onions in 3.5-ounce pouches of its fresh gourmet Santa Fe style strips. Potential problem for people with gluten issues because the crispy onions contain wheat. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fats?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're also streaming on YouTube. You can head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. Markets trading higher today. We've got Katie Kaminsky going to join us, a Chief Research Strategist and Portfolio Manager at Alpha Simplex. Get her thoughts on these markets. Ira Jersey, Bloomberg Intelligence. He's the rate strategist over there. What is his Federal Reserve going to do at that December meeting? Because we have a lot of economic data coming up this week and certainly influence where the Fed goes. Lento Tang, Bloomberg Intelligence, European banks analyst. We got another potential M&A trade going on over in Europe, and that is a good thing, I think, for some of those banks over there. So we'll break that down. But let's kick everything off like we do right here with Miss Lisa Mateo for a Bloomberg Business Flash. Lisa.
We got it in this Bloomberg Business Flash, brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest at ibkr.com/RIA. All right, we've got a nice lift to the markets this holiday shortened trading week, but it's not short of economic data. Today, we learned the Chicago Fed's National Activity Index that dropped to a 9-month low. October's weakness was across the board: employment, consumer spending, and housing. Now, tomorrow, we get the minutes from the Federal Reserve's latest meeting. That's along with new home sales and consumer confidence. Then Wednesday, it is the Fed's preferred inflation gauge, the PCE index, as well as consumer income, durable goods, and also that weekly report on initial jobless claims. So we have the Dow up more than 1% at 444 points at 44,740. We have the S&P 500 up 0.5%, 34.6 thousand at 3. We have the Nasdaq up 0.5%, 99 points at 19,100. 102. We have the 2-year yield at 4.30%. That's down 7 basis points. The yield on the 10-year 4.29%, and that's down 10 basis points. To currencies, we have the Bloomberg Dollar Spot Index down 0.4%. We have the Japanese yen, euro, British pound stronger, and we have Bitcoin just over 95,000. Shares of Macy's, they're down about 4%. It said it's going to delay the release of its third quarter earnings. This was after an investigation revealed that an employee hid tens of millions of dollars in expenses. And then you have Bath & Body Works. On the flip side, they're up 17%. It boosted its earnings per share forecast for the full year. We have more retail earnings on tap this week. Best Buy, Abercrombie & Fitch, Kohl's, Nordstrom's. After the bell today, though, we're going to hear from Zoom Video Communications. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Guys, 52 potential record closes today. If we close above 6,001.35.
Okay.
We're already at 51. We're at a record high for the S&P. My thing is, you get, 6,500 or 6,600 is where we sit for most strategists now for next year. When do they start revising that puppy up now?
As soon as the market goes higher.
There we go.
There's no, that just kind of ride the wave.
Ride that wave. All right, let's ride the wave now with Natalia Knežević, a Bloomberg Equities reporter, on some of the companies that are on the move. Let's go with that Macy's story. I'm still trying to understand it, and I wager no one really understands it yet, but this was a surprise.
It is a big surprise. And for me, it's also a question, what if this is happening across other big retailers, but those companies basically don't know about that? So what happened? Macy's said that, first of all, they delayed earnings release, and they said that an employee who is no longer with the company over several years, he was hiding some expenses. So basically, he was making incorrect accounting accruals for, he was responsible for small package delivery expense accounts. And basically, he was hiding overall total amount somewhere between 132 and 154 million. That's a pretty big number.
That's something.
And the company said that there's no indication if it had any impact on cash flows or vendor payments. There are lots of questions still remaining. For example, how did Macy's miss that? Where did the money go? Hopefully, we will know about, more about that when the company finally delivers earnings results. But we do have some preliminary results. They show that comparable sales during the third quarter dropped 1.3%. That was slightly better than analysts had expected, but that was largely due to better sales at Bloomingdale's and Bluemercury, guys, which is cosmetics and skincare.
So the board, when the board hears this, they look at the CEO. The CEO turns and looks at the CFO, and the CFO turns and looks at his auditors and say, dude, what are we paying you for?
And the auditor looks at who?
That's where the buck stops, I think. So that'll be interesting to see, because you just don't see that anymore. When I first read the story, it reminded me of my early days when there was a couple of investment banks had bad trades because a trader literally put the trade ticket into his drawer and never entered it into the system because I lost money on the trade, and then before you know it, he got $1 billion hole there or something. They don't do that anymore.
No.
Electronics. All right, what else we got there?
Another consumer company, Bath & Body Works. So this stock is now up by 17%, better than expected quarter results, better guidance now, and some positive signals ahead of this holiday season. CEO said also investments in marketing technology are paying off, so they see some good response from consumers. Bloomberg Intelligence is saying that Bath & Body Works can potentially achieve this $10 billion in revenue, but it's highly unlikely that this is going to happen next year. And overall, yes, we do see some positive numbers, but guys, the stock is down by almost 30% year to date.
Yeah. I remember going to Bath & Body Works when I was like a kid. I guess they're a thing again, but
You have to invest in your face.
Invest in your face. Thank you very much. All right, Bluemercury says the same thing there for Macy's. All right, Natalia, thanks a lot. Natalia Knežević, Bloomberg Equities reporter, joining us, and all the things that are moving. Some of the things that are moving have to do with the bond market. You're seeing a pretty stellar rally here, particularly in the back end. Yields kind of dropping like a stone on the 10-year. We're looking at 4.29 is where we print on the 10-year. Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist, joins us now. So the headline is we're making hay about this because the new Treasury Secretary, right? And that's why the dollar is down. That's why yields are lower. Do you buy that thesis?
That's probably part of it. I think the single bigger thing is the idea that the economy maybe is slowing a little bit, and we did get very oversold. So when you look at some of the technical numbers, that 449 number that we hit last week was a very important technical level, and you had momentum had slowed significantly. So people are just unwinding. Remember, holiday shortened week, you're going to get more volatility than you would normally have. The announcement of a Treasury Secretary is probably really worth 3 bips, and then just less liquidity means that people are taking off shorts going into the holiday.
So, Ira, we're going to get a lot of economic data this week. I'm hearing more and more discussion from market participants when they think about 2025 that inflation may become a thing again, and that there might even be rate increases in 2025. When you talk to folks, what are you hearing these days?
So there is a very small but vocal group that thinks that there potentially might be more inflation and the potential for the Federal Reserve to undo some of the rate cuts that it's done. But when you look at the market and what the market's pricing, the market is not pricing for any rate hikes at all next year. And in fact, if you look at where options are pricing, the chances of a hike is just infinitesimal. But the idea that the Fed might only cut 1 or 2 more times, might only cut another 50 basis points, that actually is a very high possibility. And certainly if inflation, and it looks like inflation is turning upward again, you'd have to question how low the Federal Reserve would be able to cut. And certainly that's one of the reasons why the market has taken out 100 basis points of interest rate cuts that it was priced in just 6 weeks ago, right? So I do think that the Fed is going to still be a massive driver of this market. But at the same time, will they actually hike next year? You would have to see a massive shift in the economy, in inflation, and probably see, a pickup in job gains.
Are we priced for only 1 or 2 more cuts or a skip in December?
So yeah, the skip, we're less than 50% priced for a cut in December right now, which I'll pat myself in the back and give myself some props, because 3 weeks ago we had said that we thought that it was closer to 50-50 than 80-20 where we were priced a couple of weeks ago. So, we're only priced now for 3 total cuts as Fed funds futures and overnight interest rate swaps are currently pricing. Whether or not they cut in December, it's either December or January that the market's currently pricing for a cut, and not even 100% at that.
So what are bond pros like you, Ira, looking at from this economic data? Is it the PCE inflation type stuff that we'll get this week, or is it more the labor market these days?
So, well, I think it's going to be the labor market is going to be the primary driver. It has been almost always. It's certainly from a Treasury market perspective. The PCE data, the detail is important, but we pretty much know within like a tenth where that's going to be probably, because we already have the CPI and PPI data, and you can use that to extrapolate what the PCE deflator is going to be, again, within a reasonable margin of error. But yeah, next week's jobs report, I think, is going to obviously be incredibly important, particularly for what the Fed's going to do in December. If that report shows a negative print or maybe a sub 75K print, then that gives the Federal Reserve a little bit of comfort that, yes, the job market is slowing pretty substantially. We're below the replacement rate for workers that are leaving the workforce, so it would give them some impetus maybe to cut. But anything, 100 plus means that, maybe the Fed can say, hey, we're not going to cut this time, and we want another set of data and see how holiday sales go and see how the December job market was before they make a decision for January.
So are we looking at a flat curve, or are we looking at another inverted situation?
It's possible that we could invert a little bit, particularly if the Federal Reserve slows more. But remember, the only thing that inversion is telling you is that the market thinks that interest rates are going to be lower in the future than they are today. So our view is that we'll wind up with an upward sloping curve, but very modest, right? So you're talking about maybe 2s, 10s being between 0 and 30 or 40 basis points for the course of the year. We just put out our year-end 2025 outlook today. It's out this morning on the Bloomberg terminal. So we talk about the curve. We talk about how tips, that real yields, are what's going to be driving the market over the next 12 months, we think, as opposed to inflation and inflation expectations.
All right, Ira, good stuff. As always, Ira Jersey, he's the Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. He's down there in Princeton, New Jersey, safely ensconced at our BI offices there.
Yeah, it's going to be interesting just to see sort of how that curve plays out. And so much change, really, in terms of the labor data and then the inflation data sort of staying a little bit sticky at the end of the day. What's also interesting is what are you going to do with some of these AI stocks? You get the quantum computing stocks.
I saw that.
Did you see that?
Yes.
They're higher as a Amazon Web Service program, AWS program, is announced. We also have a great big take on the Bloomberg Terminal about how they're also trying to make their own AI chips. Super great. You should definitely read it. All right, coming up, we're going to talk more about the markets here with Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex. Also, Lento Tang of Bloomberg Intelligence will join us on European banks. This is Bloomberg Intelligence. Happy Monday.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
The Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have stocks climbing, yields, $1 falling. Traders kind of welcoming Donald Trump's pick of Scott Bessent for U.S. Treasury Secretary. Let's start with stocks, though. Almost every major group in the S&P 500 advancing. It's reclaimed after it reclaimed its 6,000 mark, heading toward its 52nd record this year. Right now, we'll check in with the S&P 500, up about 0.4%, 28 points at 5,997. The Dow up 0.9%, 430 points, 44,727. The Nasdaq up 0.3%, 75 points at 19,078. We'll head over to the 2-year yield, 4.30%, down 7 basis points. The yield on the 10-year, 4.29%, and that's down 10 basis points. To commodities, we have Brent crude down more than 2% at $73 a barrel. WTI crude $69 a barrel. We have spot gold down more than 3% at $2,631 an ounce. Bitcoin right now at around 95,000. Speaking of which, MicroStrategy brought another $5.4 billion in Bitcoin, marking its 3rd acquisition this month. Shares of Commerzbank down 5% in Germany. Investors betting that UniCredit's $10.6 billion bid for Banco BPM shows some interest in the German bank, shows that interest in that German bank is starting to cool. Banco shares down up 5% in Italy. And Amazon building its own chip-making operation to turn data centers into AI machines, reduce its reliance on NVIDIA. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our Interactive Broker Studio right here in Midtown Manhattan. Now, for those of you keeping score, like I am maybe, we're looking at another record high on the S&P on an intraday basis. Do we close that way? That's the TBD question. If we do close above 6,001.35, it would be 52 record closes for this year. It's a fun fact, right?
Yeah.
We like random information like that.
I like the MicroStrategy stock is up 550% year to date.
Yeah, but then there's the whole like Bitcoin play. Like now that you can do Bitcoin ETFs, is there a different ARB that you use for MicroStrategy? Because there's different ways you can play, not just the proxy.
Yep.
Anywho, let's get broader take on the market. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex, joins us. All right, Katie, this record high here, potentially another record high on the S&P. How long until we start to see re-upgrading of the S&P forecast for 2025?
I mean, this is exciting. I mean, it's a positive day. I was actually surprised. So I think, the last week or two, we've seen a little bit of retraction. And I think in general, the market is still parsing through some of the aftermath of the election. So I do think that people are forecasting, and I'm seeing more and more positive sentiment about equities, U.S. equities in particular, going into year end.
So when you woke up the day after the election, did you and your team, did you sit down and say, we got to redo our models here, we got to change some inputs? Did the market outlook materially change for you guys?
No, not at all, actually. And what's strange is that as quantitative traders or trend followers, we systematically follow where prices are moving. And I think what was the most interesting to me about the election is the Trump trade. So, for example, long equities, short fixed income, long dollar was actually playing out quite a few weeks before the election, and it just extended after the fact. It's not really working today, but it has, pretty much pre and post.
Do you think that U.S. exceptionalism, if let's call it like that, does that keep working?
Hopefully so. I mean, obviously, since that's something we're seeing in the data and we're seeing in momentum signals, but it has been an interesting month. I mean, look at this month, like the Russell ahead, U.S. strongly ahead of EM and Europe. So that's been sort of a U.S.-centric theme this month. And you're seeing that decoupling from the U.S. and other areas. So it does seem to have some steam so far.
And how about the U.S. dollar here? Because that was a pillar of the Trump trade, long U.S. dollar. How do you think about that?
So the U.S. dollar, I mean, that's probably one of the bigger movers that I think a lot of investors don't realize how incredibly strong that move has been. We've had new highs on the dollar for 8 weeks. It is selling off today for various reasons related to some of the, we can talk about that later, but basically the dollar has been an overall extremely strong, especially versus the euro. I think that it's up 6.5% versus the euro in the last, 2 months, which is pretty huge.
Yeah, it was 104 we were talking about on Friday before we saw everything kind of calm down today. Okay, I keep getting notes, though, to not discount Europe, in part because the economy could get better over in Europe because the ECB is going to have to cut more aggressively, and that's going to be good for European equities, and that we can finally, I've heard this story before, can finally sort of outshine the U.S. a little bit. Are you seeing any trends or flows or momentum into that kind of trade?
So I agree with that, but I also think that has two sides. If the ECB keeps cutting, that's going to put more pressure on the euro, which is not going to be helpful. The one story that we will be looking for that we haven't seen so far is perhaps stronger growth at some point in Europe. So there will be potential for that rotation if we can see stronger growth. I think the euro trade is still a little bit more questionable because of what I said, that if ECB continues to cut through next year and we see a more steady Fed, that's actually going to be pro-dollar. So I think it's going to require quite a bit, especially with the weaker euro.
Are you concerned about inflation here at the U.S. economy, or do you feel like the Fed's got that under control? Because I feel like I'm hearing more and more people say, boy, 2025, that might be a thing in terms of resurging inflation.
So we definitely do see cross-asset themes and movements to show some indication of concern for inflation. I think initially post-election, there was a lot of concern. Today is a day where you're seeing some of that abate because given some of the, the choice of U.S. Treasury Secretary by the incoming president suggests that, there's a little bit more pro-business, and recent commentary has also focused on maybe tariffs won't be as aggressive. So I think the general digesting of that information is about figuring out, how much inflation could we actually have as a result of a change in policy? There's definitely still a good chance that that's something on the longer term, especially with the deficit as high as it is.
This might be a really dumb question, but does better U.S. economic growth then mean more inflation? In that, I mean just that. Like, in order to small caps and mid caps to really work, in order for value to really work, you really need a stronger U.S. economy. But then that comes with demand, and then you add tariffs into that, and then that leads to higher prices.
Yes, and I think that's part of the narrative that people are concerned about is if we do have, that coupled with high debt or high deficit, then at some point you have to have higher prices, which is kind of what happened post-COVID, which is why people, especially us, we think a lot about what's going to happen to the yield curve, because that's probably where you're going to see those price expectations for inflation baked in. It is interesting to see also how much gold has gone up this year, because that tends to be a play on inflation. So I think there are definitely enough people out there that have significant concerns about inflation longer term and the potential impact of that.
Katie, thank you so much for joining us. Always appreciate getting a few minutes of your time. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex up there in Cambridge, Mass. A little M&A in the European bank space. Over in Italy, Unicredit made an unsolicited $10.5 billion bid for domestic rival Banco BPM. So maybe some consolidation in European banking. Lento Tang joins us. He is a European banks analyst for Bloomberg Intelligence. He joins us from our London HQ via that Zoom thing. Lento, talk to us about who is Unicredit and why would they consider buying Banco BPM?
Yep. Sure. So Unicredit is the second largest private bank in Italy, and Banco BPM is a smaller player, although it has recently also made some M&A moves itself. So this move comes after Unicredit first approached Commerzbank in a way. It received some backlashes from the German government. So now it seems a little bit sudden that it just changed the target to the domestic players.
Right. So what's the read-through there? So they've been buying up stock of Commerzbank. There was some weird pushback from the government, too, even though the government had to sort of approve that they bought up the stake, yada, yada. It was complicated. Does this mean that they're switching strategies and that they're going to sell their stake now in Commerzbank, or they're just going to hold and wait?
Right. I think Unicredit's vision of becoming a pan-European banking group doesn't change. But at the same time, a further move on Commerzbank is probably likely to be on hold now, just because what pushbacks they are having. I think what's interesting about Winning Credit's move on Bank of BPM is the financial terms seems quite harsh on Bank of BPM's shareholders, not very attractive. So maybe this is just a message Winning Credit is sending that okay, Commerzbank is not my only option. I still have a lot of other options, and so this is
They're
more
playing
like
the field. They're
tactical.
flirting with somebody else while keeping their eye on the other guy across the bar. I get it. Okay.
So, I mean, Winning Credit still wants to be a pan-European bank, and if the conditions improves, then I think they will strike again. Commerzbank is still very much a target, but at the same time, they also have like CEE banks, which are also doing well. So, Winning Credit has a lot of options, especially given they have a very strong capital.
So, Lento, I'm going to speak for pretty much most of our audience when I say I don't really know too much about the Italian banking system. Who are the big players there? How solid is the Italian? Because it seems like when we hear about Italian banks, it's generally not good news. But just give us a lay of the land competition-wise.
Yeah. So Italian banks, the biggest private bank is Intesa, and then followed by Winning Credit. And we also have medium-sized Bank of BPM, Bipper Banca. The sector didn't have a good reputation because of the financial crisis. And since then, the banks has improved a lot, especially cleaning their balance sheet. So their NPL ratio is on average 3% or even slightly below 3% now. So very low NPL ratio, and their profitability has improved a lot, not least thanks to the elevated interest rates. Their ROT or return on tangible equity is currently around mid-teens. I think they're probably going to maintain that level for at least next year. So things have improved a lot for Italian banks. The valuation, however, has not fully reflected that. So the Italian banks are still trading more than 10%. Medium price to book metrics still 10% discount versus the European banks. So that gives a little bit of M&A incentives because your profitability has improved, but valuation not there yet. So that generates a bit of negative goodwill if a bank decides to acquire another one.
All right, Lento, thanks a lot. Really appreciate Lento Tang, Bloomberg Intelligence, European banks analyst, joining us there. All right, coming up. So I was gone for like a month and a half. How many energy segments did you do?
Oh, we're all in on energy.
You were all in on energy. Well, I'm back, so you get more.
More, even better.
Even better. We're going to talk to KR Shidhar, CEO of Bloom Energy. So Bloom Energy is a fuel cell company, and it actually made a deal in the last week that with American Electric Power to provide fuel cells to that electric company, which will then provide power to hyperscalers. So this is like a third derivative AI play. And we're kind of going to understand what that is, how profitable it is, what it winds up looking like, how scalable it is, all that fun stuff. I know that Paul missed it. All right, you're taking a look at a market here that potentially we could see another record close on the S&P. S&P up 0.4%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have the Dow leading the gains this morning, up about 0.9%, 410 points. We have the S&P 500 up 0.4%, 26 points, and the Nasdaq up 0.4%, or 81 points. The two-year yield 4.29%. That's down 8 basis points. The yield on the 10-year 4.28%, and that's down 11 basis points. To currencies, the Bloomberg Dollar Spot Index down about 0.6%. We have the Japanese yen, euro, British pound stronger. We have Bitcoin at around just over 95,000. Few companies making news. It's Intel. The New York Times reporting the Biden administration plans to reduce its CHIPS Act funding from $8.5 billion to less than $8 billion. And the board at Eastman Kodak considering options for its retirement income plan that includes terminating it. Apple CEO Tim Cook visiting China for at least the third time this year. He's attending a suppliers conference there. Meanwhile, Morgan Stanley growing a bit more positive about the company's AI-infused iPhones. And finally, Warren Buffett plans to donate an additional $1.14 billion worth of Berkshire Hathaway stock to 4 charities. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. And because I love energy, we talk a lot about energy. We'll just throw that in there, too. Why not? So one company that you may not have heard of is called Bloom Energy. They are a fuel cell maker. They made a lot of headlines in the last couple weeks and hit an all-time high on November 22nd after it made a deal with American Electric Power. American Electric Power is going to use their fuel cells to bring electricity to, say, hyperscalers. AEP is going to use up to 1 gigawatt of Bloom's fuel cells. Now, something that's quite interesting in this is that a lot of companies in the energy space do cool stuff, but syncing up with the companies that could actually use their cool stuff isn't always easy. In fact, it is quite difficult. So we wanted to get an idea of how this came about. K.R. Sridhar is CEO of Bloom Energy, and he joins us now from Silicon Valley in California. K.R., how did this deal come about?
So we have been working with data centers for a very long time now. We have over 300 megawatts in multiple data centers across the country. These are the smaller data centers called the edge data centers that are located where customers are, somewhere in the 5 to 10 megawatt range in a particular site. So we have transacted close to 300 megawatts. So we are a known player to data centers. Now with the hyperscalers, what's the difference? It's a much larger data centers. These are now particularly more important in terms of growth because of AI and the amount of power they need. And currently, these hyperscalers, as they are growing very fast, the transmission distribution is not able to keep up with providing those hundreds of megawatts of power right at the site where you need it within the time that you need it. Maybe 5 to 6 years, they may be able to provide the power, but the data center really wants it today. They want it now. So we are a perfect solution under those circumstances because our Bloom Energy servers can be deployed in a matter of months right where the customer is, thereby not worrying about the transmission distribution gridlock and providing that reliable, clean, always-on power to the data center. So that's the reason this happened. And here what happened is the electricity provider, AEP, said, we don't make nuclear power plants, we don't make gas turbines, we don't make fuel cells. We're agnostic, we'll buy your systems. And similar to us using those other power sources to provide power to the customer, here we can take your fuel cells and take the power you produce and give it to the data center. However, the big advantage here is we can put these fuel cells right where the data center is, thereby avoiding the transmission distribution issue.
So, Kara, I mean, just, I didn't know much about your company before, so just reading up here, it's like right company, right place, at the right time, with the right technology, and boom. Talk to us about how good your fuel cells are. How would I know whether your fuel cell is better, more productive than, say, a competitor?
That's a great question. So let me go away from fuel cells just into electricity for the customer. At the end of the day, we all provide a service or a product to our end customer. That electricity that a data center takes has to be clean. It has to be always on and reliable 24/7. It needs to have a pay-as-you-grow characteristic, and it needs to be future-proofed in terms of sustainability. Bloom Energy is one of those solutions that offer all of the above, no ors. It's the genius of and. So we are the most efficient way of taking natural gas and making electricity out of it without combustion. Because we don't combust, there is no NOx, SOx, particulates, anything going into the atmosphere, so there is no local air pollution. And if you look at our system, they're like Lego blocks. You put many of these Lego blocks, hundreds of them, to be able to provide power to a data center. If any one of them has to be serviced, you can just hot swap them in and out. So the reliability and the resiliency of our systems are very high. And and you can pay as you grow. Data centers, even though they build a big data center, don't start that entire data center on day one. They may do 1/3 of the load, and then a few months later, they may add additional load. As they're adding the load, they can add more and more of our fuel cells. You can't do that with a gas turbine. You can't do that with a nuclear power plant. So we bring all these attributes in. So I would say we are ideally suited for this AI data center market.
Oh, now the financial terms were not disclosed. I appreciate that. So I'm going to ask about the money a different way. How easy was it or difficult was it to come to an agreement on price with AEP?
In this particular case, it was fairly easy to come to that agreement. Nothing is easy, but relatively speaking. And here is why. There are 3 parties involved. Actually 4. The data center customer, AEP, the public at large where this is being installed, and Bloom Energy. We were able to put together a win-win-win-win for all 4 of these stakeholders. Why is that? Number one, let's start with the public at large. With other kind of provisions that were being contemplated, the fear of the ratepayer was because the hyperscaler is going to get a large amount of power from the transmission distribution company, they will end up carrying the bill. In this construct, AEP made sure none of the costs associated with putting these fuel cells and providing that clean power to the data center will cost the ratepayer any money. So that was a win for the ratepayer. Number 2, for the data center. For the data center, the price of not having power on time is significantly greater than the cost of power. If you just think about the race in AI and who has to get there competitively, so time to power was the key metric, and they would pay a slight premium to be able to get that, and that penciled out. For AEP, they were able to grow their customer base, give them their growth needs without disintermediating them and having them go to some other state, which is what has been happening in places like Virginia, where data centers are moving away from there because there is not enough power. So it was a win for AEP in retaining their customer and taking care of their customer and making money. For Bloom, whether we are in front of the meter or behind the meter, it is the same thing. Whether we sell it to AEP, who then provides the power for the data center, or we sell to the data center and they provide it and they take their own power. For us, we are agnostic because we get to make the sale and we get the gross margins on the product. So that's how it was constructed.
Alex, another story I missed. Bloom Energy, stock's up 72% year to date, all-time high today, up 92% on a trailing 12-month basis. Where were you? Where was this story for me like $50 ago?
Yeah, sorry, man. Missed that one for you.
Yeah.
My bad. All right, great to see you. Thank you so much for the great story. K.R. Sridhar, CEO of Bloom Energy, and just sort of the idea that how you pair all these things together, whether you're an energy provider and then electricity provider and then a hyperscaler, and getting all of that to match up sounds like it could be really simple, and sometimes it is, as Kara was saying, and sometimes it's really not.
It isn't, but it sounds like, again, they have a great product for this part of, the AI energy provision kind of scenario. Wow, good stuff.
As you said, right time, right place.
And again, in San Jose, California, I mean, just the amount of innovation in all parts of the industry in that part of the country is just amazing.
Yeah.
Fortunately, my youngest goes to college there, so I'm like, dude, get a job.
You're like, just feel the the innovation. Get the innovation. All right, much more coming up on Bloomberg Intelligence. Happy Monday.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you'll find our little TV show here. Matt Sheltonhelm joins us, media litigation analyst at Bloomberg Intelligence. He's down there in D.C. in the swamp. Matt, you know, we've got a new administration coming in. We've got a pretty solid support in the Congress from the Republican side. I'm thinking about some of the highly regulated industries. I'm thinking about the tech, media, telecom space. I'm thinking about big tech here. Does big tech, which has typically benefited from a very light regulatory touch from this United States government, is it going to face greater scrutiny, do you think, going forward under the Trump administration, or less?
Yeah, well, I think it cuts both ways. I think in one sense, I think you'll see Congress a little less aggressive at moving forward with data privacy type legislation that Democrats tended to promote. But where you're going to see the risk and where I think I'm predominantly focused right off the bat is on big tech's liability shield. This is a provision of law that's been in place since 1996 that keeps Google and Meta and other social media companies from being sued every time someone posts something harmful on social media. What you're seeing from the conservative side is increasing attacks on that, and I think you could see a proceeding at the FCC try to really focus on and amplify those calls to cut into the liability shield that's been so important for those companies.
Does the FCC, can they change it, or can they just sort of mold it on the sidelines?
Yeah, that's a great question. The interesting thing is this liability shield is tucked into the Communications Act that the FCC administers. So during the first Trump administration, the FCC took the position, hey, we can make rules under this because it's in our law. We can implement it, but they never got around to doing it. I think the Trump administration this time is going to try to move ahead with that and say, look, we implement the Communications Act. The liability shield is tucked in there. We can make rules. What's changed since then is that the Chevron doctrine has been struck down. The major questions doctrine has arisen. There's a real doubt. I'm very skeptical that the FCC can bind the courts in how to apply this liability shield. But in some ways, that's not the point. The point is sort of to amplify the idea that courts or that Congress should change the shield. And I think that's what you're going to see a Brendan Carr-led FCC do, is say, look, even if we can't change the liability shield as an agency, we're going to tell you how to do that and amplify the momentum for Congress or the Supreme Court potentially to do it itself.
So what do we know about the apparent FCC chair, Brendan Carr, and what should we expect from a Republican-controlled FCC? What do we know about Mr. Carr?
Yeah, so Brendan Carr is the most senior Republican at the FCC who knows communications law inside and out, but he also knows how to play the politics around the FCC better than anyone else there. And so he's going to do his best to make sure that he's implementing President Trump's agenda. And so while Brendan Carr is a traditional sort of free market Republican, he's also very sympathetic to the idea that there's sort of a bias against conservatives among elite media. And he's very sympathetic to supporting President Trump on that message. And so that's why you see proceedings like this going after big tech companies, potentially going after broadcasters, and threatening to take away their licenses. So there's going to be a little bit of this sort of, okay, let's deregulate. The Democrats have regulated too much, but there's also this concern about bias against conservatives and that it's gone too much in that direction. And Brendan Carr is going to support both.
So if I take a look at the actual equities that are involved, what does it mean for them? Like if I'm an investor and I'm looking at this, how do I price it? How do I model it? How do I think about it?
To me, the biggest risk is you think about the liability shield falling away. If it goes, in the most extreme approach, you're thinking about the big social media companies. You're thinking about Meta. You're thinking about Alphabet, and you're thinking about creating a whole new field of litigation with those companies as the targets. And so you've seen a couple big settlements from those companies with the liability shield in place. You can think about that being amplified many times over with class actions and other suits. Anytime content that's posted on social media causes harm in the real world, you can think of limitless examples of the harm it causes. Anytime that there's harm, you potentially have a lawsuit. And so I think it sort of changes the equation in terms of the cost those companies could face in terms of potential liability if the liability shield were wiped away.
Real quickly, Matt, will there be looser ownership regulations on media? David Zaslav from Warner Brothers Discovery is asking.
Yeah, so absolutely. So the Republicans at the FCC have historically been, they're tired of this idea of media ownership of broadcasters. They said, look, there's so much new competition for broadcasters. The problem is that there's first this political angle from President Trump saying, look, they edited my 60 Minutes interview wrong. And so Brendan Carr at first is kind of latching onto that political argument. Let's go after that first. Right. So I think media ownership sort of lurking in the background. I think they'll get there after this political noise sort of dies down.
All right, Matt, great stuff as always. Matt Cheltenham, he is a media litigation analyst down there for Bloomberg Intelligence down there in Washington, D.C. Perhaps a new administration will usher in some new rules, both on the positive side, potentially negative for some of these big media companies. Again, as Matt was just kind of highlighting, they have some protections to the digital media companies, the social media platforms that shield them from liability for their user-generated content. That might be at risk. We'll have to see going forward. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We have a great hour lined up for you. We're going to get you covered from all areas of the market and dig deep into some of the big movers like Macy's. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst, will be joining us on that stock. Plus, RJ Gallo, Senior Portfolio Manager, Fixed Income and Federated Hermes as well. We're seeing a pretty stellar rally in the bond market. Yields on the back end kind of dropping like a stone. We'll get the why behind that. Plus, Matt Day, Bloomberg Technology Reporter, will join us on his big take story on Amazon going head-to-head with NVIDIA on chips. It was a great read, took up my whole commute, but totally worth it. But we're going to kick it all off right now with a Bloomberg Business Flash with Charlie Pellet.
Hi, thank you very much. Happy Monday and good morning. We have got the Dow, the S&P, NASDAQ all advancing right now. We are well off session highs, though, with the S&P back below 6,000, 59.90 where we stand now, up 21 points for the S&P on this Monday, up by about 0.4%. The Dow is advancing by 392 points, up 0.9%. NASDAQ up 77, a gain there of 0.4%. But look at the Russell 2000 index today, outperforming by far, surging now by 2.4%. 10-year 4.29% with a 2-year 4.30%. Gold down $83 the ounce, plunging 3.1%. 26.32 on the precious metal. West Texas Intermediate crude also retreating back below 70 a barrel on WTI. 69.18 drop there of 2.9%. Bottom line here, the Dow, the S&P, NASDAQ all advancing. So what about the market backdrop? Katie Kaminsky is Chief Research Strategist at Alpha Simplex Group, and she was interviewed this morning right here on Bloomberg Intelligence.
The last week or two, we've seen a little bit of retraction, and I think in general the market is still parsing through some of the aftermath of the election. So I do think that people are forecasting, and I'm seeing more and more positive sentiment about equities, U.S. equities in particular, going into year end.
Indeed, positive sentiment today with the S&P up 0.4%. You can hear more of that conversation on the Intelligence podcast, and you can download it wherever you get your podcast. Briefly, Macy's shares, the story everybody's talking about today. We have got Macy's down 2.1%. Shares lower after saying it will delay its third quarter earnings release after an investigation revealed an employee hid more than $100 million of expenses. Recapping, S&P right now advancing by 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. As Charlie was just reporting, a risk-on day today. Stocks moving higher. Let's take a look at some of the movers in the market. Alexandra Semenova joins us, equities reporter for Bloomberg News. She's in our studio here today. Alex, what are you looking at?
What Charlie just mentioned is Macy's quite the story. They're delaying their earnings report. That is never a good sign, but it's especially a bad sign when it's because an employee hid more than $100 million worth of expenses. This employee intentionally made erroneous accrual entries to hide up to $154 million of cumulative delivery expenses. Needless to say, that person is no longer with the company. Unclear if there will be any more consequences for that person. And they identified the issue as they were preparing their quarterly financial statements. Apparently, this isn't, there's no contagion effect here. Like it won't impact their balance sheets more broadly. But
I actually spent a little time in internal audit, and what I learned there is it's really tough to find fraud, to detect fraud. You know, I mean,
is it like an intention thing that you have to? Yeah.
Yeah, and it's just if somebody wants to do it and inside they can cover the tracks, it's just hard to find. That's what I learned.
You would think a big company like Macy's would spot this pretty quickly. So surprising that this went on for years.
Yeah, exactly right.
All right, you're also looking at Apple. What's going on there?
So Apple is up about 1% right now. This is after Morgan Stanley said that it has grown more positive on its artificial intelligence infused iPhones. This is really interesting because you guys remember Apple actually started the year as one of the Magnificent Seven companies that wasn't really doing much on the AI front. That was hurting the stock, and now it's kind of catching up with that, and analysts are clearly very optimistic here. They said that iPhone upgrades rates are improving, and Apple Intelligence is emerging as a catalyst to these upgrades. Of course, it's all about demand. It is all about growth for Apple.
My naive assumption, if I were Apple shareholders, like they always get the trend. Maybe they're not leading, but they'll always be there. They're going to be an AI play, so don't worry about it.
Absolutely. Don't worry about it.
Yeah.
I guess, but how do you
I'm not
value
sure. That's
that,
not my analysis.
Yeah. Okay. Fair enough. Also, Bath and Body Works on the flip side, doing really well.
Yeah, this stock is up nearly 17% right now. This is after the soap and fragrance company reported third quarter estimates that beat Wall Street expectations and raised their guidance. Company is doing very well. Their CEO said that basically this had to do with investments that the company made in marketing and technology starting to pay off.
All right, Alex, thanks a lot. Really appreciate it. Alexandra Semenova joining us, Bloomberg Equities reporter. I just wanted to highlight what's happening in the commodity market. So oil is getting hit pretty hard. WTI is off by almost 3%. We're under $70 a barrel. Now, the headline is that oil is plunging as Israel moves closer to a ceasefire with Hezbollah. That is sort of the headline that we're looking at. So we wanted to get more on that with Dan Williams, reporter for Bloomberg News based in Jerusalem. Dan, what does that mean? What would close to a truce mean for Hezbollah and Israel?
Well, we've had 13 months of fighting between Israel and the Lebanese group. This has effectively been the second front of what is now a multi-front regional war between Israel and various Iranian proxies. It began, as you'll recall, in October of last year in the Gaza Strip with the Hamas attack on Israel. From there, it spiraled and expanded. Now, I think there's no doubt that in recent months, the Lebanese front has been the fiercest. Hezbollah was a very formidable enemy, the tip of the spear for Iran in the region. Its fortunes have changed in the last 2 months with an Israeli counteroffensive that included sabotage, air barrages, and ground incursions in southern Lebanon. The Americans have been working very hard to put together some sort of ceasefire, and indeed the incoming President Trump has signaled he would very much like to see a cap on that violence before he takes office. So what we've been hearing today is that a deal may be in place. The Israelis appear ready to sign on to a deal that would, they hope or they demand, distance Hezbollah's fighters from their border, the Lebanese-Israeli border. that would see a mechanism in place to prevent a rearming of Hezbollah. The Israelis also want to reserve the right to strike or resume strikes against Hezbollah should they see infractions. In the past, Lebanese officials and Hezbollah have balked at this, have chafed at this, but it appears, to judge by the optimistic comments from Israel, from US officials, that that may have been resolved. Tomorrow, we expect a security cabinet meeting in Jerusalem where the Israelis will apparently give their final approval to this deal, at which point it would be taken back to Beirut for the Lebanese government or a number of Lebanese officials representing Hezbollah to sign off on. And then we could have a deal in place really within a couple days.
Dan, why now? Has something changed on the battlefield or just within the respective centers of power that now is the time?
Well, I think there's exhaustion on both sides. Again, this war is now heading into its 14th month. I think also there's a sense that Hezbollah, it's worth remembering Hezbollah has been quite reticent in the last hours and days about what it demands and whether it will go along. I think there's no doubting that Hezbollah is really on the ropes militarily. It has been continuing attacks on Israel while Israeli airstrikes continue in Lebanon. However, the 100, 200, 300 launches a day as Israel are nowhere near the 3,000 or 4,000 launches the Israelis were expected. And that's because of a very successful series of decapitation strikes by the Israelis. Effectively, the Hezbollah leadership has been eliminated, and much of its arsenal has also been destroyed. So it could well be that Hezbollah, its Iranian patrons, have decided now is the time to leave the table. Now is the time to cut their losses. They may also be concerned about what the future would hold under a Trump administration in the United States. Perhaps the new president would be more accommodating of harder Israeli measures in Lebanon. So I think all sides are ready for this, and we'll try to get it out the way before January 20th.
It's such a good point that bringing Hezbollah to the table, because I was thinking the opposite. Why would Israel come to the table feeling that there may be a more hawkish President Trump to support Israel? What, if any, does this mean in relationship to Israel and Palestine?
Well, if you're referring to the war in Gaza, there is no immediate linkage, not least as Hezbollah appears to have dropped its previous demand that any ceasefire in in Lebanon come hand in hand with the ceasefire in the Gaza Strip. Hezbollah appears no longer to be demanding that linkage. However, there are indications, and again, I say this cautiously, that sometime after a Lebanon ceasefire is agreed, that may unfold into a knock-on ceasefire in the Gaza Strip with a limited release of hostages still held there by Hamas. It has some 101 hostages in the Gaza Strip that Israel wants out, and that may also lead to a winding down of the war in Gaza, though the Israelis insist they will not call off the war there. Unlike in Lebanon, Israel exercises near full control of the Gaza Strip. Unlike in Lebanon with Hezbollah, it has vowed to destroy Hamas. So its war goals in Gaza are very different to its war goals in Lebanon, and its predictions and its planning are accordingly very different in the two areas.
Dan, Prime Minister Netanyahu, how is his standing within Israel today? How strong is it? How secure?
Now, he was in the doldrums. Obviously, October 7th happened on his watch. It's the most serious, the bloodiest attack on Israel in its existence, the worst attack on Jews since the Holocaust. He has tried very hard to recover. He's stayed in office. And I think in the last 2 months, there's been some rallying of his domestic support, given the success of this counteroffensive in Lebanon, given the sense that Israel has retaken the initiative. It's also worth noting that the last 2-3 months saw quite extraordinary exchanges of blows between Israel and Iran, which many Israelis believe did restore their sense of deterrence, their sense of military virtuosity, military supremacy, if you like. He will have some opposition in his cabinet to this truce idea in Lebanon. One member, a far-right member called Itamar Ben-Gvir, has already said he would oppose it. He thinks Israel should press its advantage and crush Hezbollah in Lebanon. However, I think that Netanyahu has enough support within his coalition, within his cabinet, to pass this, especially if he can argue that all military aims have been exhausted in Lebanon, that Israel needs to refocus on the Gaza Strip and perhaps refocus strategically on Iran, its primary adversary, and also on what the future would hold in the region with the new U.S. administration.
What is the relationship between Netanyahu and President Trump? What do we know about that?
I think by all accounts, it's excellent. It was perhaps a little rocky in the last administration that Trump held a few years ago. However, they've been in regular touch. Trump has said that he has repeatedly spoken to Netanyahu. He's even given him advice. Netanyahu consulted with him, he says, about how to conduct retaliation against Iran, how to conduct this multi-front war. Trump says he told Netanyahu, do what you have to do, which I imagine will be very welcome to the Israeli prime minister, who has been publicly challenged by the Biden administration on many points in terms of the war so far, albeit a Biden administration that's been very supportive in terms of protecting Israel, in terms of supplying military means. So I think the Israelis will breathe a sigh of relief when Trump comes in, at least in terms of prosecuting what remains of this war come January, at least in terms of implementing wider strategic aims when it comes to the Palestinians, to Iran, etc. I think by all account, the relationship between the two leaders is very good and will continue to get stronger.
All right, Dan, thank you so much for joining us. Dan Williams, he's a reporter for Bloomberg News based in Jerusalem, so we love getting the feet on the ground reporting for that ever-changing story there in that part of the world. One of the stock stories of the day we've been reporting, Macy's, they are disclosed that a employee may have hid as much as $154 million of delivery expenses, so they don't know what's going on with their financials. They delayed their earnings release, so a lot of issues going on at Macy's. Stocks off 3.25% today on the news. Let's check in with the analyst who follows this company, Mary Ross Gilbert for Bloomberg Intelligence, senior equity analyst. Mary, what have you heard from the company? What's going on there? It really is an odd story.
It is an odd story and something kind of wild to wake up on a Monday morning before Thanksgiving and Black Friday. But as you know, Macy's reported that one employee had hidden 132 to 154 million of cumulative costs. But when you look at it, it's over about a 3-year period. So it's about 20 cents a share impact, meaning that they might have to restate their earnings by about 20 cents. It's not a huge number in that respect. It's huge in the sense of, well, what happened with the financial controls here? On the other hand, I think they can move past this. And I think there were some positive snippets in the press release that came out this morning with their third quarter preliminary sales results. So they reported that their comparable sales on an owned plus licensed plus marketplace basis was down 1.3% for the company. And that was a little better than what analysts were looking for. They were looking for a 1.5% decrease. And if you look at the go-forward stores, so this excludes the 150 stores they're planning to close, the comp sales on that same basis were down just 0.9%. And in the third quarter, most apparel retailers have been negatively impacted by unseasonable warm weather related to in September primarily, but also in October. And so when you look at the results, we're already seeing November, Macy's reported, and we've seen this with other retailers, sales are actually performing better than what we saw in the third quarter because the weather, of course, has turned cooler. So we think those are some of the snippets of good news, including the luxury side of their business, with Bloomingdale's comp sales up 3.2% and Bluemercury up 3.3%. So I think that kind of outweighs this because that employee is now gone. Mm-hmm. And of course, we'll learn more once this investigation is complete and they can report and hold their earnings call what's happened in terms of the financial controls.
Talk to me about what we know about inventory for Macy's and any discounting. I'm just asking for a friend, particularly for Bloomingdale's.
Yeah, well, of course, going into Black Friday, and the one thing that we learned from a consumer survey that we recently completed, discounts and sales, anything like that, is a primary driver for sales. And the other one is weather. That comes second, is a change in weather, and that prompts apparel sales. So I think that we're already seeing pre-Black Friday sales. Macy's is always top of mind. They're known for their promotions, known for their sales. So they're already out there with their Black Friday sales going on. And of course, they're going to open early on Friday, on Black Friday. So we'll actually be there in the stores at that time.
I love that.
Yeah, absolutely. All right, Mary, thank you so much. We appreciate that. Mary Ross Gilbert, senior equity analyst covering retail for Bloomberg Intelligence. Again, a wacky story over there at Macy's. Macy's delays earnings after employee had millions in expenses. For me, it would just be, the audit and control function for the company. Can I trust the other numbers that are out there.
Right.
So that's kind
So
of
how
where.
long typically do you think it takes for that to sort of clear its way out?
Well, I think what's most troubling is that it was over a multi-year period.
Yeah.
You know, that's kind of goes to the quality of the controls, both internally of the company and then from their auditor. I'd kind of be looking at my auditor saying, dudes, I mean, this is what we pay you for, to kind of go through our statements, make sure this stuff is, you know, in fine shape. So we'll see.
Cannot argue with Paul Sweeney on this one.
No.
Sorry, I can't do it. All right, coming up, RJ Gallo will be joining us from Federated Hermes for his take on the markets.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. We have the S&P 500 index right around 6,000, and almost every major group in the S&P 500 is advancing. Stocks are climbing with bonds. The dollar fell as traders welcome Donald Trump's pick of Scott Bessent for Treasury Secretary. S&P up 26 at 59.95. That is a gain of 0.4%. The Dow up 399 points, with the Dow Jones Industrial Average now up 0.9%. 0.6%. NASDAQ up 117 for the NASDAQ Composite Index, a gain now of 0.6%. The Russell 2000 Index, though, the outperformer, surging 2.4%. Small cap shares rallying. We've got the 10-year at 4.92%. The 2-year 4.30%. Gold down $84 the ounce, down 3.1%. 26.31 on the precious metal, while West Texas Intermediate crude down 3.1%, 69.05 a barrel. MicroStrategy is accelerating its Bitcoin buying. MicroStrategy said it bought a record $5.4 billion in Bitcoin. It is the third major purchase announced this month by the crypto hedge fund proxy. Today, MicroStrategy down 2.1%. Bitcoin today is trading lower by 0.6%. Bitcoin now at 96,435. Recapping, S&P up 0.5%. Russell 2000 up 2.4%. The 10-year 4.29%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Part of the Trump trade was to sell bonds, and the market certainly did. We had rates shoot up. We got a little bit of a pullback today, as Charlie was pointing out. But let's see what's happening in the world of fixed income today. To do that, we check in with RJ Gallo, Senior Portfolio Manager over at the Fixed Income Group at Federated Hermes. They're in the great city of Pittsburgh, PA. RJ, when you and your team woke up the day after Election Day, you sat down, you got to your next strategy meeting with your fixed income folks. Did you guys change your outlook at all, or maybe how you approach the market?
Yeah, we did. I know plenty of people didn't want to bet on the election, and I would put us in that camp. I would say that the sharp increase in yields from mid-September all the way up pretty much to Election Day in part reflected that the betting markets had moved sharply in Trump's favor. And so the market was advancing to start pricing in a Trump trade even before the election outcome was known. We were a little cautious on duration during that period, probably booked a few basis points of excess return as a result. We didn't make a big bet, a little bit. For the actual election itself, the polls were closed, the betting markets weren't. As it turned out, the betting markets were much more accurate. And then following the election, we also got a little short duration, thinking that we would maybe test 450 on the 10-year. And that's exactly what happened. But as we look this morning, we're back to 430 pretty much.
So, yeah. So what does that mean then for the long end? Is it path of least resistance lower, or do we stay sticky?
I think that this is sort of a tactical retracement. I think that the move to 450 was pricing in as much as one could. The idea of the Trump trade, a broader fiscal deficit, stimulative suite of policies, especially deregulation, and the prospect of tariffs and trade war, which could boost inflation in the short run. That's what drove rates in part to where they were. I think the fact that we've had a retracement, the market was sort of consolidating as we wait to see how all these policy plans actually get implemented. How successful will the Trump administration be in implementing them? How open to negotiation are they on tariffs? The fact that the market's responding with a bit of a rally today, yields sharply lower, about almost 10, 11 basis points on the 10-year, it seems that the market views Bessent as a pretty conventional pick. I think I would agree with that. I wouldn't say it eliminates the Trump trade. It's just the next iteration of the unfolding of the actual Trump outcome, which is going to take time to see.
So let's talk about this U.S. economy here, and how do you think that'll be reflected in the rates market? It seems some of the economic, now this is going to be a busy week for economic data, inflation data, jobs data in terms of claims. Your thought on the economy and how that might be affecting this Federal Reserve?
The economy has held up remarkably well. The once expected recession a year ago never showed up. The economy had a lot of tailwinds. Credit markets have done well. The recipe for outperformance in fixed income has been to own lower quality credit risk over higher quality credit risk. I'm glad to say broad fixed income indices of all sorts have generated positive returns. The economic outlook from here is still relatively supportive. I worry a little bit that the overall suite of Trump policies that I've described previously might actually end up being stimulative in the short run, but at a meaningful cost in the longer run, in the sense that you'll have larger deficits, more debt, and the bond market might be left to be the source of discipline in terms of reacting to that outcome with higher yields as we go into further into 2025. But a lot remains to be seen. We have to see how serious is the Trump administration about the broader tariff threat. Is it in fact a negotiation? I do think that the lesser expectations for Fed easing are in fact rational, as the fiscal policy expansion is pushing in the other direction in terms of monetary policy expectations.
So fiscal policy to expand and the Fed gets looser.
No. The Fed gets less loose.
Loose, but they're still loose.
Yeah,
They're just less loose.
If you look at SOFR futures, for example, they gapped sharply higher in implied rate in terms of the terminal rate in this trough upon the election outcome, really. As the market was moving to price in the Trump trade, less Fed easing was expected. That is very rational. Less monetary stimulus as the fiscal side opens up more with bigger deficits.
The best performance by far in fixed income this year, RJ, has been high yield and leverage loans in the U.S. So I guess the market's comfortable with risk, I guess.
Well, I think once it became clear that the economy had significant tailwinds and corporate profits have held up relatively well, it's been sort of risk on in terms of where you put your capital up and down the credit quality spectrum. And spreads have tightened, and you've generated very, very favorable returns. To be frank, in our multi-sector strategy here at Federated, we've been a little more cautious, thinking that spreads had gotten too tight. As a result, we've been a little underweight. Fortunately, we've been able to make it up a little bit more on curve positioning. The yield curve has steepened sharply, and a number of our strategies, taking an active position to benefit from that, has really worked very well. We've also been overweight mortgages, which have generated incremental outperformance, not as much as high-yield corporates. But there's a lot of arrows in the quiver of a fixed income manager, and we've been shooting some of them in the right direction. The high-yield one has been a little tough, and the rally has outpaced us. We're still a little cautious that might actually crack as we head into next year, especially if rates start to rise in a sort of bond vigilante theme around the Trump administration.
All right, RJ, super appreciate it. Have a great week. RJ Gallo, Senior Portfolio Manager, Fixed Income at Federated Hermes. All right, back to the market. We're looking at record highs for the S&P. Also, Citigroup stock is at a 52-week high. We haven't seen this level since October of 2021. And we have a great story out on the Bloomberg terminal that talks about their new head of wealth, Andy Sigg, and how he's revamping the wealth business and how that's going, basically, at the end of the day. Joining us now for more, Catherine Doherty, Bloomberg finance reporter, joining us on that story. So how is it going? So the story kind of goes in different directions on that exact answer.
Right. I mean, Andy is 1 year into his new role, and he came into it with a lot of difficulties, and the basic infrastructure that Citi was working with in their wealth division was something that had been lagging peers. It was way behind in terms of speed, execution, and really that was something that Andy had focused on right when he came in, and upgrading the technology was one thing, then bringing talent was kind of the second pillar to improving the wealth division. And keeping talent is the hardest part about building a wealth business across Wall Street, because it's a very competitive business. The pay is oftentimes used as a way to lure experienced advisors to competitors. And so not only are you trying to focus on keeping that talent, the talent is tied to the assets that they're managing for their clients. So anytime you lose some big advisors with millions or even billions in assets, that's going to affect your business moving forward. So Andy had a very big agenda in front of him in terms of having to clean up, and not just clean up, but then improve Citi's wealth business so that it could truly compete with the big peers on Wall Street.
Yeah, because like when I think of Morgan Stanley, I think of wealth management. And that's different. When I grew up in the business, I thought about them as sales and trading and investment banking. Citi, I don't necessarily think of wealth as a kind of a growth driver for them, but I know in their private bank, which generates $2.3 billion of revenue, it is high-touch service for the wealthiest clients, including a quarter of the world's billionaires, minimum net worth $25 million. So is this a situation for Citi that Jane Fraser has to just put a flag in the ground and say, this is a core business for Citi and we will invest accordingly?
Private bank is definitely one of their money makers. You can see that in the numbers.
Yep.
But also, if you think 2 tiers down, you have Citi Gold, and this is clients with average monthly balances of at least $200,000. So it's definitely not at the private bank tier. The private bank tier, why they're trying to keep that part of the wealth business up is because that's where the biggest assets are. That's where the revenue really gets generated when you have the wealthiest. And it's not just Americans, it's oftentimes billionaires in Asia. They're really focused on growing their business outside of the US, which is different from some of the other big Wall Street banks that are more US focused in terms of building up their own private bank assets. And so Citi, their private bank, I would say, was their strong suit and continues to be their strong suit, but it doesn't mean that that's going to stay that way. So they really have to remain competitive, keep their advisors that are catering to the wealthiest individuals, not just in the US, but across the globe.
Did they lose advisors because they were poached or because they let them go, because they were revamping it under Andy Sieg?
So it's a combination. Just last week, we reported that 2 of Citi's former private bank advisors defected to go to Bank of America, actually, in their private bank, which is interesting because that's where Andy Sieg had come. He worked in the Merrill division, but still, it's under the Bank of America umbrella. And those 2 advisors, they brought $7 billion of assets that they managed. So that was a big kick to Citi. And so when you see that, but it's not, I would say, unique just to Citi. There's stories like that all the time of some of these really big advisors bringing their team to a competitor, and oftentimes they're just looking for it's opportunity, and most of the time that opportunity is translated in pay and in compensation.
Another risk to the talent is something that Alex and I work with Commonwealth. People, those platforms that are non-wirehouse investment banks, they say, hey, why are you working for Merrill Lynch or where you have to sell their products? Go on your own. We'll support you with all the technology, all the back office stuff, and you go run your business like you want to run your business. And that is also another risk to all these big wirehouses. So great story. Not surprisingly, it's the second most read story in the entire Bloomberg terminal. So when you talk about our terminal users and their businesses and their futures,
there you go.
They read it.
Oh yeah. Oh, they read it. All right, coming up, we'll take a look at the big take story on Amazon. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Do want to begin with the developing story headline from the Bloomberg Professional Service. The U.S. says an Israel-Hezbollah ceasefire agreement is not reached yet. We've got stocks pushing higher. The Dow, the S&P, NASDAQ, all in the green. We are off session highs now. S&P up 16, 59.85, where we stand up 0.3%. The Dow up 307 now, higher by 0.7%. And we've got NASDAQ up 82, up by about 0.4%. The real outperformer, though, Russell 2000 index surging now by 2.1%. 10-year 4.30%, with a 2-year also at 4.30%. Gold down $80 the ounce, a drop there of 0.3%. Gold tumbling on ceasefire hopes in the Middle East. Spot gold now at $26.35. West Texas Intermediate crude down 2.3%, $69.60 for a barrel of WTI. A Federal Reserve economic indicator notched a weak reading in October. And with that story, here's Bloomberg's Vinny Del Giudice.
The Chicago Fed's National Activity Index dropped to a 9-month low. It's been negative since June. October's weakness was across the board, from employment to consumer spending and housing. Wednesday, the Commerce Department issues revised figures on third-quarter economic output. Wall Street anticipates a so-so report. Vinny Del Giudice, Bloomberg Radio.
Cassava Sciences shares are now plunging 85%, the largest one-day drop on record after the biotech firm said its Alzheimer's treatment, Simulfilm, did not show a significant reduction in cognitive or functional decline versus placebos in patients with mild to moderate levels of the disease. Again, shares of Cassava Sciences, they are plunging by 84%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economic, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. We also get the privilege of talking to the amazing team of Bloomberg News reporters, particularly those that contribute to the daily Bloomberg Big Take story. It's a deep dive into really important business issues of our time. And today's I could not get enough of. So the title is Amazon Prepares to Go Toe-to-Toe with NVIDIA in AI Hardware. And this has to do with making their own chips so they don't have to be as reliant on NVIDIA. They can still use NVIDIA chips, but also use their own for, say, more basic tasks. But it was very complicated in terms of how they're doing it, what the future looks like, how long they've been doing it for. Matt Day is one of the authors of the story, and he joins us now from Seattle. Matt, can you just sort of give us the cliff notes of the journey that Amazon has undergone when it comes to innovation and it comes to chips?
So Amazon gets a lot of credit for inventing the cloud computing market, and basically rented computing power, data storage all over the internet. What they don't get so much credit for is building a lot of the hardware behind it. So you go back 15 years, and they started building their own servers, their own networking switches. Eventually, they got onto to silicon, to chips themselves. That's where they find themselves today. Is they didn't set out to necessarily try to upset NVIDIA, but because they've been working on machine learning chips for the past, call it 5-6 years, they have a chip they think is arriving at the right time.
Talk to us about what Amazon's folks in Austin, Texas are doing. What's going on down there?
So Austin, it's a tech mecca, especially for hardware, dating back to IBM and Dell. And Amazon focuses their machine learning chip testing there, their chip engineering down there. So myself and a colleague paid a visit down there last month, and it's really a scrappy vibe. The place isn't particularly pristine. There's just stuff strewn all over the place, as the story notes. But that's a little bit of the Amazon engineering ethos at work, right? They don't have to push the limits of performance. They don't have to make it real pretty. They just have to build a part that works, a part they can build a whole lot of them in a pretty short period of time. And so that's what they're trying to do now, is get those chips out to the data centers before the end of the year.
Now, is the idea that, hey, NVIDIA, we don't need you anymore at all? Or is it just sort of like, we can also do this, and there's room to everyone to play on different levels?
Yeah, no, not at all about replacing all of NVIDIA. And if you get any Amazon exec talking about it, the first sentence out of their mouth is going to be, we recognize NVIDIA's got a great product and it's going to be around for a long, long time. I said, and I don't have any hard numbers in front of me, and Amazon folks wouldn't speculate, but I think they'd consider this a victory if they could just take some of that portion of the NVIDIA demand they already are serving today with NVIDIA chips in their data centers.
So NVIDIA's biggest customers, they're big companies like Amazon, like Microsoft, like Alphabet. And all of those customers are trying to build their own chips. How is Amazon kind of positioned relative to all those players?
I think one thing Amazon definitely has an advantage over its nearest cloud rival, Microsoft, and that they started a lot earlier. Microsoft only started building its chips a couple of years ago. Amazon's been doing this since 2013, 2014, and they all kind of came to the same realization, which is that, listen, ultimately a data center is just a big computer, right? Like we think of computers as laptops or maybe a single rack of servers. But one of the things that the cloud revolution has done is it's allowed these companies to say, okay, wait a minute, how is this going to work if instead of one of them in a server, I have 100,000 of them spread over a data center or multiple buildings, right? How does the computer work in that situation? And that's one of the things that generative AI and all these real hard, intensive training runs have kind of forced them to do, is think about these giant sprawling data centers as computers in and of themselves.
Now, you guys went to some of these places where they're trying to build these chips. Can you describe what it's like? Because we're looking at a bazillion-dollar company in Amazon, right? But what you described is not that.
Oh yeah, it looked a little bit like a potpourri rack at a hardware store, right? They had a drill press in a corner, they had a vacuum sealer, and under that was one of those slow ovens to kind of dry things out. Dehumidifier, maybe? That's not the right word. But anyway, there's a lot of hardware sitting around, and a lot of it's really high-tech, a lot of it's really expensive, but the vibe, again, was just an engineering crew trying to go as fast as they can to put chips in the hand of their customers. In Amazon's case, that's their own data centers. But there was a funny moment while we were there. The guy who runs the lab, a guy called Rami Sinha, was yelling over to a colleague of his, basically, what's your job? And the job is to ship things to data centers, right? They're not there to push the limits of engineering. They're there to reliably, ship product out and get it in the hands of their business customers.
What are the customers saying about the Amazon chips? How are these Amazon chips performing in the marketplace?
So the Amazon has only just started rolling out its latest chip. What we know from the first version is, it's not as good as NVIDIA, and that's particularly clear on the software level, right? I mean, no matter how good a piece of hardware is, if you can't access it with ease, that's going to be a problem for you, and that's where NVIDIA has just a huge advantage. They've got the open source community behind them, building libraries and tools so that almost any AI thing you want to do, you can accomplish it on an NVIDIA chip. And so that's what customers have told us is the big hurdle for Amazon. Now Amazon is offering its early adopters some help. They will, send you engineers and help customize your work for their chips, but that's not going to scale in the long term. They're hoping they can build a software package that makes it real easy to use their hardware, but they're not there yet.
Who are the geniuses behind this in Amazon? What are the names?
So the main one who gets a lot of credit for it and probably doesn't get enough outside of tech circles is James Hamilton. He's a longtime engineer at IBM and at Microsoft, who Amazon poached real early into their cloud computing experiment back in 2009. And it was partly his suggestion that the company should get into the hardware business, right? He was looking at their costs and saying, listen, why are we paying Dell, HP for all of these servers with a bunch of high-end functions we don't need? We could build a cheaper mousetrap, and if it's just good enough for us, then we can pass those savings on to our customers. So it really started this snowball of just Amazon getting into more and more corners of hardware that previously, they hadn't really had much interest in, and that's really paid off in terms of how profitable the cloud business is for Amazon.
All right, Matt, thanks so much for joining us. Great story. Matt Day, technology reporter for Bloomberg News. He's out there in Seattle. The story on the Bloomberg terminal: Amazon prepares to go toe-to-toe with NVIDIA in AI hardware. You can read this story on the Bloomberg terminal and at Bloomberg.com/big take. So it just feels like if you're Amazon, you can't do any. You can do a lot of things because you have so many financial resources that if you want to get into the chip business and go up against NVIDIA, why not?
Yeah.
They got into, just to take, for example, YouTube. It came out of nowhere, and now it is one of the largest advertising platforms in the world because they figured it out, and they were able to invest in it.
Yeah.
And there you go. It's a separate gajillion-dollar business on its own.
Yeah. What's also interesting is just the idea that there's room for all to play, right?
Yep.
So, if they're able to create certain chips that can do more basic tasks, and you save kind of fancy stuff for maybe some of the NVIDIA chips. Like you can use all of them, and you don't need to use NVIDIA chips or Blackwell to do something more rudimentary. That there's room to play. So that was kind of interesting as well. All right, coming up, we're going to talk to Anna Davies. She is a Bloomberg BNEF's head of renewable fuels. What it means under another Trump presidency, where the risks are and where the opportunities are. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. You can also check us out on YouTube as well. We also, at around this time every Monday, we tap our wonderful Bloomberg BNEF folks. They do amazing research on commodities, power, transport, industry, buildings, ag sectors, all in the terms of helping businesses and finances transition to green energy, to the energy transition. They cover great stuff for us. Anna Davies is a Bloomberg BNEF's head of renewable fuels, and she joins us now. Anna's worn many hats also over at BNEF over time. Anna, what kind of renewable fuel projects are there, let's just say in the U.S., and let's set the stage, because then we want to know what's going to look like 4 years from now.
Sure. So there's a good number of projects in the U.S. Nice to be here. And there's a wide range. The U.S. is the biggest market at the moment. So a lot of the projects are based here. A lot of renewable fuels. When we talk about renewable fuels, we're really talking about basically biofuels at the moment, made from oils like soybean oil, or even use cooking oil, like the excess grease from your fryer. The key here is that unlike ethanol or biodiesel or biofuels you usually think about, Renewable fuels are a special term for ones that are drop-in ready, which means they produce a diesel molecule or a jet fuel molecule that's basically the same as fossil diesel or jet fuel. So you could just blend it one for one into your diesel or jet fuel pool. There's no blending limit. It can just go in however much you have. So it's really cool in that regard. A lot of the projects in the US are based, especially out of California. You could take an old oil refinery and convert that to produce a bio oil, like a bio feedstock instead of a crude feedstock. So that's really common. There's also a lot of projects being developed to use other feedstocks, things like corn ethanol. Because if you think about passenger vehicle fleet going electric, you're going to have less demand for gasoline or ethanol. So this could be another use for that ethanol in the world today.
I got to ask the question everybody wants to ask. How will the Trump administration impact renewable fuel business?
That is the million-dollar question, probably for every clean energy sector. I'd say that renewable fuels, compared to a lot of the other sectors of clean energy, might be a bit better insulated than most, because this is a sector where it really promotes the agriculture industry by using biofuels as a new demand source. It also is a way for the oil industry to get a second life, because they can take this old refinery and convert it into something new. So in that regard, I don't think it's going to be completely in the crosshairs. There are ways, though, that the Trump administration might have a big impact on this sector. One of the big ones is if he puts a tariff on used cooking oil from China or some of the feedstock.
We import used cooking oil from China.
We do. China produces a lot of used cooking oil, a lot of fried food. They export the cooking oil to California, which they can then blend into these refineries. Used cooking oil is a really popular feedstock for renewable fuels because it has a low carbon intensity. Otherwise, it's just wasted, right? You throw it out, it has to be collected.
What
you have
did
to be
we do
disposed of.
before this with our used cooking oil?
It was collected into and dumped in probably a dump.
But so we don't have enough used cooking oil here in the U.S. to supplement? Don't we fry everything?
We have a lot, but if you think about replacing, the diesel or the jet fuel pool, you can always use more.
I see. So to that point, what is the price spread between renewable fuels and traditional fuels right now?
Tie. Renewable fuels, their cheapest are probably 2 to 4 times, which is a big range, but cheaper than, or more expensive, than fossil like jet fuel. And if you talk about some of the novel technologies, so one of the ways to make these renewable fuels is to take carbon dioxide and green hydrogen, which is great because then you're not using any bio feedstock. That could be up to like 10 times as expensive as jet fuel. These are pricey fuels, and they're probably not going to get too much cheaper because a lot of it is just the technology needed.
So, but if as an airline, am I mandated to use a certain percentage of clean fuel?
Depends where you are. In Europe, starting next year, yes, you are mandated to blend it in. In the US, we don't have mandates yet. The biggest is we're doing a lot of carrot incentives. So the Inflation Reduction Act has a tax credit for producing renewable sustainable aviation fuel. That would give a discount of about $1.25 to these producers. It's not enough to cover that, bridge that cost. It could bring it down closer, but it doesn't.
And then if that goes away, then it makes it even worse. So what's the best way to lower that gap? Is it we need better technology, we need scalable technology, or more sourcing?
I don't think technology is going to come down too much in cost, because a lot of the cost, technology is a big component, but the feedstock is a big component too. And it's hard to get
that cooking
cheaper.
Oil from China.
Exactly. So that could make it worse. A lot of it is probably going to be a bit mix of mandates and subsidies. So if you have a mandate saying you just have to blend a certain amount, that's going to cause, maybe you put a premium on the cost of jet fuel, a tax on jet fuel, that can cause that price gap to close. Or if you offer an incentive to produce these fuels, that can bring it down. There's a lot of research being done on new feedstocks, like something like cover crops. If you have a field, you could just plant a new oil crop in the off season. That can help retain the soil. You can use the same land. You don't have to have this issue of food versus fuel land use. But yeah, that's the million-dollar question: is how cheap can you get it?
So interesting.
It is. I'm glad we do this every week.
Yeah, see, we learn stuff. All right, Anna Davies, thank you very much. Really appreciate it. No easy solutions is basically at the end of the day what we see. Anna Davies is Bloomberg BNEF's head of renewable fuels. Here's something that caught my eye, Paul. Did you see this one? That some colleges are cutting their tuition by 50%. As Ivy's near 100,000. Did you see this?
No.
So, okay. So basically you got some private colleges like Bethel University in Minnesota, for example, cuts its tuition price from $44,000 to $26,000 in an effort to attract more students because other ones are just so expensive. But then can you survive if you slash your tuitions?
Right. And small colleges that do not have an endowment, the answer probably is no, because they fund so much of their total funding comes from tuition. They don't get income off the endowment like bigger schools do.
Yeah.
So that's why they've always had a very stretched business model. But having been involved in higher education for a long time at the board level, you got to cut your costs dramatically,
Right,
and there's
so
no will to do that
You
anywhere.
got to cut costs, you got to cut tuition, you got to enroll more students, and you also got to spend to attract the best. Feels like a terrible
It's a
proposition.
very tough business model there.
I mean, talk about some OpEx and what you got going on there. All right, wraps it up for us on this Monday. Balance of Power with Kelly Lyons up next.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Peter King. It was one of those trials they called the trial of the century. Eric and Lyle Menendez were convicted of killing their parents back in 1989, but now new evidence appears to support their claim that they were sexually and psychologically abused and feared for their lives. A long-awaited hearing that could set them free starts in an hour and a half. CBS's Elise Preston is in Los Angeles.
The brothers will appear virtually. I did speak with their attorney, who said that they could possibly speak in court today. The judge could also take up what is called a habeas corpus petition, which basically questions the legality of their imprisonment.
Israel continues its attacks on what it says are Hezbollah targets inside Lebanon. But from East Jerusalem, CBS's Deborah Patta says there's increasing talk of a ceasefire.
Anything Netanyahu might agree to still has to be ratified by his cabinet. That cabinet meeting takes place tomorrow. Now, we do know it will probably focus on setting up an international committee to monitor the implementation of a previous ceasefire that was agreed to all the way back in 2006.
A lot of people are getting a head start on Thanksgiving travel. This man was at Newark Liberty well before dawn to fly to Cameroon.
It's going pretty well. I really have not faced any issues, and it's been pretty smooth.
American Airlines flyers going through Charlotte Douglas could face delays, though, because of a strike by workers who clean planes and provide wheelchair services. The strikers want more pay.
Most of us are homeless, are living from paycheck to paycheck, and for the jobs we do, that's not right.
A British author who sold millions of books around the world has died. Here's CBS's Vicki Barker.
Barbara Taylor Bradford's first bestseller, A Woman of Substance, sold 30 million copies, was made into a miniseries, and featured the first of many strong-spirited heroines, not unlike their creator.
I'm a tough woman who works hard, and I'm resilient.
Born working class, her mother had been born in a Victorian workhouse. Bradford lived the same rags-to-riches life as her heroines, making millions and spending millions on jewels and clothes and art. Her agent says she died peacefully at home at 91. Vicki Barker, CBS News, London.
If you're having trouble with your Outlook account, you're not alone. Scattered outages have been reported today. It's a presidential tradition, the pardoning of ceremonial turkeys on Thanksgiving week. President Biden has just given a pair of new leases on life.
Based on your temperament and commitment to being productive members of society, I hereby pardon Peach and Blossom.
The two will live out their days in a sanctuary. Wall Street, the Dow is up 311, the NASDAQ up 72. This is CBS News. will fly this Thanksgiving with Thanksgiving food this week. There's a lot to find out about what you can and can't take with you.
Fly into Grandma's house, and you need to know if you can bring your part of the feast on board that plane.
I want to bring stuffing. I'd like to bring a pie.
TSA Administrator David Pekoski says,
If you have a question and you have the ability to text us, just text Ask TSA.
He says you should receive a response really fast. And if you don't want to text, no problem.
Visit our website, tsa.gov.
And then just click on What Can I Bring?
And it'll step you through all the things that you can and cannot bring to a checkpoint with the search feature.
Stacey Lynn, CBS News, Washington.
Drones and Google Earth have helped archaeologists find 4,000-year-old network of earthen canals in what's now Belize. They say fishermen used the ancient canals to catch freshwater species long before the Mayans built their temples. Peter King, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Donald Trump checking off his list. Welcome to Balance of Power. I'm Kaylee Lyons in for Joe Matthew on this Monday edition. And it was Friday that we learned at long last who the president-elect has selected to be the next Treasury Secretary. Assuming he gets confirmed, it will be Scott Bessent. He was just one of the names we learned about late Friday evening as Donald Trump has now filled out the 15 big roles within his cabinet, or at least named who he would like to see. We'll have more on that and the market reaction to these picks from Bloomberg's Laura Davison and Abigail Doolittle. Plus, our signature political panel, Rick Davis and Jeannie Shanzano, will be weighing in, and we'll zero in specifically on Donald Trump's selection for Labor Secretary as well. Seth Harris, now at the Burns Center for Social Change, but formerly a labor advisor in this administration, will be with me ahead this hour. But we begin, as always, with a check on the markets as the trading week gets underway. Charlie Pellet, how we looking?
All right, now a lot of green on the screen with a wicked move higher here with the S&P up 16, gain there of 0.3%. We got the Dow up 342, and up by about 0.8%. NASDAQ up 62, gain there of 0.3%. Your 10-year at 4.29%. Look at the 2-year right now, 4.30%. Spot gold is tumbling $83 the ounce, down 3.1%. The precious metal now at $26.32 the ounce, and West Texas Intermediate crude also retreating, down 3.7%, $69.30 for a barrel of WTI. Gold, by the way, tumbling on signs of de-escalating geopolitical tension in the Middle East. So the S&P right now advancing 16, up 0.3%. Stocks climbing with bonds. The dollar fell as traders welcomed Donald Trump's pick of Scott Bessent for Treasury Secretary. One of the big unknowns, though, for investors is the potential inflationary effect of two key policies of the incoming president, tariffs and immigration. Francis Donald is chief economist at RBC.
Remember, inflation is still relatively sticky, and we have some inflationary shocks coming down. We have tariffs that might be coming through. That matters. And more important than tariffs, immigration policy could be really important to the growth outlook and to the inflation one. I actually think immigration will matter more than tariffs over the next 3 years, and yet we don't spend as much time talking about that.
And right now, Macy's shares are lower by 3%. Macy's tumbling after saying it will delay its third-quarter earnings release after an investigation revealed an employee hid more than $100 million of expenses. And also, just a reminder, coming up at 6 o'clock, a Wall Street time, we do have an interview today with Minneapolis Fed President Neil Kashkari. Recapping, S&P up 0.3%. Balance of Power continues now. Back we go to Washington. Your hosts, Kaylee Lyons, Joe Matthew.
All right, Charlie Pellet, thank you so much, and a very happy Monday to you. It's shocking to believe that just 3 Mondays ago, 3 weeks from today, was the eve of the election, and we didn't yet know that it would be Donald Trump elected the 47th president of the United States. And yet here we are 3 weeks later with not just that knowledge, but a pretty clear idea of what this second administration is going to look like, as Donald Trump with a deluge of nominations made on Friday night, has now filled out the top 15 high-level cabinet positions, or at least nominated people for them. They all still have to be confirmed. But of course, the one we were paying the most attention to that we finally got Friday evening was the Treasury Secretary selection. Scott Bessent of Key Square Group, who spoke with Joe Matthew and I on this show just a month ago.
He has a deep understanding of financial markets as opposed to most politicians. So he wants to be involved in the conversation. He has very well-formed opinions. He has a lot of private sector friends. So he just wants to be a voice.
Bessent, of course, talking to us there about the president-elect and what influence, if any, he wants to have on the independent Federal Reserve. But we want to get more into this selection and turn to Laura Davison, Bloomberg Politics editor, who is joining me here in our Washington, D.C. studio. So we knew Bessent, Laura, was in the mix this entire time, effectively, but it took us until Friday evening to realize that he had, in fact, gotten the nod. What is it that tipped the scale here, and do we expect that Trump and his transition team are pretty pleased with how the markets have accepted this choice today?
They certainly are pleased in how the markets have accepted, and that was one of the key things that they were looking for when they were weighing all the different candidates, of looking for someone who Wall Street would say, look, we have someone who we know, someone who we trust, someone who we think will be a strong and steady liaison. This person really is the point person for the administration to markets, to foreign finance ministers, and Bessent sort of had that full package. He's been auditioning for this job basically for a year. He's been with the Trump campaign, out speaking on behalf, in the media, as well as, talking about tariffs and taxes and trade and all these things that are very important to Trump.
Well, and talking about this 333 policy he would like to pursue, 3% debt by 2028, 3% GDP growth, and 3 million more barrels a day of crude pumped in the U.S. But to what extent is he going to be the formative voice in the things that make this happen, knowing Howard Lutnick is now going to be Commerce Secretary, with Trump says trade and tariff authority. Congress controls the purse strings. What is Bessent actually going to be able to accomplish?
He's going to be really the sort of chief economic liaison between all of these different branches. He does outrank Lutnick. Congress will need, basically a lot of direction. They will take the direction from the Treasury Department on where they should go with tax cuts, if they should do tariffs on the congressional side, if that's going to happen more so on the administrative side. But we can imagine that Lutnick will be out there, meeting with lawmakers, meeting with folks at the White House, and sort of being the orchestra conductor essentially for economic policy.
Well, and there will be plenty of other voices factoring into that economic policy as well. The NEC, the Council of Economic Advisors. Do we have a sense if any of those who were competing for the Treasury position might end up in those kinds of roles, or is this going to be a whole new cast of characters?
This is going to be a little bit of a cast of characters. There were at one point last week discussions that Bessent might take the NEC job, and so now that's open. There's a lot of questions really about how this whole economic team is going to fit together. As you mentioned prior, Lutnick sort of has supervisory power over tariffs. Typically, that would be the U.S. trade rep. That's a position that hasn't been yet to name. We'll see if someone like Bob Lighthizer, who was sort of in the mix for Treasury Secretary, could go there, refilling the job he had during the first administration. It could be one of his deputies. We'll see kind of where these all of these land. But there's a lot of sort of names of people who are angling to get into the administration who do not have jobs yet.
Well, there's plenty of people that do have jobs, though, that we learned about on Friday night. Brooke Rollins, for example, for Agriculture Secretary. Lori Chavez-DeRemer for Labor. Scott Turner, a former NFL player, for HUD. What should we make of these other choices?
These are folks that, sort of fulfill sort of the key Trump aspects of one, you need to be good on TV, you need to have sort of experience repping Trump. Two, having a little tie to celebrity. I'll note, Susie Wiles is the daughter of an NFL player and an NFL broadcaster. Sort of having some of these factors are very helpful to sort of getting past that first test of, is this someone that Trump should consider for this job?
Well, and are any of them people who initially raise eyebrows around confirmation questions, or have we already gotten essentially everyone who potentially could face an uphill battle in getting Senate confirmation? Tulsi Gabbard, RFK Jr., Pete Hegseth. Is it really just going to be those three now that we have to focus on?
Those are the ones that people are focusing on. In this last crop, there's actually some people who may be, relatively easier to concern. Chavez-DeRemer, for example, she is actually far more pro-labor than many Republicans are. She supported the PRO Act. That's, of course, Bernie Sanders, labor legislation. So this is sort of the less controversial picks came on Friday night, but the Tulsi Gabbards, Now that we have Matt Gaetz out of the way, Pete Hegseth and RFK Jr. are going to be where lawmakers are focusing their energy. We saw, already over the weekend, James Langford saying that Tulsi Gabbard was going to get a lot of questions, signaling that may be a tricky confirmation.
So is that what the Trump transition team spends the next 56 days focusing on? They've named everybody kind of up front, get it out of the way, and now is it just about lobbying for their ultimate confirmation?
It's that, and it's also they're quickly pivoting to talking about policy. So what are the executive orders they want to get done in the first 100 days? They're talking about the tax bill, moving that, in February, March, just after they take office. So there's a lot that's going to happen. I anticipate that we'll see executive orders multiple a day for several days, as the administration kicks off. So they're getting, all of those I's dotted, T's crossed, everything ready to go, so Trump can just start signing as soon as he takes the oath.
All right, Bloomberg's Laura Davison, politics editor for us. Thank you so much for joining me. And as we just discussed, what the Trump transition team was trying to achieve was Wall Street welcoming this ultimate Treasury Secretary selection. And it does seem like the reception is pretty warm for Scott Bessent as the trading week gets underway here. So for more, we turn to Abigail Doolittle, Bloomberg chief markets correspondent. Abigail, in the bond market especially, it's quite a move.
That is really where the move is at this point. Earlier, we did have stocks up nearly 1%. Right now, though, the S&P 500 up just a little more than 0.1%. And interestingly, we have the NASDAQ 100 turning slightly lower. So the reaction that we initially had on the expectation that had been at play for a while, just as you and Laura were talking about, coming to fruition late last week, cheered by Wall Street for stocks initially because he is a Wall Street veteran, the voice of reason, but that voice of reason probably affects more the bond market, because as you mentioned, there's a big rally there. Right now, we have that 10-year yield down about 11 basis points. So that does tell you bonds are rallying. The dollar having its worst day in about 2 weeks. It right now is down. I have a sea of symbols in front of me. I'm trying to find it, down about 0.5% or so. All of this on the idea that Bessent could, in fact, temper the idea of President-elect Trump's economic and trade policies. He favors a policy apparently more of gradualism, so tariffs might be put into place, but they might be less, and they might be put more into place more slowly. What's really interesting, though, Kaylee, is that he is front and center in terms of wanting the tax cuts. So that is one reason that stocks were higher earlier. Let's see if they can get their mojo back by the end of the day.
Well, and it's those tax cuts that he says will drive one of his 333 goals, 3% GDP growth. He thinks a lower tax burden will help in that. But for one of the other three is 3 million more barrels a day of crude pumped in the United States. I wonder if that kind of policy pursuit is why we're actually seeing oil under pressure today, or if that has more to do with what's going on abroad.
That's a great point, Kaylee. It probably is a little bit of both, but I think it's probably more what's going on abroad in terms of the possibility that there's been some sort of a truce between Israel and Hezbollah, as Axios has reported. Oil right now down 2.8%, back below $70 per barrel. Steve Sosnick over at Interactive Brokers has told me in the past that support is at 65. If it goes below those levels, we could really see oil go lower. That's probably something that the Trump administration would, in fact, like, as you were just talking about in terms of that 333 plan. Really, that would be another tax cut, putting money right into the pockets of Americans.
All right, Bloomberg's Abigail Doolittle, chief markets correspondent for us. Thank you so much. And I would just point out, while we're checking market reaction to all of this, Bitcoin is down on the day now by about 2%. We're back at the $95,000 level, a little above it, after getting a taste of almost 100,000 on Friday night. So that's something we will continue to watch here on Balance of Power. But we have much more still ahead, including more on the labor secretary pick, the former congresswoman from Oregon, who, as Laura Davison just reminded us, was a supporter of the PRO Act and is actually facing some backlash from conservatives. We haven't seen much Republican pushback on a Trump cabinet pick yet to this point, but could it come when they look at labor and unions? We'll have more with Seth Harris, an expert in those subjects, next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the green right now. Stocks are climbing with bonds. The dollar fell as traders welcome Donald Trump's pick of Scott Bessent for Treasury Secretary, betting that the hedge fund manager will bring a Wall Street mindset to the role. The Dow higher by 272 points, up 0.6%. S&P up 4, up by about 0.1%. NASDAQ right now just turning negative, down by 0.5 point. The Russell 2000 index, though, holding on to a gain of 1.6%. 10-year at 4.29%, with that 2-year 4.30%. Spot gold down $90 the ounce, down 3.3%. Gold is tumbling on signs of de-escalating geopolitical tension in the Middle East. The Spider Gold Shares ETF, GLD, it is down now by 3%. Bitcoin, meanwhile, down 2.2%, 94,979 on Bitcoin. This is MicroStrategy accelerated its Bitcoin buying. MicroStrategy said it bought a record $5.4 billion in Bitcoin, the third major purchase announced this month by the crypto hedge fund Proxy. MicroStrategy down by 4.3%. Again, recapping, we've got the S&P up 3 now, up by 0.1%. NASDAQ in the red, down 3 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Here in Washington, we're getting this work week started after what was a short weekend for many political journalists, because work went well into the night on Friday, as it was Friday evening when the president-elect Donald Trump decided to dump a whole host of cabinet-level nominations on us, including that, as we've mentioned, of Treasury Secretary Scott Bessent, tapped for that job. But we also got his selection to be the next Secretary of Labor. The current Congresswoman from Oregon, Lori Chavez DeRemer. And her nomination is already getting some pushback. Not from Democrats, as you might expect, but actually from Republicans, as conservatives have some concern about her support for the PRO Act, protecting the right to organize. She was one of just 3 Republican co-sponsors of that legislation. And some see that as a sign that she might be too close to labor unions. So for more on this and what it signals about the approach to unions this incoming administration will be taken, we turn to Seth Harris, back with us here on Balance of Power. He, of course, was a top labor policy advisor to President Biden. He's now a senior fellow at the Burns Center for Social Change at Northeastern University. Seth, welcome back to the program. I do wonder what you know of Chavez DeRemer, and how close to unions you really perceive her to be.
What I know about her is that she is a unicorn. She is a genuine pro-union Republican, and we thought they had all gone extinct, but here we found one in nature, or President Trump found her in nature. She had support from several unions in her re-election campaign, which was unsuccessful. As you noted earlier, she is a co-sponsor of the PRO Act, which is the private sector worker organizing legislation that has been pushed aggressively by the labor movement, particularly the AFL-CIO. She's also a supporter of a very important public sector worker organizing piece of legislation. So these are positions taken by only a very, very, very small handful of Republicans in Congress, and that's why she is facing some pushback from elements of the business community and also from some Senate Republicans.
So if she's going to be confirmed by the Senate, would you expect actually most of that support comes from Democrats instead of the majority Republicans?
Well, the Senate Republican caucus is in a little bit of a pickle with Congresswoman Chavez DeRemer. They don't want to vote no on one of President Trump's nominees, particularly when there are several other nominees who are much more seriously problematic than the Congresswoman is. I won't name them, but you know who I'm talking about. So the question is, does the business community very aggressively oppose Congresswoman Chavez-DeRemer in her effort to become labor secretary? I expect that she will get a large majority, if not all, of the Democrats supporting her, because she is just about the best candidate for labor secretary the Democrats could hope for. I expect she will get a very sizable percentage of the Republican caucus simply because President Trump wants them to vote for her, and they're going to have to save their no votes for other cases.
Well, as we consider what the president-elect wants, Seth, you, of course, have been on this program before arguing that he was not a very pro-union president the first time around. But does this election suggest that this second administration might actually be different?
I hope so, but I doubt it very much for a number of reasons. First, President Trump has made pretty clear he is not a fan of unions, and there's a lot of people around him who are very aggressively opposed to unions and would like to see the union movement shrink or disappear. The second reason is that the Labor Department is not the National Labor Relations Board. The law that is made and the regulations that are promulgated having to do with worker organizing and collective bargaining come out of the National Labor Relations Board. The Labor Department administers job training programs, enforces employment laws like the minimum wage and overtime, but it really has nothing whatsoever to do with union organizing and collective bargaining. And the third reason is President Trump has already made abundantly clear that he would like to eliminate or significantly reduce the size of federal sector unions, the unions that represent federal employees. I don't think that all of a sudden he's going to become a union supporter in one sector and an aggressive opponent of unions among the employees who are going to be working for him. So I'd like to be positive about this appointment, and I think it is a good thing that somebody who thinks about workers and thinks about worker power will be sitting in the Secretary's office at the Labor Department. I didn't expect that, but I don't think it means that President Trump all of a sudden becomes Joe Biden.
Well, we also know that President Trump, or as when he becomes the 47th president, there are a number of things that he would like to pursue that would impact labor supply in the United States, including the mass deportations he's been talking about, which could, create a shortage in some sectors of workers. And I wonder if you actually see that creating an environment in which unions and collective bargaining could be able to exercise more power if the supply of workers is reduced materially.
The mass deportation is which is going to be tragic for our country, and it's going to be catastrophic for our economy. I don't think it helps the labor movement in the least. Organized labor works very closely with immigrant communities in their organizing, in their outreach, in their advocacy. There's a lot of evidence that some employers use immigration law to bust union organizing drives. They call the immigration authorities when there's any sense that workers who are undocumented and working for those employers might be trying to organize. I fear that that will return and that we will see a lot of union organizing sabotaged in that way. In certain sectors, you have undocumented workers in some sectors, but not all sectors. But I think it is going to put a lot of fear into the hearts of a lot of workers all across the country, not merely undocumented immigrants, but others like DACA recipient, DACA beneficiaries, and those who have temporary protective status, and those who have green cards even, are going to be very deeply fearful that they could be sent out of the United States. So this is not good, I think, for anyone, but I think it's particularly bad for those workers who would like to see more organizing.
Well, and as we consider the potential secondary effects of some other policies as well, like tariffs, for example, which could raise, obviously, the cost of importing materials and supply into the U.S., and that could hit ultimately the bottom line for many companies. I wonder then how that filters into the labor costs they are willing to tolerate, what that would mean for wages, especially if it also creates an inflationary environment and workers would be looking for wages to try to keep pace with that. How do you see that potentially playing out as the way in which tariffs ultimately translate to labor?
The logic of President Trump's tariffs is that if you build up high tax walls, tariffs are essentially taxes. If you build up high tax walls to bring in goods into the United States, then we will develop industries in the United States to make those same goods, and they will be comparatively advantaged. That's the logic, but it's so grossly oversimplified that it's just not going to turn out that way. First of all, a lot of industries have left the United States because it's simply too expensive for them to operate here. They don't want to pay a living wage to American workers. They don't want to comply with American environmental standards. They don't want to pay American taxes, and so they have moved overseas. Those manufacturing facilities and other kinds of facilities largely are not going to come back. And even if they were to come back, it would take years and years and years to engage in the kind of industrial policy that would be required in order to rebuild those industries in the United States. So the likeliest consequence of the tariffs will be much higher prices for Americans, for consumers, not merely with respect to imported products, but also domestic products. The prices will go up because American producers won't have to keep their prices low. And also, I think a lot of people are going to lose their jobs because what's imported into the United States is not all finished goods. Some of the goods are inputs to products that are made in the United States. And if you're building a car and you can't get the part of the car that you need that's coming in from another country, you can't build cars. And that means that people are going to lose their jobs. So this is going to be very, very deeply disruptive. It is going to be very expensive, and it's going to be bad for the economy and workers.
Well, and of course, a lot of these imports and inputs into goods come first through ports as they enter the United States, which brings me to another question, Seth. The dock workers strike here on the East Coast that, of course, a deal was reached to put off until January 15th or suspend until then. That's just 5 days before President Trump will be inaugurated. What exactly, how difficult a union negotiation could he be inheriting essentially from his first days back in the Oval Office?
Very, very difficult. The biggest issue for the longshore workers in their negotiations with the U.S. Maritime Alliance, which is the trade association of the East Coast and Gulf Coast ports, was wages. And the union and management settled the wages issue. But the other biggest and most important issue is automation. What the union does not want to see happen is for their members to be displaced by automation in the ports. Of course, the employers would like to move to automation because it's a lot cheaper and it allows them to do what they're currently doing with many fewer workers. So that is a big sticking point, and it is deeply contentious. The union and management have started negotiations a number of times over the last several months, and then they've stopped negotiations because they simply cannot make progress. So I think the possibility of a strike is quite high. I think that President Trump is going to face a challenge when he gets sworn in.
All right, Seth Harris, thank you so much for joining me. Senior Fellow at the Burns Center for Social Change at Northeastern University and a former top labor policy advisor to President Biden, here with us on Balance of Power, where much more is still ahead on Bloomberg.
markets. 240 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all advancing. NASDAQ, though, has been swinging between gains and losses. Little change right now on the NASDAQ Composite Index. The S&P up by just 3 points now, giving up earlier gains. The Dow holding on to a 251-point advance, up by about 0.6%. The Russell 2000 Index of small cap shares, though, the outperformer, up right now by 1.6%. 10-year at 4.29%, the 2-year 4.30%. Gold down $89 the ounce, down now by 3.3%. Spot gold $26.27. West Texas Intermediate crude down 3%, $69.13 a barrel. Bitcoin, meanwhile, lower by 2%. Bitcoin at $95,060. So stocks are climbing with bonds. The dollar fell as traders welcomed Donald Trump's pick of Scott Bessent for Treasury Secretary. The hedge fund manager who has picked to become the next Treasury Secretary will be playing a significant role in the second Trump administration. And with more on that story, here's Bloomberg's Vinny Del Giudice.
Scott Bessent runs Key Square Group, a macro fund. As Treasury Secretary, he'll have a far-reaching portfolio from economic diplomacy and tariffs to extending tax cuts and easing Wall Street regulation. Bessent will oversee public financing and economic sanctions and have a hand in picking the next Federal Reserve chair when Jerome Powell's term ends in 2026. Vinny Del Giudice, Bloomberg Radio.
Apple CEO Tim Cook has joined more than 20 other corporate leaders in discussions with China's premier as global companies grapple with potential trade disruptions and economic uncertainty. Apple shares, they're gaining today by 0.1%. Again, recapping, S&P up 3 now, little changed, up less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Lines.
All right, Charlie Pellet, thank you so much. I'm Kaylee Lines in for Joe Matthew on this Monday edition of Balance of Power. It is Monday, November 25th, which means we are now 56 days out from January 20th, the day that Donald Trump will become the 47th president of the United States. That's still a pretty lengthy window of time for this presidential transition to continue apace. And yet it does seem the Trump transition team has front-loaded things a lot, considering that as of Friday night and into this weekend, he had already named the top 15 secretary positions in his cabinet. In addition to a number of other names he's, of course, already given us, many of which do not require Senate confirmation. So while they've been quick to get the nominees out there, they have not been quick to sign some documents. They are not signing ethics and transparency pledges specifically that are needed to unleash the resources, the security clearances, and the classified briefings, not just for the incoming president, but for everyone else that he has appointed to his second administration. So we want to get into this now with our signature political panel. Rick Davis, Stone Court Capital partner and Republican strategist, alongside our Democratic analyst, Jeannie Sheehan Zaino, who's a senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, how is Donald Trump and the rest of his team, how are they supposed to spend the next 56 days to prepare to take office in January if they aren't even getting access to the non-public information they might need to be able to walk into the job with the best foot forward?
Yeah, it is an incredible attribute of the transition. They've already announced the appointment of so many cabinet secretaries, but at the same time, those people can't get access, as you point out, to the cabinet agencies that they'll be running under the normal transition process. The transition, only requires certification of ethics and that you're going to abide by. There are 3 different forms you got to fill out, and boom, you're in. You get to start having access to the confidential information and direct meetings within the cabinet agencies themselves. And everybody wants to see that happen. But the Trump group, the Trump transition, has said they will ultimately execute those, but they haven't done it yet. And they do risk running out of time and having this great head start with these announcements are going to be hobbled by the limits on what they can actually learn about the agencies they'll be walking into in January.
So for all of the pledges from this outgoing administration, from President Biden, from the Vice President Kamala Harris, Jeannie, who of course lost to Donald Trump, that they will oversee a not just peaceful but smooth transition of power, it could ultimately end up not being that smooth or not as smooth as it could be.
Yeah, that's right. And you know, the onus is on the transition teams to work together and to sign those documents Rick was just talking about. There's 3 of them. They involve transparency, they involve ethics. But I think when we talk about the risks here, the risks are not just for the incoming administration. They are for American national security. A lot of people go back to 9/11, particularly security experts, and say, one of the major causes of that horrific event may have been the difficult transition that occurred as a result of the 2000 election not being resolved for so long and the amount of animus between the teams and so forth. And that is the risk we run today if the Trump team does not abide by what has been the regular order of things. And this is where my question is, why is this left up in the United States to the transition team to decide? Why has Congress not acted to make this a requirement? Because again, it's not just about that team, it's about our national security.
Well, if you're bothered by this, Jeannie, not necessarily all of the American electorate is. CBS News has some new polling out around, together with YouGov, around Trump's handling of the presidential transition thus far. And Rick, the majority of those surveyed approve of it, 59% to just 41% who disapprove. I wonder what that tells you and how important American perception of the transition is in shaping the perception of the president-elect when he formally becomes president in January.
Yeah, I mean, the public sees the big moving parts, right? We report all the time, every day, especially last Friday, of the, really rapid amount of appointments that the president is announcing, and he's doing it in kind of a vacuum. This period of time post-election in November, has been quiet. So up until the holidays, what else is the public going to hear? So they get the big names like Marco Rubio and folks like that, and they say, wow, things are on track. We really accept this. They're not looking underneath the sheets and seeing, Robert Kennedy's team being denied access to HHS. So I think that, look, it'll probably work out just fine. It's not that there are people who are being kept from those places. It's really up to the Trump administration to execute these forms and get going. And they don't lack resources. They've got the money to run a transition on their side. And a lot of these people have come from government previously, the Trump administration. Almost every one of them so far at a senior level were either in Congress or in the administration. So they don't lack government experience. But, it is a detail that should be administered. And look, I mean, there's only so much you can do. You can bring the horse to water, but you can't force it to drink. Donald Trump's going to run his administration the way he's going to run it. And if these are decisions he's making, the Biden administration has had an open door policy, and it's really only limited by Trump himself at this stage.
Well, so as we consider his decisions and the decisions of who to name to these various positions, Rick just mentioned RFK Jr. for Health and Human Services. Jeannie, according to CBS and YouGov, 47% think that was a good choice in terms of those total polled. For Trump voters specifically, 80% approve of RFK Jr. Only 8% think he's not a good choice compared to 34% overall who think that. For Pete Hegseth, though, the numbers are much more close in terms of the total. 33% say he's a good choice. 28% say he's not, which just kind of shows the contention over that nomination specifically. And I wonder if it is still those two, and maybe add Tulsi Gabbard to this list, that we're going to be now watching for the Senate confirmation uphill climb potentially, or if there's any others in that dump of names on Friday, Jeannie, that you think might give senators some pause.
Yeah, I think those are the big 3. Kaylee, I didn't get to talk to you, so I wasn't able to ask how your Friday night was, but I kept wondering, is this how Trump trying to get after the press and the journalists, rob them of their Friday night? Boy, it was a big dunk to your point. I would also just add, CBS, while I love the CBS poll, I used to work there. you know, it is one thing to ask people questions that reflect, like, do you support RFK Jr.? And, you know, do you think Pete Hegseth was a good choice? But how do you see the transition going, and do you support it? Of course, the majority of Americans are going to say, so far, so good. I'm not sure it gives us much by way of really, really good information. And, you know, the reality is we are in danger of over-polling in this country. And I think that's a good example of that. But, you know, RFK Jr., he is an example, and I also thought really interesting Donald Trump's choice of Secretary of Labor, or his, you know, who may be confirmed for Secretary of Labor, are both really good examples that this is not, you know, your father's Republican Party. He is choosing people who are outside of the normal frame of what we think as a conservative, and it's going to, I think, be fascinating to watch. You know, RFK, pro-choice. Lori Chavez Ramirez, she's somebody who's really pro-labor, perhaps the most pro-labor candidate ever named by a GOP president to be labor secretary, if she's indeed confirmed. So some really interesting choices there, which I think reflect this very big coalition the incoming president has put together. And I'm not surprised they have support from the vast majority of Republicans and the American people.
Well, Rick, I'd love for you to weigh in specifically on the selection Jeannie just referenced for Labor Secretary, the current Congresswoman, though she lost her reelection race in Oregon, Lori Chavez Ramirez, someone who signed on to the PRO Act, who already is getting pushback from some conservatives who think she's too close to the unions. Is she actually going to be able to get over the finish line in a Republican-led Senate, or is it going to require Democrats to make that happen?
Oh, I think that she'll sail through. The reality is, and it's going to take a while for some Republicans to get the memo on this, but Donald Trump got elected with overwhelming support amongst working class people, union members, non-union members, but people who roll up their sleeves and make America work every day. And she, I think, reflects an approach to them that most traditional Republicans don't. You know, if you think that it's the Republican Party of country clubs and Main Street or Wall Street, you're wrong. I mean, this is a new crowd that are seeing a majority of the country support their efforts, and the reality is this is how he's going to govern. So unless there is a real scandal associated with any one of these members going into the cabinet or sub-cabinet level positions, Senate's likely to give Trump deference in that. And I think that's certainly going to be the case with a former member like her.
Well, it may not be the party of Wall Street anymore, and yet we do understand Donald Trump was very sensitive to Wall Street's perception of his Treasury pick, Jeannie, which is why it maybe took so long. We didn't get it until Friday evening, ruining a night for many Bloomberg journalists, as you were suggesting earlier. But the market seems to be receiving Scott Bessent, although we are now at the lows of the session. We've actually turned negative on the S&P 500 in the last few minutes. The market reception, by and large, has been, okay, he's a steady hand. Like, at the very least, he might act as a check to some of the lesser economic or financially oriented instincts or pursuits of Donald Trump. And I wonder if that's how you're feeling as a Democrat today, that it could have been worse, or that this is the best that was offered.
Yeah. Hey, listen, we got somebody who was responsible for George Soros's most famous trade. So that's not such a bad thing for Democrats. You know, I think you're absolutely right. Donald Trump has long paid really close attention to what the markets think. And I think this pick suggests that and reflects that. And if you look again just at the economic picks, you have, you know, Scott Bessent, more of a Wall Street supported targeted tariffs, steady hand. And then, you know, you look at some of his other picks in the economic realm, you know, and you see like a Lutnick more in favor of big tariffs. And I think just like in foreign policy, the economy, health, we have what is this big, like I describe as a Donald Trump tent. And it's going to be fascinating to see how they battle this out and in which direction the administration ends up moving, because I do think it's going to probably define much of what happens with the Republican Party ideologically going forward in all kinds of different realms. So it really does speak to a changing Republican Party, or a changed, I should say, Republican Party.
All right, Jeannie Shanzano and Rick Davis, our signature political panel. We'll be back for more on the second hour of Balance of Power, which is straight ahead. We're also going to touch on geopolitics, as Reuters is now reporting that President Biden and French President Emmanuel Macron, within the next 36 hours, could announce a ceasefire deal between Israel and Hezbollah in Lebanon, citing 4 Lebanese sources on this potential ceasefire announcement. So we'll have the details straight ahead here on Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
A Scott Bessent bid comes into the bond market. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons on this first trading day since we learned that Donald Trump has tapped Bessent to be the next Treasury Secretary. Financial markets seem largely okay with that, but we're going to get some reaction from the House Financial Services Committee. Its ranking member, Democratic Congresswoman Maxine Waters, will be with me in just a few moments. And we'll get more reaction to the other cabinet selections Donald Trump has dropped in a frenetic pace with our signature political panel, Rick Davis and Jeannie Shanzano, inclusive, of course, of a tapping of Russ Vought for the Director of the Office of Management and Budget. We'll have a former director of the OMB, Mick Mulvaney, joining us this hour as well. But we begin, as always, with a check on the markets. Charlie Pellet is tracking the trading for us. Hey, Charlie.
Well, hello there, Kaylee Lyons. We have got the Dow, the S&P, NASDAQ all advancing right now. NASDAQ has been swinging between gains and losses, but right now we're looking at NASDAQ up 23, a gain of 0.1%. Dow Jones Industrial Average is higher by almost 300 points, up by about 0.8%, while the S&P higher by 7, up 0.1%. The Russell 2000 Index, so of small cap shares, by far the outperformer today, up 1.7%. Again, to put that in context, S&P up by about 0.1%. 10-year at 4.29%, the 2-year 4.31%. Gold and oil both declining today as Israel moves closer to a ceasefire with Hezbollah. Spot gold down 3.2%, down $88 the ounce to $26.27. West Texas Intermediate crude down 3.1%, $68.99 a barrel on WTI. Bitcoin also retreating today, down 2%, 95,115 right now on Bitcoin. Macy's shares are down 3.3% after saying it will delay its third quarter earnings release after an investigation revealed an employee hid more than $100 million of expenses. Again, Macy's down now by 3.3%. Recapping, S&P up 9, a gain of 0.1%. The 10-year 4.29%. The 2-year right now 4.30%. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet outlining the market reaction for us to the news of the day, including, of course, the late Friday announcement that Scott Bessent will be, if Donald Trump gets his way, the next Treasury of the Secretary of the Treasury. It is Monday, after all. Of course, keeping in mind that if Bessent is to be the next Treasury Secretary, he does still need to win Senate confirmation, but he has had a pretty clear narrative of the agenda he would like to pursue, this kind of 3-3-3 policy, he says. Reduce debt to 3% from the current 6%, make GDP growth go up to 3%, and pump 3 million more barrels a day of crude in the United States. He also has floated the idea of a shadow Fed chair and had this to say to Joe Matthew and myself last month when he joined us about the influence Donald Trump might want to have on Fed policy.
He has a deep understanding of financial markets as opposed to most politicians. So he wants to be involved in the conversation. He has very well-formed opinions. He has a lot of private sector friends. So he just wants to be a voice.
We want to add another voice to our program here on Balance of Power on Bloomberg TV and radio and turn to the ranking member of the House Financial Services Committee. The Democratic Congresswoman from California, Maxine Waters, is joining me now. Congresswoman, thanks so much for being here. I would love first just your reaction to the nomination of Scott Bessent. Will he be an adequate steward of the U.S. economy?
Let me just say this. As the world has been watching President Trump's appointees, it is not about competence. It is not about the ability to be an advocate for the people and protect investors and do all that needs to be done to ensure that, the people of this country, that the Americans have someone looking out for their best interests. He has made his appointments based on loyalty, and that means they will do whatever he wants. And so, I consider the new public policy will be whatever Trump wants by his appointees who have been chosen because of their loyalty. So I cannot get into whether or not this appointee, the Treasury, is different from anybody else, but I expect right now that we're going to be up against appointees at every level of government that are loyal to Trump, and they're going to take this country in a whole new direction, as identified in Project 2025.
So when it comes to Scott Bessent specifically, Congresswoman, do you think the market is perhaps misplaced in its notion that he actually could be something of a balancing force for the president, a kind of steady hand, if you will, when it comes to the extent of tariffs that should be pursued, for example? You don't believe that to be true?
No, I do not believe it to be true. Again, and let me reiterate, these appointments are made based on whether they're going to do what Trump wants them to do. It is not based on any evidence that they can be independent, that they, in fact, will be looking out for the best interests of the people. And so I'm prepared. I'm prepared for whatever Trump wants them to do, and I'm prepared to fight that. I'm prepared to be able to help organize that committee, the Democratic side, to educate the public about what they're doing and what's going on. So I'm not going to back up and say we can't get anything done. We're going to continue to try and put before the American people the kind of public policy that they expect appointees and elected officials to do on behalf of the people. And then we're going to see if we can not only educate and inform, but whether or not the American people are going to understand that they now have a president of the United States of America who has no respect for the Constitution, does not care what president is on any subject, and that he's going to do what he wants to do. And so I'm looking for him to reveal himself as he has identified himself.
Well, Congresswoman, as you look ahead to the work you'd like to continue doing as ranking member of House Financial Services, you're going to be working with another Republican atop that committee, as there's jockeying now for the chairmanship, a number of candidates, of course, who are vying. Is there someone you'd most like to work with that you think the most productive bipartisan legislative work out of the committee could happen under?
That's a possibility, but if I identify him right now to you for the public, this probably would lessen their opportunity of getting chosen. So yes, I hope there could be someone that follows that description, but I can't tell you whom at this point.
So just one of the candidates, am I understanding, you think you could work with on a bipartisan basis of the 3 or 4 that have been floated?
Well, to tell you the truth, I could work with members from the opposite side of the aisle, pretty much in the way that I've worked with McHenry and others. But we've got to see who's willing to step up to the plate and do what is necessary to protect our investors, do what's necessary to hold on to the Consumer Financial Protection Bureau that's protecting our consumers. Any of those who can do that, I can certainly work with them.
Well, we have seen some bipartisan work coming out of the committee in this committee in the 118th Congress, including a bill that advanced out of the committee and ultimately passed on the House floor, the FIT 21 Act, the market structure, crypto legislation. And Congresswoman, I wonder what you think the future is of those kinds of legislative initiatives now that Republicans won't just have control of your body, but the Senate as well.
Well, let me tell you, I've worked very closely with McHenry where we've tried to get stablecoin. Our efforts have been about guardrails. We're not opposed to legitimate legislation that appears to be in the best interest of the people of this country. And there may be some crypto that would like to have guardrails. If there are guardrails that we can agree to, working with all of the entities that are interested in and a part of developing crypto if we're ever going to get there. And that means the Treasury, that means the Federal Reserve, that means the SEC, that means all of these agencies have to come together with the president on crypto in order to have something that will have guardrails and will not just be determined by the fact that crypto companies are trying to invade all of our financial services members with large contributions, et cetera, et cetera. We know what's going on, and we think now they're going to have an opportunity to learn more about what crypto really is and how it works in this digital economy that we're involved in. So we've got a lot of understanding, a lot of searching out, and a lot of educating to do. And if we can work with anyone who's willing to do that and provide these guardrails, I'm ready. And I think some of my members are. And I do believe that some of the members who voted for the crypto legislation that you're talking about will know more now about what they voted for and be a lot more skeptical than they were when they decided that they would give it a chance, that they would go ahead and vote in ways that they didn't quite understand. But I don't think that'll be the case anymore.
Well, you just mentioned there, Congresswoman, the SEC's role in this. The chair, Gary Gensler, of course, has announced that he will be stepping down on January 20th when this new president and new administration comes in. And I wonder, given the nominees for other regulatory agencies that we have already seen coming from Donald Trump, Brendan Carr, for example, at the FCC, what concern you might have about the kind of person who could ultimately fill the shoes that Gary Gensler is stepping out of?
Well, Gensler was an expert in crypto. He taught crypto at the university, and many of those in the crypto business did not like him, did not want him because he knew too much, and he wanted guardrails. And he was absolutely the one who I believe should be in position to deal with securities as we understand them. Crypto is a security. It is not a commodity, and that's what the fight is all about, commodity versus security. And I don't know who can fill those shoes, but we'll have to see.
Well, we know Gensler will be out of those shoes in January. A term that goes much longer, though, and there's no sign that this person will be leaving in advance of the term being up, is Michael Barr, the vice chair of supervision at the Federal Reserve, who, of course, initially put forward the Basel III endgame proposal with higher capital requirements for big banks, something many of your colleagues on the Financial Services Committee and the president-elect have been highly critical of. How do you expect Michael Barr will fare under this new administration? Do you think that Donald Trump might actually try to fire or demote him?
Well, first of all, let me just go back. Some of what you just said, I think I missed. But let me tell you, if you mention Powell over at the Federal Reserve, he cannot fire him. And he's not going to leave. And we've already gotten him to make that a public statement. And so he'll be there. Now, if you're talking about Gensler and why he would be stepping down, he knows Trump does not want him. Trump would fire him in a hot second. And so he's stepping down. He will not be there. I don't know much about a replacement and whether or not they will come in with the same kind of understanding that the securities must be dealt with and that crypto are securities. And so if they come in already thinking that that's not the business of the SEC, the Securities Exchange Commission, that rather it is a commodity, then we have a problem. And so we've got all of these issues to work out.
Congresswoman, I had asked, and I'm sorry if I was hard to understand, Michael Barr, the vice chair of supervision at the Federal Reserve, who, of course, will oversee the future of capital requirements for big banks. What do you think his future holds in this incoming administration?
Well, let me just tell you, we've got to continue to educate our members and the public on why it is so important that we have capital requirements and that we have what we need to protect against, the kind of meltdown that we had in 2008. We cannot eliminate the lessons that have been learned about capital requirements. And so we're going to push very hard with all of the information, with all of the history about what took place when we had the meltdown in 2008, and this country was practically ruined because of a lack of the ability of the banks of this country to be able to ensure all of our depositors and investors that they can be safe.
All right, Congresswoman, thank you so much for joining us here on Bloomberg TV and radio. That is the ranking member of the House Financial Services Committee, Democratic Congresswoman Maxine Waters. Thank you so much. We also want to touch on another story we're following today in geopolitics, with reports that we could be close to a ceasefire agreement between Israel and Hezbollah in Lebanon. For a reality check on just how far these talks have come, we turn now to Nick Wadhams, who leads our U.S. national security coverage here in Washington. So we've gotten Reuters reporting now that Biden and Emmanuel Macron could announce this within 36 hours, but the U.S. is also warning that an agreement hasn't been reached yet. Nick, so where do we stand?
It's a great question. We are trying to track that. I mean, obviously, there have been many complications. It seemed like there was a ton of momentum toward getting this deal done in the lame duck period. It was something essentially that Biden wanted to do as sort of something of an achievement of his administration. It was also something that Netanyahu wanted to do. We had heard because of conversations he had been having with President-elect Donald Trump, who was essentially telling him, listen, wrap this stuff up before I get in. So there's sort of pressure on both sides to do it. The problem, as always, is in the details. Is Israel going to be willing to do something when Hezbollah is still in operation? And what are the opportunities for them to then hit Hezbollah again if they do this ceasefire but still perceive Hezbollah to be a threat? The other issue, of course, is these International Criminal Court indictments, arrest warrants that came down last week. France, as a signatory to the ICC, also potentially playing a role here for the ceasefire. That's not something that Israel is going to want. So it's one of those off-again, on-again moments where you sort of think, okay, this is it. And then, we were here with the Gaza ceasefire as well. It keeps getting pushed down the road. So on pins and needles, but nothing so far.
Well, if this actually does become a reality, realizing there's no guarantee of that yet, what would that mean for then what happens in Gaza? Because Hezbollah had previously said they were only going to stop when Israel stopped hitting Hamas.
I mean, that's another one of the big questions that we just don't know the answer to, because, Netanyahu has said repeatedly, we are not going to stop till, for one thing, Hezbollah is essentially eradicated. We're definitely not stopping till Hamas is eradicated. Well, both of those organizations are very, very severely weakened, but they still remain in place. So the question is, okay, you stop the fighting in Hezbollah. I think the U.S., Biden hopes that will then renew force and attention and pressure on Netanyahu to think about, okay, how do we get the hostages released? How do we shift the attention back to the root problem? But again, the big issue we keep coming back to is standing in the way of that is not only Hezbollah, but it's the Israeli government itself. They want to keep up this pressure campaign on Hezbollah. And of course, the big question then is, well, what influence does Biden actually wield when the clock is really ticking and President-elect Trump has coming in and saying he's basically going to give Netanyahu carte blanche?
Yeah, and he's only 56 days away from being the one who's in charge of these decisions. Nick Wadhams, who leads our U.S. national security coverage here in Washington, thank you so much. And we have much more still ahead on Balance of Power. We'll be joined by our signature political panel, Rick Davis and Jeannie Shanzano, for more on the Trump transition next on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a developing story in the EV industries. Tesla's electric vehicles would be excluded from consumer rebates. Under consideration now in California, a decision by state lawmakers aimed at spurring greater competition that is likely to draw the ire of Elon Musk. Tesla shares, they're trading lower now, down by 1%. Rival Rivian Automotive, up by 12.9%. That word, by the way, coming from the California governor's office, which does say California incentives are still under negotiations. Stocks pushing higher. The Dow, the S&P, NASDAQ, all advancing, with the S&P up 13, up by about 0.2%. We've got the Dow up 345, up 0.8%. NASDAQ up 38, up 0.2%. The Russell 2000 index, though, the outperformer, up 1.85%. Again, to put that in context, S&P up 0.2%. 10-year at 4.28%, with the 2-year also at 4.28%. Gold is tumbling $98 the ounce now, down 3.6%. West Texas Intermediate crude oil down 3.3%, $68.90 for a barrel of WTI. And Bitcoin pulling back today, down 1.5%. Bitcoin right now at 95,540. Cassava Sciences shares, ticker SAV, they are plunging 82%, the largest one-day drop on record, after the biotech firm said its Alzheimer's treatment did not show a significant reduction in cognitive or functional decline versus placebos in patients. Again, recapping, S&P up 12 right now, up by about 0.2%. Balance of Power continues. Back we go to Washington. Once again, your host, here she is, Kaylee Lyons.
All right, Charlie Pellet, thank you so much. And we do have breaking news at this hour from here in Washington, where, of course, one of the federal cases against Donald Trump was brought by special counsel Jack Smith. He, at the Department of Justice, is now moving to formally drop that case, the 2020 election obstruction case, and the charges that were brought against Trump. Then this is not a surprise. We knew this might be coming, as it is longstanding DOJ policy to not prosecute a sitting president, which Donald Trump is about to become in just 56 days. And when he does take office, we know he has promised to make some changes at the DOJ. Initially, that's why he wanted Matt Gaetz to be the leader of it when he was nominated for Attorney General, only to withdraw his name from consideration last week and have Pam Bondi named in his stead. But now that Gaetz is out of the picture for AG, there's scrutiny on some of the other controversial cabinet selections that Donald Trump has made, including, of course, RFK Jr. for Health and Human Services, Pete Hegseth for Secretary of Defense. And then there's Tulsi Gabbard, who was tapped to be the Director of National Intelligence. She could face a bit of an uphill climb to get Senate confirmation, at least if the words of one Republican Senator, James Lankford, who sits on the Senate Intelligence Committee, is to be believed. This is what he told CNN just yesterday.
Well, we'll have lots of questions. She met with Bashir Assad. We'll want to know what the purpose was and what the direction for that was. As a member of Congress, we'll want to get a chance to talk about past comments that she's made and get them into full context.
So let's assemble now our signature political panel for more on this. Rick Davis, Stone Court Capital partner and Republican strategist, alongside Democratic analyst Jeannie Shanzano, who is a senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, if you were on Tulsi Gabbard's team trying to make sure that she ultimately gets confirmed and takes this job as Director of National Intelligence, would you be pretty nervous right now? What does she need to do over the course of the next many weeks in order to ensure she gets the requisite votes in the Senate?
Well, I think they're probably doing this, meeting directly with the staffs of the various committees, Armed Services Committee, Intelligence Committee, those committees that really care a great deal about that posting, and talking to the staffs and to the members directly, sort of airing out any issues like what Senator Lankford might have about her trip to Syria, what she did there, what was the cause, and how did she organize a meeting with Bashar al-Assad, at the time a global criminal for using chemicals against his own people, chemical warfare. So she's got some explaining to do, but if she has a rational explanation for these things, then what I can tell is the Senate is in the mode of trying to give Donald Trump the appointments he wants, And yet I do think it's going to be a drawn out process. I mean, there's requirements for high-level security clearances. Those haven't even begun because of delays in the transition. So I think we'll be talking about this for quite some time to come. But, she's a talented individual who, if she can explain away some of the concerns that people have about her approach to Syria and to Russia, then she stands a chance of ceding to the job.
Well, she's also a former Democrat, Jeannie, so weigh in here. Is this a job she deserves to have?
I think the Senate is going to do its vetting on her. I think what's troubling to me are the charges that are coming that she is somehow traitorous. And I think we have to be very, very careful with that kind of language when it's being used pretty publicly without evidence. She does, to Rick's point, have to explain her trips to Assad. She does have to explain the language that she's been using as it pertains to Russia. But just because somebody has a view that doesn't line up with what is expected in certain circles, we have to be very careful about calling her obviously a former vet, a former congresswoman, a former candidate for president, and now this nominee. That said, I think questions have to be asked by the Senate, and Senator Lankford is right, about her expertise and ability to do this job, which is what is very concerning to me. This is an important job. This was a job created after 9/11 to ensure the president gets the best intelligence he can. And is she able to do that job? There are a variety of questions about that, and also questions about whether our allies feel comfortable sharing information if she is at the top of this. So I think all of those are fair game. I would not be surprised if we see 4 people, Murkowski, Collins, Mitch McConnell, maybe one from intelligence, who say no to her, and Donald Trump is forced to look elsewhere. It wouldn't surprise me at all.
Well, as we consider here what is and is not surprising, perhaps not too surprising, as it was already signaled that this would be coming by Special Counsel Jack Smith, but the DOJ now formally moving to drop the obstruction case in the 2020 election case, specifically against the now president-elect here in Washington. Jeannie, we knew that they weren't going to try to prosecute a sitting president. Jack Smith has signaled this much. He's also apparently looking at retiring before Donald Trump can even take office. And I just wonder, when you couple this with other news we have gotten just last week, that the sentencing in the case that Trump was convicted in has been postponed indefinitely, does this just end every legal inquiry, essentially, at least in terms of criminal prosecution into Donald Trump? Is this ever going to be reignited?
I think for the most part, this ends it. And in my mind, it should end it. There is a big debate about, do we end these or freeze these, as is happening in New York? I think at this point, ending them is the right course. But, it's a hard question because, setting aside Donald Trump, there is a looming question about whether your getting out of jail free card is being elected to office. That's deeply disconcerting to many Americans. But that said, at this point, I do think the DOJ is right to drop this. And if I was Jack Smith, I would be sending in my resignation, as well as I expect we see his entire team resign at this point.
Well, yeah, there's been plenty of reports that everyone who was on that team might be fired from the Department of Justice under this incoming administration anyway. Rick, as we consider, though, that it's not going to be Matt Gaetz who leads the department going forward, he's taken himself out. It's now Pam Bondi who is the Attorney General designate. There isn't much thought that she will face difficulty in getting confirmed. How do you expect she'll handle things like this, or the suggestions that the president-elect made on the campaign trail that he would like to go after and see prosecuted people who are his own political enemies?
Yeah, look, I mean, there are plenty of precedents that the Justice Department have had in the past about how they handle issues related to sitting presidents. And I think this goes by the wayside, just as consistent as any other has done in the past, dating back to Richard Nixon. The long and short of it, though, is Pam Bondi will be the chief counsel, chief cop for the United States of America. And at this point in time, there's no reason to believe that's inconsistent with serving under a Donald Trump presidency. And if in fact there is a date and time where the president instructs her to do something otherwise, then I think we'll hear from the courts and from the Congress to ensure that these norms are adhered to. And we certainly have no evidence that the division of labor, the division of power in Congress and the Supreme Court or federal courts will see otherwise. So I think there's systems in place to keep government running, and it certainly is totally appropriate that Jack Smith would see this opportunity to pursue other interests. And he's served his country well over 2 decades, and he's not going to want to serve in an administration that he's just been prosecuting. So I don't see anything particularly surprising by the decision, other than the fact that it's happened now, and it kind of creates a finality to the crazy ride we had starting back in August of 2023 when the president was indicted on federal charges. So it's been quite something to see in the process work its way out.
Well, and as we consider here that we won't see, Jeannie, the evidence that was actually gathered by Jack Smith presented in a courtroom, we have, to Rick's point, seen the original indictment, then the superseding one, and the one that was changed in light of the Supreme Court decision around presidential immunity. A lot of these details made public, not just by Jack Smith and the judge in this case, but also, of course, as it pertains to the events of January 6th, specifically by the congressional committee that looked into this and had highly publicized televised hearings into this. The American people already had knowledge of a lot of this conduct and voted him to be the 47th president anyway. So would it ultimately have even mattered if everything came to light?
Yeah, I mean, it's an excellent point, because, you'd have to be living under a rock to not be, have knowledge as to what these accusations were. And despite that, you had millions of Americans go to the polls and choose Donald Trump. I do think it's important that Smith, and I understand he will, issues a report on his findings. That's critically important for posterity. It's critically important for us as historians and scholars. I also think it's critically important that the courts continue to do their job, including define for us what the limits of immunity are. We don't live in a monarchy. The idea of total, complete immunity is not what they were talking about. So those limits still need to be defined. And to me, that is even more important than any other continued prosecution of Donald Trump, because this speaks to people who serve in these positions going forward. And that's what the government and the courts in particular need to tell us what those limits are, because we've never had to answer this question before.
All right, Jeannie Sheehan Zaino alongside Rick Davis. Together, they are our signature political panel, joining me on this Monday edition of Balance of Power. Thank you so much. And we still have more ahead. I'll be joined by Mick Mulvaney, the former chief of staff in the first, acting chief of staff in the first Trump White House and director of the Office of Budget and Management as well during that administration. He's next on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index all advancing. S&P right now up 17. That is a gain of 0.3%. Stocks climbed with bonds, and the dollar fell as traders welcomed Donald Trump's pick of Scott Bessent for Treasury Secretary, betting that the hedge fund manager will bring a Wall Street mindset to the role. The S&P up 18 now, up 0.3. The Dow up 389, up 0.9%. The Nasdaq Composite Index up 53, up 0.3%. And right now looking at a 2% gain for the Russell 2000 Index of small cap shares. The 10-year at 4.27% with the 2-year 4.28%. Gold now lower by $96 the ounce, down 3.5%, 26.15. We've got West Texas Intermediate crude oil also retreating today. WTI down 3.3%, 68.88 a barrel on WTI. Bitcoin at 95,214. Bitcoin today down by 1.9%. So again, recapping, the Dow, the S&P, NASDAQ all moving higher. S&P up 16, up by about 0.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington, and once again, your host, here she is, Kaylee Lines.
All right, Charlie Pellet, thank you so much. I am indeed Kaylee Lines in Washington on this Monday, where we're dealing with a little bit of breaking news. As expected, the Department of Justice is moving through Special Counsel Jack Smith to drop the 2020 election obstruction case against the now president-elect Donald Trump. There have been signals that this would happen, as it is longstanding DOJ policy not to prosecute a sitting president, which Donald Trump will become once again 56 days from now. But it does end what was already a historic series of prosecutions, frankly, against Trump as an individual that are now going away as he gets set to take office for a second time. And of course, the first time around, when he was the 45th president of the United States, Mick Mulvaney was active in that administration. He's former acting White House chief of staff under Trump, former director of the Office of Management and Budget, and of course, co-founder as well of the House Freedom Caucus as a former congressman to boot. Mick, we know your resume is long. It's always good to have you here on Bloomberg TV and radio. There's a lot I'd like to get into when it comes to the OMB specifically, but if we could just first get your reaction to this news. I know you had strong feelings about the events in and around January 6th. Now, Donald Trump not necessarily going to be held accountable for any of that alleged action that he took in the lead up to and during it. But this is largely to be expected, right?
It is. In fact, I think it's probably the biggest story that everybody knew was going to happen anyway. You can't, I mean, it's been long-standing policy, as you mentioned, that you don't prosecute a sitting president, which means it would have to sit there for at least 4 years, the prosecution would, which is not tenable. So I guess this is an inevitable sort of side effect of the election.
Yeah, and now we're getting a new announcement from the DOJ, also formally moving to drop the other federal case against Donald Trump, which was the classified documents case down in Florida. So both federal prosecutions are now out of the picture. He, of course, has had his sentencing in the case in New York, the state case around falsification of business records in which he was convicted. That sentencing has been pushed back indefinitely. We're not quite sure at this time what's going to happen with the other state case down in Georgia, but this effectively puts to bed all of his at least criminal legal issues. And I do wonder if he wouldn't be about to go back into the White House had they not happened, had we not had these series of indictments throughout the course of what was his active presidential campaign. Do you think he still would have won?
I think it gave him, and you and I have talked about this before a couple of times, it gave him a new message. It gave him a rallying cry. Some of the criminal charges were so weak, Kaylee, and I know I'm giving an opinion on that, but they were facially very weak. The basis of the case, in one of the cases in New York, was that he paid back a loan early that the debtor didn't, or the lender didn't complain about. Another case was revolving around criminal charges for legal hush money payments, and it gave him it raised a lot of questions even with Democrats as to whether or not he would have been charged with those things if his name wasn't Donald John Trump. And it gave him that new rallying cry that, look at what they're doing to me. If they can do it to me, they can do it to you. Elect me and that won't happen. It reinvigorated his campaign. So said from the very beginning, if there's one human being probably most responsible for Donald Trump going back to the White House, it's probably Alvin Bragg, followed closely by Letitia James.
Incredible to consider. And of course, yes, we did hear a lot about this from Donald Trump on the campaign trail. Something else we heard from Trump frequently while he was campaigning is that he had nothing to do with the Heritage Foundation's Project 2025. And yet we have seen a number of people named to be part of his second administration who were affiliated or contributed to that project. And in fact, just a few weeks ago, Joe got to sit down with the president of Heritage, Kevin Roberts, who told him this about the way in which it could be informing this incoming administration's policy decisions.
We think that this is the beginning of a golden era of conservative reform. I will say that because the work of Project 2025 represents the conservative movement, it would be very difficult for anybody to implement policies on education, on the border, on taxation, without at least consulting those ideas and people. That's not some arrogant or hubristic comment on our part. That's just the nature of how policymaking works.
And one of those people, Mick, that contributed to Project 2025 has now been tapped to take your old job. OMB Director Russ Vought will be reprising his role. And I do wonder what you make of that choice and if it actually does signal anything about the way in which Project 2025 could be working its way into outcomes in this administration.
Yeah, I mean, look, what I think the guy from Heritage was trying to say in so many words is Project 2025 is just Republican conservative orthodoxy in a lot of different places. So if you're going to be a Republican president, you're going to probably put into place a lot of things that happen to be in Project 2025. I do think that the Trump campaign sort of moved away from the project because in large part of the positions on abortion, which they considered to be a liability politically. But look, it's conservative orthodoxy, and that's what's going forward. You asked me about Russ. I'm very excited about this. In fact, I think, Elon Musk and Vivek Ramaswamy get all the attention for this, Department of Government Efficiency, and they should. And it's an important thing that they're doing. But in order to implement the things that I think they're going to start recommending, you have to have OMB on board. And nobody knows more about how government works or doesn't work than Russ Vought. So I thought it was a really, really solid decision at OMB, and he'll make a good member of that government efficiency team. Keep in mind, the last time President Trump asked somebody to restructure the federal government, it was me. And we didn't have much luck because the whole of the deep state was against us, and some of our cabinet secretaries were against us. I don't think that that troika of Elon, Vivek, and Russ are going to have the same impediments that we had in 2018.
Well, and you could potentially add another name to that team as well, as Congresswoman Marjorie Taylor Greene of Georgia apparently will be leading a House Oversight Subcommittee helping implement the DOGE recommendations. I do wonder, though, as we know that department, quote unquote, does have until July 4th of 2026 to make these proposals to do this work. There are going to be spending battles being fought in Congress well before then, basically right when we get into the new year, the new Congress and the new administration. Mick, we're going to have to deal not just with regular appropriations, but a debt ceiling fight as well. And I wonder how you think Russ Vought will navigate those, what it means for the ultimate outcomes of what those deals could look like.
Well, what Russ is going to do, and this is what good staffers are supposed to do, and Russ was a good staffer in the previous administration. I have every expectation he's going to be a good staffer going forward, is simply laying out the facts and the arguments for the president. Russ is a lot more fiscally conservative than the president of the United States is, just as I was. Trump wanted to hear from the fiscally conservative wing of the party, and he wanted to hear from other folks as well. And Russ will be the loudest voice in those discussions. You're right. We've got appropriations bills to deal with. You got the debt ceiling to deal with. You got to look very closely, Kaylee, to that first sort of that thin budget that will come out in the first couple of weeks of the administration, because that will be the first indication as to what their priorities are. President's budget is a messaging budget. What are their priorities going to be? And Russ will be obviously have his hand in that. So it's going to be a very quick or a fast-moving couple of weeks on those spending issues. And it will be interesting to see whether or not Trump comes down sort of with that more, the heavier spending side of the party or the fiscally conservative side of the party that Russ represents so well.
Well, and in those those first weeks, Mick, there also is going to be a really narrow majority in the chamber you used to sit in, the House of Representatives. It's really going to be only a few votes that Mike Johnson can afford to lose as Speaker, because Trump has pulled 3 members of the House for this administration, or I guess when you include Matt Gaetz having resigned, no longer being part of the administration. That's still a vote gone in a special election that's not being held until April 1st. How hard is this going to be to get done with such a slim majority?
Really hard. I think people lose sight of the fact that it's not quite as bad as it sounds, just because technically Waltz is still a member of the House and can still vote. Traditionally, you don't, but you can. I never voted after I was nominated for the OMB back in 2017, but I could have. It would have been legal for me to do that. So until those folks are confirmed, all those House members, they are still sitting and can vote. So they don't really lose those Republican votes. Mike Johnson doesn't lose those Republican votes until those folks resign. Now, yes, obviously you mentioned Matt Gaetz is already gone, so that narrows it a little bit. But to your point, it's going to be tight. There's no question about that. And he's not going to be able to afford to lose any folks. Any votes. I think the one thing that's sort of sitting there, the 800-pound gorilla in the room, is that Donald Trump still has a lot of influence over the Republican Party, probably never more so than now. And if they want to whip votes, they should be very successful in doing that.
Well, perhaps, though, not enough influence over at least the Republicans in the Senate to be able to get someone like Gaetz through the confirmation process, hence Gaetz taking himself out of contention for that role. When we look at some of these other nominees, Tulsi Gabbard, RFK Jr., Pete Hegseth, do you think there could still be Republican resistance adequate enough to potentially tank those nominations, Mick, or is everyone else going to get through?
You know, it's a really good question. It's one of those inside the beltway questions, because oftentimes, it's not every single administration, but oftentimes what will happen is an incoming administration will offer up a sacrificial lamb, somebody they know they can't get confirmed because they're too extreme one way or the other, but it satisfies their base and it gives sort of a little sop to the minority party in the Senate. We saw this back in 2021 with Neera Tanden, who was nominated for OMB by the Biden administration, even though a lot of Democrats thought she was too progressively left to get confirmed. And indeed, she wasn't. They took that name down. Was Matt Gaetz that sacrificial lamb, or was he sort of a different thing entirely? I think if you look at the names you just gave, I got to think Kennedy's got the toughest road, just because he's such a weird guy. I mean, I hate to use the word that word meant something before Tim Walz started using it on the campaign, but he's an unusual human being, and it should make for an interesting confirmation process. Hegseth will get the attention because of the post. Obviously, HHS, which Kennedy's nominated for, is not as critical. It's not as perceived as being, as high ranking as the Secretary of Defense is. But every time people ask about Hegseth, I say, look, if he wasn't on TV and he was just somebody with degrees from Princeton and Harvard who had written a couple of books on the topic, had 2 Bronze Stars, served overseas 2 different times, I don't think you'd be getting the negative attention that you were. So I think Hegseth is fine. I think Tulsi is fine. I think if anybody is going to have the biggest challenge, it's going to be Kennedy.
Well, and finally, Mick, as we consider here the notion of future challenges around all of these things, I do wonder, assuming that these people can't even get confirmed, what challenges they may face upon actually stepping into the job if this transition is delayed because of a lack of signing of ethics and transparency pledges in order to get access to the classified, or at least not public, information they need to do their roles. What do you make of the slow walking here?
Yeah, listen, the slow walking, it works both ways. You're seeing a natural tension now between the executive branch and the legislative branch. It has very little to do with party and everything to do with structure. The incoming administration doesn't want to sort of give everything to the Senate all at one time, and the Senate doesn't want to move very quickly. Keep in mind, I've often said that, advise and consent has in large part become extort and delay. I can't tell you the number of Republican senators who called me when I was at OMB trying to get stuff out of me in exchange for lower level confirmations moving forward and so forth. So there's that natural tension. I think it's important that the Treasury Secretary go early, Secretary of State, Defense go early, and that the OMB go early, just because you do have to write that budget very quickly. My guess is those will be the first ones confirmed, and then the other ones may drag out over the course of the next couple of months.
Well, of course, he used to be director of the OMB himself. Mick Mulvaney, also former acting chief of staff in the first Trump White House, joining us here on Balance of Power. Thank you so much, especially as Mick helps us react to the breaking news we have gotten just this hour. The Justice Department making it official that they are dropping the prosecutions, the federal ones, of the now president-elect in both cases. That includes the documents case in Florida, and of course the case related to 2020 election subversion brought against Donald Trump here in Washington. We have had reaction from Trump's communications director, Stephen Chung, who says in part, the American people re-elected President Trump with an overwhelming mandate to make America great again. Today's decision by the DOJ ends the unconstitutional federal cases against President Trump and is a major victory for the rule of law. We'll have more on this, the transition, geopolitics, and other developments that happened today in the late edition of Balance of Power. So I'll see you back here at 5 p.m. Eastern on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody. Live on radio, TV, YouTube, Bloomberg Originals. We're back in New York. Had some great programming on the West Coast.
I'm still there. You're back. I'm still there.
On a trolley car or
still
whatever?
on the trolley car.
No, he's actually still on a Waymo. And if you have not checked out Tim's video on X about taking a ride? Because you were blown away by it.
Yeah, self-driving cars. I think it's fair to say the future. We'll see what happens when it comes to regulations. But yeah, I witnessed the future in San Francisco.
He's all in. He has been talking about it nonstop. Hey, speaking of talking about things nonstop, we continue to see President-elect Donald Trump building out his administration. At least the nominees for treasuries are trading on the prospect of a Wall Street veteran taking the top spot at the U.S. Treasury. So, Tim, that's easily top of mind for us.
Yeah, Scott Bessent is who we're talking about. Not a household name. We tap our team for some intel. Got a great roundtable coming up in just a few minutes.
Like, who is he? What does it mean for if he actually is confirmed and is the next U.S. Treasury Secretary? Hey, also, Macy's definitely on our mind as well. Delaying earnings after a worker hid millions of dollars in expenses. This is what we call a wait, what moment? So
yeah, get some details on this. Looking forward to that. Also, hey, NVIDIA, you may want to look over your shoulder because Amazon is looking to go toe-to-toe with you. It's today's big take among the most read, too, on the Bloomberg terminal about what Amazon has got up its sleeve.
And who of you got Glicked over the weekend? Did you get Glicked?
No, I don't think it's going to happen.
Charlie says yes. Wicked and Gladiator 2 kicking off what's likely to be a strong holiday season for cinemas, but the numbers maybe not as strong as everybody expected. So we're going to get into that over the next 60 minutes. First up, let's get to the aforementioned Charlie Bell.
All right, thank you very much. Indeed, looking a lot of green on the screen today for the Dow, the S&P, and NASDAQ. Just like Wicked, S&P up 15, gain there of 0.3%. We've got the Dow up 410 for the Dow Jones Industrial Average, a gain now of 0.9%. NASDAQ up 27, up by about 0.1%. NASDAQ 100 index fluctuating between gains and losses in the red, down by 1 point. But look at the Russell 2000 index today, outperforming by far, surging now by 2%. Your 10-year 4.26% with a 2-year 4.27%. Spot gold down $96 the ounce, 26.19, drop there of 3.5%. West Texas Intermediate crude right now down 3.2%, 68.94 a barrel, and Bitcoin down $2,000, down 2.1%, 94,968 right now on Bitcoin. Tesla's EVs would be excluded from consumer rebates proposed by California's governor, a decision by state lawmakers aimed at spurring a greater competition that is likely to draw the ire of Elon Musk. Tesla shares today, they're down 1.3%. So again, recapping, back to work Monday, holiday shortened trading week. We've got the S&P up now by 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it. Thank you so much, Charlie Pellet. Well, we definitely continue to digest the news that we got late Friday that President-elect Donald Trump has chosen Scott Bessent for U.S. Treasury Secretary, turning to the hedge fund exec to serve in a post with oversight of the massive U.S. government, debt market, tax collection, economic sanctions, U.S. Treasuries, by the way. They've added to the gains spurred by the announcement. Our Bloomberg Balance of Power team caught up with Scott Bessent back in mid-October, where he commented on Donald Trump's interest in how the U.S. financial system works.
He has a deep understanding of financial markets as opposed to most politicians. So he wants to be involved in the conversation. He has very well-formed opinions. He has a lot of private sector friends. So he just wants to be a voice.
All right, that's Scott Bessent about Balance of Power here on Bloomberg. That was back in mid-October. Hey, let's get more on who Scott Bessent is. That's what we wanted to know, what kind of U.S. Treasury Secretary he might be if confirmed. With more is Bloomberg News Managing Editor for U.S. Eco Policy, Kate Davison. She's out there in our Washington, D.C. bureau, and then right here in our New York studio, Bloomberg News hedge fund reporter Kathy Burton. And I got to say, guys, in thinking about this conversation, Tim and I were like, we want to know who this guy is. He's not a household name. Kathy, let's kick it off with you. Tell us about Bessent. What do we know about him?
Well, he was a longtime employee of George Soros, both at his firm, where at one point he was the CIO of his family office. But going back into the 1990s, he was part of that big trade that's made Soros famous, breaking the Bank of England, in which they made $1 billion profit.
So he's a good trader.
So he's been involved with some really good trades, yes.
Is he an insider in Wall Street? Like, how do we, because he's not someone I feel like we talk about on a daily basis. But tell me a little bit about kind of his role in Wall Street, how Wall Street potentially views him.
A lot of people on Wall Street respect him for his his connections to Soros and what he's done there, I think mostly. There were a lot of people.
A Democrat?
Coming out on X.
Soros, in all seriousness, Soros, yes.
Soros, I'm just saying.
Yes,
right? It's kind of interesting.
But I feel like, Stan Druckenmiller, Soros's biggest money manager, is a Republican. And so I think they very much separated the politics.
Interesting.
Hey, Kate, come on in here and talk a little bit about how this decision went down. What do we know about the internal battle between Bessent and Howard Lutnick, and why ultimately Trump ended up going with Bessent?
Sure. Well, we obviously know it was very drawn out. If you followed our coverage on Bloomberg, many stories over the course of a couple of weeks. It seems like much longer than that.
Not exactly Game of Thrones, but it kind of felt like it. But go ahead.
It certainly felt like that compared to some of the other choices, right, that were rolled out in a pretty orderly manner. Now, some of those choices were unconventional and surprising, but they were, started hearing and seeing names coming out fairly quickly. But this Treasury one took a lot longer, and I think it probably spoke to Trump's awareness that this was a very important pick to Wall Street, right? He does not like turmoil in the stock market, and I think certainly wouldn't and did not want to see that shortly after his election. So was looking for someone that wasn't going to spook anybody. But as you pointed out, there was some infighting. Howard Lutnick, who had been the co-chair of the transition team, was in the mix, and he very much wanted that job, had raised his hand for it. And so Trump was looking at him. He also was sort of casting about for other candidates. I think he was frustrated by some of the infighting between, over whether he should choose Bessent or Lutnick. And so he spoke to Kevin Warsh, who was a former Fed governor, who was also helping to advise on some of these personnel picks. He looked at Mark Rowan, as we reported. It seemed like the job early on was Bessent's to lose, and in the end, he ended up kind of coming back around. I think we saw that Bessent had an op-ed in Fox News signaling some more support for tariffs. That was a big question. There had been some kind of whispering about was he suitably committed to the tariffs that Trump wants to impose. So I think he, in the end, ended up convincing the president that he was the right choice.
I think some of us wonder, too, about what kind of influence Scott Bessent, as U.S. Treasury Secretary, will have on Donald Trump, president-elect now, but obviously President Trump, when it comes to anything and everything with the financial workings of our country or even the independence of the Fed. Kathy, is Bessent someone who would challenge Trump? Like, I'm just curious if we have any idea about, how he might interact with a President Trump.
I think so. We talked to Stan Druckenmiller, his old boss, about Scott, and he seemed to say, look, he's worked for some pretty hard people to work for,
right?
and that he can be very persuasive in his arguments. So he thought that he would be able to stand up to him.
But Kate, they want to, it sounds like the Trump team wants to prevent what happened back, with Treasury Secretary Steve Mnuchin during the president-elect's first term, who was a very stable force, but at the same time, the president now regrets some of the things that Mnuchin did.
Sure, I think there is some sense that that Mnuchin also maybe was not as on board with some of the tariff proposals as, in hindsight, the president would have preferred. He, of course, also pushed hard for the president-elect, then at the time President Trump, to choose Jay Powell to be the Fed chair. And I think the president, as we saw over and over again during his first term, he seemed to really regret that one. He said, I remember him tweeting, "Where did I find this guy?" Well, it was really Steve Mnuchin who had advocated for him. And Powell, as we know, is in the Fed chair job still. He was reappointed by Joe Biden, so he'll be there until May 2026. That's when his term expires. So I think that it's important to note Scott Bessent will play a very big role in choosing that next Fed chair. Yeah. So I think, hoping for someone who will be a little bit different. I think the president-elect is someone a little bit different from Mnuchin.
Hey, Kate, does it matter that Bessent has not been kind of tested when it comes to the inner workings of Washington and the bureaucracy of it all? Does that matter?
Yeah, I think it definitely matters. I mean, we did see, again, going back to Secretary Mnuchin, I mean, there was a steep learning curve. He had to come in and in pretty short order had to push forward a raising of the debt ceiling. Bessent will have even less time with that. The debt ceiling expires in January, and there's sort of a buffer period, but still it will be on the table along with a number of other priorities, like getting those tax cuts extended that expire, at the end of 2025. That's a huge priority for the president-elect. And he's talked a lot about trimming deficits, which is no easy feat. And during the first Trump term, in the first couple of years of Trump's
especially
first
when you're
term,
doing tax cuts at the same time, right? It's
exactly.
a little tough to do that.
Exactly, and they really couldn't do that in a big way in the first Trump term. It was difficult to get even all the Republicans on board, even when they controlled both chambers then. So he's got his work cut out for him, and it certainly is easier when you've been in Washington and kind of understand the inner workings.
So, Kathy, you cover hedge funds here at Bloomberg News. How would running the Treasury be different than running a hedge fund? Like, how does his day-to-day experience actually lend to being a Treasury Secretary?
Well, he certainly understands the markets, and he understands currency markets and the bond market in particular very well. He runs a very small hedge fund, so I don't think Soros is the place where he's had the most employees, and even then he was really more focused on the investments. So I think that part will perhaps be challenging for him.
What's the worst thing you're going to be watching out for? Let's assume he gets confirmed and he is the next U.S. Treasury Secretary. What's like kind of the first real test?
Well, we'll see what the markets do, of course. And
so far they seem to like him, right?
So far they seem to like him, and he said that the first thing he wants to do is make sure that the tax cuts are permanent. So the market's going to like that, I think. Those will be the first things we'll be looking for, I think.
Yeah, pretty interesting stuff. All right, we're going to leave it there. Guys, thank you so much. So appreciate kind of the New York and D.C. perspective. Kathy Burton right here in studio, hedge fund reporter at Bloomberg News, knows this industry so well. Kate Davidson, managing editor for U.S. Eco Policy, with that perspective out there in our D.C. bureau. All right, now let's get to one company that I got to say, Tim, was already on track to be in the news this week. We knew that.
Yeah, but for good stuff.
Yeah,
we're talking about Macy's. It's usually a big week for Macy's ahead of their Thanksgiving Day parade and Black Friday. It kicks off the all-important holiday shopping season for it and the rest of the nation's retailers. Yet, it's kind of been a rough start to it all. Macy's said it would delay its third quarter earnings release after an investigation revealed an employee hid more than $100 million of expenses. Macy's shares down about 2.6% as we speak. With some insight into really what the heck is going on, we got Bloomberg Television's Romain Bostic here in our studio. He's the co-host of The Close, coming up in a little less than an hour on Bloomberg TV. So you spoke with the folks over at Macy's today. What's going on here?
I did, and unfortunately, I can't really tell you what's going on because there was only so much they would share. I mean, This is a pretty big deal. Now, obviously, in terms of the actual dollar amount, this is a drop in the bucket when you consider their overall revenue. But you're talking about an employee who was effectively in charge of certain things when it came to their delivery operations. $130 to roughly $154 million over a 3-year period, apparently unaccounted for. Now, I asked Macy's specifically, was this money stolen? Was this just expenses that were miscategorized? They could not say. They said that the investigation is still in the early stage, and they weren't able to actually share publicly exactly what happened, other than to say that the employee is no longer there.
I mean, I don't want to read too much into it, right? Because we've got to get more details, and we want to be careful here. But it does make you wonder about like oversight or something, or what was going on.
Well, that's the big question, because they're basically pinning this on one single employee. Now, not to be too glib about it, but one employee making off with a few $1,000s sounds plausible. One employee potentially making off, or at least obscuring over $100 million. That's a lot for one person. I mean, I know there are a lot of overachievers out there, but I think I would need a little bit of help. But they said right now that they think that this has been nipped in the bud. They did make it clear that this actually came about while they were preparing their earnings report, and they just noticed some discrepancies, and then they did a deeper dive, and then they made the decision that it was better to hold off on issuing that report until they got a fuller investigation of what was happening.
But this is also a time when Macy's is trying to do a huge turnaround right now. You've got a relatively new CEO, someone you've spoken with quite a bit over the last few months. Explain the backdrop that this is happening against.
Well, the backdrop is basically a slowdown in sales growth for the company overall. Macy's, Inc., that's the large umbrella company. Of course, their major properties are Macy's, the store, Bloomingdale's, the store, and Bluemercury, which focuses on cosmetics. Bluemercury's doing great.
Yeah.
Bloomingdale's, believe it or not, is doing great. Macy's stores themselves, not so great. On a comp sales basis, they were down 3%. That's just at the Macy's branded stores. But that drags down the Inc., the umbrella. Comp sales down as a whole, also lower. Of course, the company will focus on Bloomingdale's. The current CEO of Macy's, Inc., Tony Spring, used to run Bloomingdale's. So there's a big reason why he became CEO of the overall company, because he did a lot to turn that around. And Bluemercury is doing better as well, as a lot of people are still willing to buy cosmetics and skincare.
Guilty as charged. But no, listen, whether it's Sephora, right, or all of those, they've really done well. But I feel like Bloomingdale's is different from Macy's in terms of their customer in a big way. And I do wonder whether, Tony Spring, can make those adjustments.
Well, that's a big part of the problem. And I've asked them this in past calls. Now, they didn't want to talk about this today. They're saying that when they release their earnings, which they say will be done.
December 11th, right?
Well, they said by December 11th, so it could come before that, but they expect to have the earnings release and the conference call by December 11th. But to your point, Bloomingdale's had much more of a niche customer, if you will. It was much more definable than Macy's. Macy's was kind of everything to all people. Right. And as you know, that's the big challenge for department stores right now, is how do you be everything to all people in a world where I think a lot of shoppers want something that's a little bit more personalized, a little bit more niche-y.
Agreed.
And I think Tony Spring did a good job with that with Bloomingdale's, but he was dealing with the customer base that was kind of right for that.
How much digital are they doing over on the Macy's side? Is that productive for them?
I think the last quarter, they said roughly, it's sort of tracking around the 30% range. So that varies pretty wildly depending on which brand you're talking about.
Yeah.
Again, it's doing relatively well for Bloomingdale's, relatively well for Blue Mercury. Macy's is still kind of that nut that they have to crack. And they have tried something, and I want to point out, they had this thing these are smaller stores called the First 50 that Tony Spring set up. Said, let's do smaller concepts. We don't necessarily need these gigantic, tens of thousands of square feet, hundreds of thousands of square feet at some of these stores. We need smaller versions of these. That will do better. They identified 50 stores that they did that. And if you break out just those 50 stores away from the other Macy's, they're actually doing pretty well. 3 consecutive quarters of comp sales growth. In the most recent quarter, it was up 2%. So down on Macy's as a whole, but those first 50 Macy's stores and when they've redesigned the smaller format, up almost 2%.
Okay, so in this case, smaller could be better. We'll have to wait and see maybe a few more quarters to make that determination.
That's a nice sport coat you're wearing, by the way. Where'd you get that from?
Thank you. I don't actually know.
Okay.
This might be a J. Crew, not a Macy's or a Bloomingdale's. But I asked the questions.
Gotta love when guys talk. I love when guys talk clothes.
Shares down as much as 5% earlier in the trade. Down a little more than 2% right now. What do you think it is that analysts are reacting to here?
I think it's just
it's a one-off charge here.
Well, but
and
there's
$100 million is $100 million.
But there's also the issue of how deep does it go, right? And
what else did they miss?
Right. Anytime you see something like this, the big question is, if there's smoke, is there a fire? Now, again, the company line right now, both in what they told me on the call as well as in the press release, is that this is an isolated incident and that it has been contained. But they could not give me any details right now, reassuring me of that, and they said they will have more details.
They're criminal. We don't know.
We don't know.
So, all right, for someone like you who knows this company well, just got about 30 seconds left here. I mean, the worst case scenario would be what? The best case scenario is what?
Well, the best case scenario, it is just $100 million. As they said, $154 million. As they say, when you look at their total expenses that they were logging, that was $4.6 billion. So a small fraction of what their expenses were. That's the upside. Now, the potential downside, if there's more to this or this was more widespread, then that potentially becomes an issue.
All right, so next focal point is when we finally get their earnings, right?
Yeah, hopefully before December.
Or Black Friday when you're
11th,
shopping, right? When you're shopping, because you want that coat that Tim's got, right?
It's a nice coat.
I know.
I'm just saying.
Great stuff as always. Romaine Bostick, co-host of The Close on Bloomberg TV. It's coming your way at the top of the hour, so be sure to check it out on Bloomberg Television. Coming up.
Romaine can borrow it anytime.
Do you guys do that?
We share the dressing room.
We talk in the dressing room, we women. Do you guys in that?
Tim's a little slimmer than me. Let's just leave it at that.
Oh, wow. All right, coming up, hey, NVIDIA, Amazon is coming for you. It's a Bloomberg Big Take, and we've got that story on the other side of the break. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, and NASDAQ all advancing. S&P 500 index hovering close to 6,000. Stocks are climbing with bonds. The dollar fell as traders welcome Donald Trump's pick of Scott Bessent for Treasury Secretary, betting that the hedge fund manager will bring a Wall Street mindset to the role. Small caps with typically domestic operations heading toward records. Right now we have got the Russell 2000 surging another 2.1%. To put that in context, S&P up 15, up by about 0.2%. The Dow up 415, up 0.9%. NASDAQ up 34, a gain of 0.2%. The 10-year 4.26% with a 2-year at 4.27%. Spot gold down $93 the ounce, down 3.3%. West Texas Intermediate crude oil also slumping 3.3%. And Bitcoin retreating from last week's records. Bitcoin right now down 2.4%, 94,710. MicroStrategy, meanwhile, is accelerating its Bitcoin buying. MicroStrategy said it bought a record $5.4 billion in Bitcoin, the third major purchase announced this month by the crypto hedge fund proxy. MicroStrategy down today by 5%. So again, recapping, U.S. stocks pushing higher, S&P up 13, up by about 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Now to something that one of the world's best-known companies and one of the largest is up to. And you have to kind of head to a bland North Austin neighborhood to find out. And that's exactly what our Bloomberg News team of Matt Day, Ian King, and Dina Bass did. And Tim, they basically tell the tale of how Amazon is preparing to go toe-to-toe with another well-known mega-cap tech company. And that company is...
NVIDIA, the story among the most read on the Bloomberg terminal. It's today's big take, meaning our editors deemed it a must-read. To check it out, go to the Bloomberg terminal, and at bloomberg.com/big-take, you can read this story. So let's head to the Bloomberg News Bureau in Seattle and to Bloomberg News technology reporter Matt Day. Matt, I don't want to talk about Seattle. I want to talk about Austin and exactly what you found when you and the team were given access to this kind of skunkworks program happening at Amazon. What'd you find?
So we've had a lot of folks hard at work in a couple of labs in Austin. It's old Dell, IBM territory out there, a lot of hardware engineering shops for a lot of years, and Amazon's bringing their scrappy ethos to it. We toured a couple of hardware labs where they're designing chips, where they're testing chips, where they're looking for signal interference. So a lot of high-tech work going on in there, but it's also a bit of a mess. They're clearly trying to race to bring these things to market by the end of the year.
This isn't something that just happened over the last couple of years, Matt, when, we all, and I mean we by Carol and me, not you, we all started talking about ChatGPT just a couple of years ago and sort of understanding what NVIDIA's role would be when it came to training these LLMs. This has been going on for a while.
Yeah, that's right. And this is, it's not the culmination because it's not over yet, but it's where they're at now after 15 years of hardware work. They started off building custom designed servers. Amazon later moved into sort of basic general purpose chips. And so, before ChatGPT was thought of, before Google researchers put out the paper to even show that it was possible, Amazon had decided, let's toy around with this machine learning chip thing because we think we might have something to say here. And it just so happens that, as NVIDIA owns the world, it seems these days, Amazon's coming to market with a competitive chip.
Okay, is this akin to that moment? Do you remember that Bloomberg story that all of a sudden it's like, hey, folks, all that streaming you're watching over the weekend? It's AWS. Like, we had no idea what they were doing, right, in terms of cloud and storage and all of that. Is this akin to a moment like that for Amazon?
For their hardware engineering, I think we can definitely make that case. People have been surprised by how profitable Amazon's cloud computing group has been for, the about a decade that they've just closed results. And part of that is they just build their own hardware, right? They cut out the middleman to a large extent. Produce pretty good products good enough for their customers, and that's given them advantages that rivals like Microsoft and Google don't have in their back pocket. So they're hoping they can repeat that magic in AI chips, and that's going to be a tall order.
All right, tell me how this story came about. Were they like, hey, Matt Day, like we've got this is Amazon calling, and we'd love for you to kind of come check our ugly warehouses because we have some cool stuff going on. I am just curious, how open they were to having you guys come in, because it sounds pretty messy. And when I think of chip manufacturing, I think of really sterile Intel, facilities.
Yeah, wearing the white Tyvek suit.
Exactly.
Yeah.
So it sounds like this was a little messy. So tell us about kind of how this story came about and how open they were to showing you how the sauce is, kind of being made here, the chip sauce.
Oh, yeah, definitely no clean rooms over at Amazon. So this one came about, we were just looking around the market a few months ago, and it was just a little astonishing that all of NVIDIA's biggest customers, while they publicly say, we love NVIDIA, they make great products, we want to buy them forever, please give us more, they were also trying to engineer their way around them, right, to different degrees. That's Amazon, that's Google, that's Microsoft. And so this really interesting dynamic, and, we just asked, hey, Amazon, you want to show your work at this point? And they're very eager to show it right now, in part because they think they have the jump on some of their rivals in terms of maturity of their program and how much their chips can pull off.
So I'm looking at the SPLC function here on the Bloomberg terminal. As you note, Amazon is in the top 5 of customers to NVIDIA. It accounts for about 5% of NVIDIA's revenue each year. About 9% of Amazon's U.S. CapEx goes to NVIDIA. This is according to the SPLC function on the terminal. What is the opportunity for Amazon here? Is it about saving money, or is it about getting in a new revenue stream?
I think it's both. I mean, these NVIDIA chips are expensive. We're talking tens of thousands of dollars a unit, and the units are coming by the thousands, right? But I think there's also a sense at Amazon that, listen, AI is capacity constrained right now. There's wait lists for NVIDIA chips. If you want to build, a cool new state-of-the-art ChatGPT killer, it's going to take you a while to do so. And part of that is just there's not enough hardware out there. So Amazon thinks if they can turn on the tap, they can put these custom-built chips of their own into their data centers alongside those NVIDIA rigs. They think they can offer something unique to their customers that other clouds just can't do yet. So it's not necessarily about ripping all the NVIDIA out of their data centers, but it's about building maybe a more cost-effective tool to stand up beside them.
I'm going to be a 5-year-old for a moment. Why? Why are they doing this?
Well, part of it is they think that the whole long sweep of Amazon's involvement in hardware is they think that hardware makers put too many cutting-edge features that they just don't need into their products, right? Back when they were buying servers, they could buy them from Dell, from HP, but Amazon just didn't need all of those cutting-edge whiz-bangs, right? There was only a certain set of functions they needed. So they say, hey, listen, we can build a more streamlined version. We can cut out some of the cost. We can cut out some of the round trips between vendors and some of the time, and just keep going quick. And so that has proved out over and over again as Amazon has taken on more hardware challenges. And so, they think they can build a more competitive product suited to their customers, and they can do it cheaper than NVIDIA can.
All right, so it's a case of it makes more sense for them, less cost for them, and potentially, as you said before, maybe a new revenue stream, right?
Yeah, exactly right. And it's about, everybody's talking about democratizing AI, and I'm always a little nervous when these for-profit companies say democratizing anything, but they have a point in that AI right now. You just can't get enough chips to make all these people's hopes and dreams sing. So they're going to bring their products to market and see if they can tap some new customers that way.
What do you think, Matt? After visiting this facility, seeing what they're up to, talking to all these folks, we're going to get to some of these folks in a minute. Can they pull this off?
I think they can. It's definitely going to be the hardest thing that they have done in hardware to date, because just NVIDIA has such a wide moat around them. They've been working on this for such a long time, and the whole industry is kind of geared toward their tools. But the Amazon playbook, it's not undefeated here, but they've got a pretty good track record when it comes to hardware. I mean, these folks seem like they're moving real fast. Obviously they're going to show us their best face on tour day, but you get the sense that they've really built a credible hardware engineering program, and that folks would be foolish to doubt them in the long term.
Some hits and some misses. The Fire Phone, I was there for that unveiling in Seattle. Not a hit. That was a miss. The Alexa, the Kindle, those are huge hits.
Yeah, good point, right? I'm curious, with increasingly these big tech companies pursuing their own chips, whether it's Microsoft, whether it's Alphabet, whether it's Amazon, whether it's Apple. I mean, this is just a trend that's happening and just picking up momentum. Fair?
Oh, totally fair, yeah. Everybody around the table seems to have come to the same conclusion that, listen, if chips are going to own more and more of the world, we might as well build them ourselves.
Okay, so let's talk about some of these individuals here. James Hamilton, Rami Sino, Nafea Bashara. These are some bold-faced names who you have in the piece here. Who are these folks, and what are they doing for Amazon?
So James Hamilton, he's an industry legend, and he was an industry legend before he came to Amazon, which was more than about 15 years ago. He is kind of famous in the industry for taking
Kind of looks
wild,
like a
big
mad
swings at
scientist.
things.
Can I say that? He looks a little bit like a mad scientist, which is kind of cool.
A little bit. We were having debates about which classic rock bass player he might look like, that kind of thing.
Little Led Zeppelin is happening there. Anyway, go ahead.
No, exactly right. No, but he's an unconventional wisdom machine, right? He's always asking questions. Can I turn this upside down? Folks might remember back when Microsoft was experimenting with containerized data centers. Put the whole thing in a box. Maybe put the whole box underwater to save on cooling. There was a lot of James Hamilton fingerprints on that, and so he's brought this. Hey, we're Amazon, but why can't we build hardware kind of approach since he came across the lake over here in Seattle.
What about the other guys that we need to know about? Rami Sano, Nafea Bashar. What do we need to know? I love that you guys include these names, because I do think about, we think about Amazon, right? We think about Jeff Bezos, obviously. We think about Andy Jassy. We think about kind of those names that we often talk about. But there's so many other people, right, who are involved in kind of where this company is going. Who else do we need to know about or you think is of interest? Enough that you guys included it in your piece.
Yeah, Nafea Bashar is a good one to know. He was one of the co-founders of Annapurna, and that's how Amazon jump-started its chip effort. That was an Israeli startup. They bought him back in 2015. And really a prescient deal because the Israeli chip industry, for those who don't pay close attention, it just cooks, right? These guys were saying over and over again, there's 3 hotbeds of innovation for chips in the Western world, and it's the San Francisco Bay Area, Austin, Texas, and Israel, and largely owing to one great university up in Haifa that has long connections with Intel going way, way back. So Nafea was one of the key folks who helped seed Amazon's chip program.
Matt, I got to think that NVIDIA doesn't want to read a story like this. They don't want to see that one of their biggest customers is also trying to spend less on them in the future. Does this complicate Amazon's relationship with NVIDIA?
It does, and it's worth pointing out that, not just Amazon execs, but you talk to any of the big NVIDIA customers about NVIDIA, and the first words out of their mouth are, we love NVIDIA, we're going to keep buying from them for as long as we can, please send us more chips, right?
But?
So I think everybody around the table is very practiced at the frenemies aspect of this. And, I'm sure NVIDIA's got some long-term concerns about this, but, they're a real competitive company that have been scraping and clawing for a long time, so this isn't new to them at all.
But they're already selling chips to others, right? Amazon,
it's worth noting, they don't sell chips to anybody outside of their data centers. These Annapurna folks, they go straight into Amazon's facilities, and Amazon rents them on to other companies. It's not like they say no to customers, but they only go to Amazon facilities. And the same thing can be said of Google and Microsoft chips, too. There's no indication they want to sell them to other companies.
All right, real quickly, just got about 25 seconds here. So great story, great deep dive. It is the Bloomberg Big Take. So I don't know, when you start to think about earnings and company, news to come from this company, what's kind of top of mind, especially related to this story? Like, what are the kind of signposts you're watching out for?
Watching out for big customers who are taking Amazon up on this chip offer, right? If they've got thousands of them out in circulation in the next few months, let's see who's using them and if they're really competitive with NVIDIA.
Very cool stuff, as always. Good stuff, as always. Matt, thank you so much. This great story. Matt Day, Ian King, Dina Bass. What a trifecta in terms of reporters putting it all together.
Matt, did you have any tacos when you were in Austin?
Not enough. Nah, I got to get better instructions next time.
Okay. All right, you got to get back there. Have some tacos. What?
You're kind of like
when you travel
taco and burrito obsessed.
Hey,
I've been on the road with him. I know.
You gotta try where you go.
All right, coming up, the areas that investors are monitoring within the market. That One Business Week continues.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing. Russell 2000, though, the outperformer, that index of small cap shares surging now by 2%. To put it in context, the S&P by comparison right now up by about 0.2%. Dow Industrials up 377, a gain of almost 0.9%. The NASDAQ Composite Index up 0.1%. NASDAQ 100 Index in the red, down less than 0.1%. Your 10-year at 4.26% with a 2-year 4.27%. Spot gold down $90 the ounce, retreating 3.3% now to $26.25. And West Texas Intermediate crude also down 3.3%, $68.87 per barrel of WTI. Bitcoin down 2.2%, below 95,000 at 94,887. UBS analysts are cautioning in a report that Tesla's post-election stock surge has more to do with market exuberance than actual improvement in the fundamentals of its business. Another story involving Tesla, its EVs would be excluded under consumer rebates proposed by California's governor, a decision aimed at spurring greater competition that is likely to draw the ire of Elon Musk. Tesla shares, they're lower today. Tesla right now down by 1.6%. Recapping a 12-point gain for the S&P, up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie breaking down the trade. I'm just looking at treasuries right now. 2-year note, we've seen yields definitely back off. Now 4.27 on that 2-year note, and I'm looking at a 10-year at 4.26. So talk about a flattening, certainly, of the curve that we've seen. I want to talk a little bit more about the treasury trade. We mentioned this earlier. We have seen treasuries added to some of the gains from that late Friday announcement of Scott Bessent, a Wall Street veteran who investors expect will take the sting out of the administration's more aggressive trade and economic policy proposals. Of course, he was nominated to be President-elect Donald Trump's Treasury Secretary choice.
With some thoughts on that and the market outlook post-election, we go now to Aaron Kennan. He's co-founder and CEO over at Clear Harbor Asset Management. They've got about $1.5 billion in assets under management. Aaron joining us once again from Stamford, Connecticut. Aaron, good to have you back with us. We haven't spoken to you since the election result earlier this month. I'm just wondering, big picture, how your views have shifted now that we know who is going to be the next president and the more we're learning about the president-elect's cabinet choices.
Yeah, thanks for having me back, Sam and Carol. It certainly has been interesting. We started to see these trends just before the election as the markets, the betting markets, that is, priced in or starting to price in a Trump victory. But certainly on the equity side, we've seen much more of a convergence of performance. So not just the Mag 7, not just the tech sector, not just the communications sector, but rather financials and industrials and utilities and in other areas of the market, such as energy and materials. And so I think that's one theme that may actually continue into 2025. And then you mentioned interest rates. I mean, clearly, with the selection of Scott Bessent, and we've seen rates decline notably today, there's a sense that that perhaps the deficit spending concern that the market had, regardless of who won, frankly, could be quelled on the margin because we have someone who is quite experienced at the U.S. Treasury and perhaps will have a little more discipline on that front. And so I think there's a sense there that it'll allow the Fed to worry less about inflation, to think a little more about the employment and growth picture, and perhaps the lower 50% of the economic stratum, which has still been under a lot of pressure over the last couple of years.
Aaron, how do you game this out? I am just curious, some of the conversations you might be having with some of your investors, your clients, the money that you guys have under management about, all right, what really happens, right? There's the campaign, and I think it's fair to say that ahead of the outcome that folks came on and said, listen, either way, it's going to be good for the markets because you have candidates that promise everything, right? To kind of get people to vote on it. But I do wonder what the reality is of now that we know it will be a second term for Donald Trump and his team. What will be the reality of policies that ultimately take place? Will it be the extremes that everybody is talking about, or will it be more likely no or something in the middle?
I don't want to sound too cute, Carol, but I think this is the difference between trading and investing to a great extent. There are certain trends that clearly coming out of the Trump administration, we think on day one, will impact asset prices across fixed income, equities, even private equity. So one trend, for example, as we game this out and think about medium and long-term trends for our clients, is how lower regulatory environment, lesser regulatory impact could potentially provide a tailwind to mergers and acquisitions. What does that mean for small cap and mid cap companies? But what does it also mean for certain sectors within the economy that over the last 4 or 5 years have underperformed the sort of tech trends or financials or even mid cap, smaller cap financial companies that are sort of consulting within M&A? And also, what does it mean for the democratization that we've seen of private equity and the growth in that landscape and the publicly traded asset managers that are really seeing revenues accelerate on the heels of them continuing to attract capital, frankly, from clients at firms like Clear Harbor Asset Management, who we believe in some cases may be deserving. Their portfolios and their risk tolerance may require them to have some of that exposure. So we're thinking very much long term. And even artificial intelligence, very hot topic, but how is it really impacting other segments of the economy outside of technology? And so we think about how is it impacting biotechnology and healthcare and maybe the acceleration of some of the phase 1, 2, and 3 work that's being done and sort of molecule research and development. How is it even impacting utilities, artificial intelligence, and the smart grid? So we're trying to think longer term about these trends, and we're trying to not make any one huge bet as it pertains to this.
Hey, Aaron, I want to talk a little bit about about Doge. No, not Dogecoin, the Department of Government Efficiency. Elon Musk, Vivek Ramaswamy, they've vowed to cut $2 trillion in spending from the federal budget. We're talking, 20% goes to Social Security, 18% to national defense, 15% to health, about 14% just goes to interest. Do you think they can pull it off? And if they do, how do you look at it from an investment perspective?
Well, in some ways, in the long term, I hope they can pull it off because I think we need to get our sort of fiscal house in order and start balancing our revenue collection with our expenses. And that may require some significant pain in certain aspects of society, and that's unfortunate, but we do need to bring ourselves back to that North Star. But you bring up a good point, Tim, and that is to the extent that Doge is successful, and Elon Musk mentioned, well, maybe he could cut $2 trillion out of an annual budget. I don't know if he was thinking over a 5-year period or a 10-year period, but he seemed to intimate it was over an annualized period. If that's the case, which would still not bring ourselves into balance, I think we would have to ask ourselves, the GDP trends that we've seen over the last several years have heavily been impacted by the deficit spending, the unsustainable deficit spending. We've all applauded the GDP. We've always sort of had consternation around the deficit spending. But this could be a reverse where we have less deficit spending and we have lower GDP. Now, the positive silver lining in all this, which we have to analyze, is productivity and whether or not we can achieve productivity gains to offset that. But that's something I think investors are not yet totally sort of grappling with. And to be fair to them, it's not clear exactly how this Doge process will work. Ultimately, Congress has to decide on some of these spending initiatives.
Are you anticipating a next 4 years, or at least a couple of years, where markets trade on posts that come off of Truth Social?
I don't think of it that way. I mean, I think there are some very qualified people that incoming President Trump has selected. There are certainly some people.
But there were a lot of qualified people the first time around, and then yet there were still a lot of social media posts.
That's right, and there was a lot of turnover as well, and I think that's something that I'm keeping my eye on. We have some interesting picks. Some are, I think, highly qualified. Will they stick around for a year or 2 or 3 or 4? And that'll I think be important to investors to sort of ponder.
Well, so glad we got some time with you. We've been wanting to get your view now that the election is over. Aaron Kennan, co-founder, CEO at Clear Harbor Asset Management. Coming up, 2 big budget films hitting the big screen this year. We didn't go to see them, but others did.
There's still time.
There's still time. Did they defy gravity? We'll ask. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody, if you never want to miss a Bloomberg Business Week story, and why would you? There's a new issue out. You got to check it out. You can become a subscriber today. Get into all the deep reporting, reporters around the globe, unlimited access to Bloomberg Business Week. Check out our offers right now. Just head to Bloomberg.com/subscribe now. As we said, new issue coming out, and the president-elect is on the cover.
I already have the issue. If you come by our studio, you can get the issue as well.
You can too.
Yeah.
So come.
Yeah, I saw a stack of them
Knock on our door.
in the green room.
Don't knock on our door.
Did you go to the movies this weekend?
I did not.
Yeah, neither did I. A lot of people did, though.
They did. And so Wicked and Gladiator 2, they're two of the year's most anticipated films, brought in a combined $170 million in U.S. We'll check if those numbers have been updated. U.S. and Canadian theaters around the weekend, kicking off what's likely to be a strong holiday season for cinemas. I got to say, I think the last movie I went to was Barbie.
Well, you're part of the Barbenheimer thing, and that's kind of exactly related to what we're talking about.
I didn't watch Oppenheimer in the movie theater, though. I waited till it was...
But you were part of the phenomenon.
I was half of it, yeah.
Okay. Well, let's see what our team has to say about this. With us, we got Bloomberg Intelligence equity research analyst Kevin Neer. He's here in our Bloomberg Business Week studio. Yes, part of his job is going to the movies.
That's right.
So you contributed this weekend to the box office, a little bit. Tell us about the numbers. I mean, good, disappointing? What do we see?
It was a strong start for both films. We can talk about both films. Now, going into the weekend, expectations were extremely high. Buzz had been building. I'm sure you've seen
it's been
lots of ads. It's been crazy marketing campaigns. Now, the films didn't quite meet those high expectations, but don't get me wrong, they were very, very strong starts. So 114 million for Wicked, 55.5 million for Gladiator. And now the question is, will they continue that momentum into this holiday week?
Where are we overall in box office, pre-pandemic, post-pandemic?
We're about 11% behind 2023.
Okay.
We're about 25% behind 2019. It's looking like the full year will be about mid single digits below last year. Again, we're still dealing with those Hollywood strikes hangover. We had a big supply dearth in the first half of this year. We're still kind of working through that. But next year, things are looking much better. Supply is bouncing back. Not quite getting to pre-pandemic. It's looking like 2025. Some preliminary numbers might be 9 to 10 billion versus pre-pandemic, that magic 11 to 12 billion plus number.
So we're still down a fair amount. AMC, by the way, is up about almost 5% in today's session, AMC Entertainment.
I mean, is it kind of strange to you that the two big holiday movies that we're talking about are not original in the sense of one is a sequel to a movie that we all saw, close to 20 years ago at this point, and the other one is a remake of a very popular Broadway musical.
That's right. It's tough.
That's pretty telling.
I mean, there's so much
It's
content
only
out
half
there.
the story.
It's only
It's only
which
half,
one?
it's only
Wicked?
part one.
That's right. That's
Yeah.
right. Part 2 coming out next November.
All right. Well.
Anyway, go ahead. It's a good question.
No, I mean, there's so much content out there. It's really hard to get a consumer to get in their car and go out to a movie theater, right? So studios are relying on brands, IP, established things that have had success in the past. They're trying to balance that with originals. You know, we have... I'm trying to think of a Red One, right? Amazon just came out with a big blockbuster, Red One, so that's an original. So you're trying to find the sweet spot between the big tentpoles, the blockbusters, and then some of those smaller indie movies as well. What we're kind of seeing go away is some of those mid-budget films, kind of the $50-60 million movies.
I mean, do people still want to go to the movies?
They do. It's funny. We were just talking in the green room. What we're seeing, and this might be kind of counterintuitive, is that young people really enjoy going to the movies. It might be, you might think of Gen Z as the digital age, but they've actually been some of the most frequent to get back to movie theaters, whereas the older audiences, some of the retirees, maybe 60 plus, they have been historically some of the most frequent moviegoers. They really haven't gone back in earnest.
I'm also wondering about going to movies that we know are going to look really good on a big screen.
That's right.
You're kind of going to be hit with that sound in the theater when you see a movie like Gladiator 2.
Yes.
It's kind of what you're trying to do if you're a retailer, create an experience that you can't replicate online. Is that happening with theaters?
Yeah, absolutely. I mean, we're seeing more and more filmmakers lean into using, so we cover IMAX, that's sort of the big one. Don't get me wrong, movie theaters, AMC, Regal, Cinemark, they all have their own branded premium large formats. But IMAX is doing very well. We're seeing that in North America. More and more fans are saying, hey, I need a reason to go out to the theater. I want to see the biggest, best possible picture.
And there's pricing power with that too, right?
That's
like
right,
a
that's
typical
right.
IMAX ticket versus a typical ticket to the theater.
Exactly.
What would the price difference be?
For an IMAX ticket, it very much depends on where you're going. If you're going somewhere here in New York City, might be close to $30 for an IMAX ticket, a 3D IMAX ticket, versus maybe, less than $20 for a traditional ticket.
And I should point out, I think Paramount Global, right, which is behind Wicked?
Paramount is
behind
Gladiator. Yes.
Right.
Gladiator 2.
That stock was up today.
Right.
Comcast, which is Universal, which
Correct.
is behind Wicked, forgive me, I think was little change in today's session. I mean, I am curious too. Kevin, we went through a period where it was like theaters, you could go, get drinks, you could get food, you could lounge, you could get a blanket, all in. Have we moved away from all of that?
It's interesting. We're starting to see some of the exhibitors are trying to talk about this. We're thinking about what's the next evolution of the movie theater going to look like, right? And that's, maybe more dine-in theaters, maybe more expanding into other verticals, like think of something like a family entertainment center, something almost like a Dave & Buster's, right? Where you're going, it's still based around a cinema, but there's other things to do. There's arcades, there's restaurants.
I mean, I went to an AMC before the pandemic that had like VR and a bunch of arcade games. I think we actually went to the theater not to see a movie, just to do VR stuff.
Really?
Pre-pandemic life.
It's kind of funny.
Yeah.
It's kind of interesting. All right. En route, though, are these billion-dollar movies that, in the end, or not necessarily?
I'm hesitant to say so. We'll. It's a very good question to see how they perform in their full run going forward. We're about to have Moana 2 come out. That's looking like it'll be very, very good.
Yeah.
Okay. Yeah.
We'll watch. We'll come back to you. Kevin Neer, he's equity research analyst with our Bloomberg Intelligence team. For those watching on TV, the close is coming your way. Tim and I continuing right here on Bloomberg Business Week.
is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. Special counsel Jack Smith is asking a judge to dismiss the closely watched 2020 election interference case against President-elect Donald Trump. CBS's Scott McFarland reports.
This historic case against Donald Trump for allegations he tried to conspire to overturn an election and with ties to that horrific attack on the Capitol January 6th. That case is dying with a whimper today. A 6-page narrow filing from the special counsel saying can't charge a president or try a president for a crime when he is the president.
Federal prosecutors also moved to abandon the classified documents case against Trump in Florida. Trump has picked his cabinet in record time, but efforts by the nominee for Health Secretary, Robert F. Kennedy Jr., and others to get down to work have been delayed. Katrina Kaufman reports from West Palm Beach.
The issue that he and these other nominees are encountering is that because President-elect Donald Trump hasn't yet signed a trio of what are standard ethics and transparency agreements, they're not able to start formally talking to the departments that they are supposed to be taking over come the new year.
There is said to be progress on a deal to end the fighting between Israel and Hezbollah in Lebanon. Linda Gradstein reports from Jerusalem.
Some people are saying that Israel is making a mistake by stopping now, which should continue until Hezbollah is completely wiped out. But I think most Israelis do support an end to the fighting.
Tens of thousands of Israelis who were evacuated from the border months ago have been pressuring their government to go home. In Los Angeles, a hearing for the 1989 murder conviction of Eric and Lyle Menendez after new evidence that they were abused before murdering their wealthy parents. CBS's Elise Preston is covering.
They're saying that if that abuse would have been presented in 1996 or even now, it changes both the charges and the sentencing. So that may be taken up today. It was filed about a year and a half ago, and their deadline for that petition is looming.
Millions of Americans are traveling this holiday week in Boston. Reporter Jordan Jagalinzer.
Here at Boston Logan International Airport, the holiday rush has begun, but what's already a busy time of year for travelers could potentially be more problematic with a storm making its way to New England just in time for the Thanksgiving and Black Friday holidays.
And there's a strike by some airport service workers in North Carolina.
The wages got to be more so everybody can have what they need to survive or to live. We're surviving, but we're not living.
The workers clean airplanes and assist passengers with wheelchairs. The strike could last 24 hours. This is CBS News.
and 77.
Orlando is celebrating its women's soccer championship with a victory parade today. CBS News correspondent Peter King reports.
It took just one goal for this to happen.
It is Orlando Pride!
Longtime Brazilian and Orlando Pride star Marta.
A magic moment for me.
And for the fans who went to Kansas City for the championship game, ecstasy.
They've never been able to do it. This is the first time. It means everything. We've lost our voices.
I'm so excited. As a matter of fact, I didn't get any sleep last night. Yes, I'm running on adrenaline right now.
This afternoon's parade will run through downtown and end with a ceremony at Orlando City Hall as people are getting out of work. Peter King, CBS News, Orlando.